There it is. Ring the bell, ring the bell, ring the bell. Open us up. Happy Wednesday, Wolf Crew. What's going on? A little background music going here. Let me get the chat popped up here. A little bit of move higher overnight. We'll take a look at it. Title of the stream today: the next catalyst is here. We've been consolidating for the better part of 6 weeks. The one thing that this market actually really cares about. Sure, there's war headlines. Sure, oil's moving around. Sure, there's macro data that was bad, and then now it's good. And then earnings season. Earnings season officially here last night. ASML reported. They also have their conference calls going on live right now. ASML, the first AI name to report, moved higher, coming in just a little bit, but did move higher overnight with the markets. We'll see how that plays out. Check into some of the stuff that they said, and we'll yeah. Well, good morning, everyone. Though, hope you guys are doing well. Who else hanging out with us this morning? No overnight trades for me. We should touch previous session high here, so no longs at the moment until we at least come down to that. If anything, you look for, probably look scalp a little short here to get down there. Yesterday's highs pretty close by. What is that? Just under, right around 900. Should tag that. We do have a little bit of a ripper on Google and Nvidia and Amazon right out of the gate here.
Morning, guys. Short at 60.
What's up, Frankie? Yeah, I like the short back to previous day's range.
I already covered half. I'm just kind of sitting with one on stop.
IWM pretty perky here out of the gate. So is SPY. See where we're at on this daily chart. We should be getting pretty close to fully breaking out. Yeah, SPY sitting at the breakout point here. We may see all-time highs like today, tomorrow. Thank you, Tigger Tap. It was connected to the wrong mic. You guys even hear my bell ring? That gummit. QQQ, where are you at? Above all the daily moving averages again. These things are tight. Like earnings season, and that's exactly why I titled the title of the stream the way I did. Look how tight these daily EMAs and SMAs are getting. I mean, they're all within a few dollars. All tight together. This thing is coiled up like a rattlesnake, ready to make a move. I mean, one way or the other. AEHR, yeah, they had earnings last night as well.
I got stopped on my runners.
Yeah, Nvidia screaming higher right now. PPI came in pretty good too, Frank.
Yeah, a little softer.
Which somebody out there will argue that, oh, it's just because that's the period when oil was back down. Oh, okay, sure. You didn't make the same excuse last month when it was, hot. So all right. All right, I got bookmap up here. I need to pull back on ES before entering calls on. Yeah, to me, it just looks like. I mean, it's tough to get like in a call swing right here, but you clear right here 75.80 on SPX. It's 7,600. I mean, that should just start magneting, and then that all-time high. But are you going to enter calls on a gap up like this above all these moving averages? I mean, could work for day trade. For swing trade, this isn't really the spot that you're gonna. There's previous days high getting hit right there on NQ. Nice trade, Frankie. Yeah, there's nothing tells me we don't. I mean, sure, you could have an issue right here, but we should come back to previous day's high. So like on SPX, like maybe you don't fill a full gap, but maybe you come back down 20 points or so. And then if you bounce there, then you look for it. If you don't bounce there, then you do look for the just fall back down into the gap fill. Permabulls will learn the hard way. Permabulls will be right 70% of the time. That's just statistics. All right, who else hanging out in here? I didn't even get a chance to scroll through the chat. I was making sure I got everything pulled up here, ready to roll. No trades for me yet. Maybe a sit here, go make a coffee, let things kind of set up for the day before I get too involved, but we'll see what happens. Nice move back to previous day's high on the NASDAQ. Drop a good morning in the chat if you haven't. What's up, Paul? Gang, gang. Bullish bear. I mean, there are concerns. Like I get the people looking for a pullback. And I know some people out there, they're cheering for a pullback just to get more involved in the market. I'm okay with just it consolidating, going sideways before I get more involved in the market. Obviously, it's different than just my day trading type of stuff, but a reset, a pull down in the market would make things a lot easier for some people to get involved, put some money to work. But once again, the catalyst for us to go anywhere is kicking off right now, yesterday, today, tomorrow, and then obviously next week. So we'll have to see what's up, Ren 10. Good morning. Smart, good morning. The Dongilium. Alan's in here this morning. Grambo, Colin, Maria. Yeah, maybe 7,600 today. We'll see. It's tough to tough to just predict that out of the open after you've already moved up pretty decently. I mean, it wasn't a huge gap up, but pretty decent sized move. What's that? Around 100 points on ES from Monday's low overnight to this morning's high. That's pretty decent sized move overall. When we slow down, can we go over your volume profile settings? Absolutely. I'm not going to say mine are perfect, but they give me the visual that I'm looking for. Here, I'll go ahead and do that right now. I know things are moving a little bit fast, but my volume profile, this is the free one, VRVP, Visible Range Volume Profile on TradingView. My row size, I changed to 233. It's just a Fibonacci number that I like. Some people use 200, some people use 250, some people use 150, whatever. That's just an amount. I just like, I like having a lot of bars because it gives me kind of the little bit better of the picture than the wide bars. Now, if you're just, where's the areas, and you want the standard wide bars, whatever, that's fine. Value area, I don't really change much. So that one's sitting at 70. And then on style, right now my width of the box is 12. And then, I just went with the black and the gray. And I like the way Paper Gains his looks pretty cool with the green and the black. Only reason I did that is because I like seeing it, but I don't want it to be like just blue and purple or yellow or whatever. Like, I just want it to kind of blend into my chart and be a little guiding tool over there. So there's mine. K9 Handler. Gary, what's up? Boris. Crossbars. Yeah, much better. Yeah. Well, I have this fancy mic, this Rodecaster thing. Sometimes whenever I turn it on for the day and stuff, for whatever reason, my MacBook will stay to the built-in whatever mic. Kind of dumb. T7. Keegan, what's up? What's up, Keegan? Haven't seen you in a while. Grateful Surf Dog, good morning. GM. KB Harris. Nimrod. Who said that San Antonio was flooding? Boris with the GOAT trophy. There we go. Is that because Messi's playing today? Black Dragon, what's going on? What's going on, Mike? Oh, his talking table. Flooded San Antonio. Wait, is the Riverwalk flooded down there? Riverwalk's pretty nice, actually. Why are they selling off Marvell and GLW? I don't know. It's a good question. I don't know if there's maybe some news around that, or if... So the way I think about it is it could be news, could be a little bit of what ASML was saying, maybe in their earnings, or it could just be ahead of earnings season here. People continuing to jostle position. I think about going into earnings season kind of like a free throw in basketball. You got somebody standing up there taking the shot, and you've got a bunch of guys down below, and as soon as that ball hits the rim, they're all jostling for position, trying to get where they want to be. That's what I think about when I was going into earnings season. So I mean, the thing, it could be a million factors, but the biggest thing to me is you have no idea where these guys are positioned at, where they've been positioned, if they've, do they already have a lot of exposure? Do they have too much exposure? Do they want more? Are they hedging? Are they putting on, there's just not a real way to like know for sure. But you can try to build some type of thesis and context around that. Just checking the book map here, coming into 800. There's a little bit of order share, not a ton that's going to try to catch you just yet. Google is still screaming higher. NVIDIA has come back down a little bit to 212. You jump into some of these Mag 7s here a little bit. This first 15-minute candle just closed. Nvidia, fine, sitting on yesterday's close. Nothing too crazy there yet. Apple is screaming higher. Google screaming higher. Microsoft took out yesterday's high, pulling back in a little bit. Amazon strong this morning. Meta getting wrecked. Broadcom pretty strong. Tesla decently strong. AMD coming in. And let's check our semi trade. Semis are red. We're about to fill the gap on NDX, by the way. A little bit of a level there at 600 on NDX I've drawn, but your gap fill about 10, 20 points lower. Everything and a tornado. Amazon hitting the 50-day. Yeah. And that makes sense, right? Right into earnings season, just to be in the confusing spot on a lot of charts. Meta is a Satan stock. Rocket Lab at the 200-day. I think the top is in for space for a while. That's what I said going into earnings. I sold all of my space on this run up, knowing that it probably could go higher, but I mean, this isn't a bad look. Like right here off this 200-day is not a bad spot, or even this huge volume shelf consolidation we talked about at 70. You don't hold that. I mean, you probably traverse down here to 65, 66. And then, yeah, 56 is your next target. But I wouldn't be surprised. I mean, if you look, this 200-day, it held way back over here, held here, held here. Does it hold again here? I don't know. You didn't get the best reaction to this. You got a reaction to it. Now it's coming immediately right back to it. Didn't even get to the daily 9. So I don't love the behavior of price here, but you know, this area and the 200-day could be a spot, you know, could be a spot. I'm just not super bullish on space right here because of the major run up that it took into SpaceX, because of all the enthusiasm and all that stuff. There's ES touching previous day's high. There is basically your gap fill. So yeah, gap fill, previous day's high on ES. Gap fill on NQ, previous day's high on ES. Just see if you find a little bit of a bid here. I do have a level here we held multiple times yesterday afternoon around the 780, but yeah. Bookmap looks like 700 if this doesn't hold. See if there's any gamma GEX in this area. Not much. Most of the positioning is still above us. And I'm going to be patient this morning. Normally, I'd probably try to play this scalp long right here, but it just... We've had several of these mornings where things just come down and just get super ugly that first, like, 30 minutes to an hour. And just finish the SpaceX, like, the SpaceX, I think, is coming down much further. You have all the unlocked stuff coming, whatever. All it's, I just don't... The space thematic, I think, just needs to reset for a little while. And it is a futuristic thematic in some cases. Obviously, it is happening for SpaceX, but and some of these companies, which just I don't know that we're there fully yet. Now, if you ask me my 5-year, 3 to 5 year outlook, yes, I'm definitely bullish on space. But some themes can just get ahead of themselves a little bit. Roman, what's up? Good morning, sir. Always a reminder too, if you don't have a good read, I mean, like if you got short up there where Frankie was getting short, I mean, that was kind of my read just going into the open was, hey, play it back down to previous day's highs. So I'll obviously, yeah, 700 just getting, look at the book map here. Only significant orders is down at 700. And those aren't even that big, like 98, it's not even a ton. But yeah, that's just my thought. Chinese names have a good, yeah. There's a lot of decent things. What's SK Hynix doing today, by the way? $2x leverage is down a little bit, which means SKHZ is probably up 6%. Shout out to leverage shares on that. Of course, I don't know if that was you asking, but shout out to our title sponsors, leverage shares, all kinds of 2x leverage ETFs, trading tools for you. SK Hynix, which SKHX is that ticker for the 2x long. The 1x short is SKHZ. Mining the helium off the backside of the moon. There you go. Yeah, I'm not just a huge fan of where this is. Yeah, that LCDL, they may have just halted it. I hope some of you guys took some profit out of that. That's what Casey was like. I guess he locked in some profit, but they're just delisting. It was a super degen thing to try to go after. So hopefully you guys were able to make some money or not get hit for too much if it did stay in there. Did Lucid continue bouncing back, by the way? It did. Look at that. Lucid, if you just bought the underlying, you're up 100%. LCID. Anyone buying the Hang Seng? Lord of Wall Street, I've been looking at that. I actually pulled up yen the other day. I was surprised how bad this was down, but this is a pretty big bounce. I mean, almost a, 40% bounce or so here off the low. I really like, I mean, this one had been doing really well. K-Star, but I don't know if they're rotating out of this. I don't know enough about the Chinese markets, but if they're rotating out of, so this is just like the top 50 companies over there, but I don't know if they're going to rotate out of K-Star and get back into K-Web. But K-Web looks pretty decent too. You see this, Lord of Wall Street? Big Red, good morning. What's up? K-Web has a pretty nice little reversal look to it. Trying to get back over the 50-day. Now, we've seen this story play out badly for a while, but we have Kevin Warsh in front of the Senate today. If you guys want to watch that, we can watch some of that, but you guys got a pretty big taste of that yesterday. Yeah, you got stuck a little bit, Renton. But hopefully you made more than you lost. I mean, You do degen stuff, put in some money. Always take out that initial investment when it goes up and then whatever's left. So, if something goes up 40, 50, 60%, especially if it's a degen lotto type of thing, take out that original investment. It's usually the way to go. We are kind of holding this area for now, but ES is getting a nice bounce. IWM is getting a nice bounce. Google, Amazon, both kind of flagging higher here. But SMH, as Frankie will tell you guys, SMH has got to participate for much to happen here. I do like that the mags are finally getting some love. What's that mags ETF look like on the daily? Yeah, look at this, getting continuation. I was saying back in late June, I expected a big bounce coming out of the mags soon.
Yeah, I bought the Microsoft 400s at $1.31 for Friday. It's up 50% suddenly, quick. It dipped in after the opening, and I bought them on the dip. Sox versus Software. SAS.
So now we have a bidding war for PayPal going on. Yeah, I almost took the longs off of this. This is gap fill here for yes, but I'm sorry, the previous day high touch on yes. Didn't see a whole lot of convincing buying. Iran called a while ago they want a deal according to Trump. Classic. Oh. See what internals look like this morning. Bookmap's nothing too crazy. ADD very strong. Ooh, whoa. Yeah, Amazon looks good. Google looks good. IWM just came roaring back to the highs. SPY and SPX, you touched that previous day's high, which you needed to, got that out of the way, and then gap fill on NQ. I don't know. It looks... Yeah, probably should have taken that that long there. It was pretty decent risk reward, but just don't like trading much in the first 30 minutes. You're coming back into back tests like London lows here, 857 area. Decent spot for it to bounce. Just don't love it. Feels like this might get smacked back down. ES and IWM just look so much stronger though. IWM new high. Google new high of day. Amazon looks like it's about to do a new high of day as well. Apple new high of day. Microsoft new high of day. You get those, and look at Meta with this turnaround. You get these, all these heavy weighted market cap names. Well, poor Tesla. You get a lot of these, poor Tesla. You get a lot of these Mag 7 heavy weighted, you know, stocks going up. It's going to be hard for the market to go down. And sure enough, when we were down there, all your gamma gex positioning was above us.
Short at 64.
Order filled. Order filled.
I don't know, this thing looks higher.
I know it does, but I already covered some.
Order filled. Order filled.
Flat.
Order filled.
Yeah, SPX looks like it's just gonna go.
Microsoft going, baby.
I mean, just look at your lag 7. Your lag 7s are all pushing here in the morning, outside of Nvidia.
It's been sitting in my head since you said it last week.
Don't take me home. Please don't take me home. Just don't want to go to work. Want to stay here. Drink all your beer. Please don't, please. Shout out to the English playing today. They're a fun fan crew. I guess we can watch Kevin Warsh whenever they get rolling over there. Come on, England. Come on. I wish I could do like a good Scouse accent. Me and my bird going to the footy match. It's going to be a cracker, lad. Dude, the funniest one when they were like, I think it was, I can't remember if they were playing Sweden or Norway or who they were playing. They were like, your team is shit, but your birds are fit. That was the funniest one.
Your team is shit, but your birds are fit.
First semi-annual monetary policy hearing since taking
Microsoft
office. I know it's
costs
been
off the
7
table
weeks, but probably
100%.
feels like a couple of years. We are really happy to have you with us and really excited about the direction of the Fed. Today is about how the Fed is serving the American people and how Chairman Warsh is working to combat years of mission creep at the Fed and restoring the Fed's credibility, especially to the general public. The decisions that the Fed makes affect everyday life in South Carolina and around our country. For example, those decisions affect the mortgage payment a couple is trying to afford, the credit card bill a single mom is trying to pay down, and the decisions a small business owner makes about
like
whether
running to
they can
900.
afford a loan or not. Frankly, the Fed even has impact on the interest rate environment, as you know. Ranking Member and I have spent over a year working on a housing bill that will actually help us increase housing supply, help us expedite the process of building a house through NEPA reform. It'll create more diversity in
What's
housing
up?
selection at the end, the removal of the chassis requirement. These are important issues that will make housing affordability
Just game trading as
incredibly
you come in.
easier, but it will never get to the main point of interest rates. The interest rate is something that you control that we don't control. We want you to follow the facts, however, because that is really important for the long-term durability of our economy. But in North Charleston, where I grew up, families do not
IWM
talk about monetary
pumping.
policy, Kevin.
SPY looks like a
They just don't
breakout's
talk in those
coming.
terms.
Nvidia just made a new
But they
low and
fully
everything else is pushing.
understand the principle that when
I
prices
like
rise
where
faster than paychecks,
Q's kind of turned
it's
around.
really
That's
hard to
the
make
area.
ends meet. That is why affordability must be at the center of our conversation. The Federal Reserve has a mandate to pursue
I
and
love what
promote
Microsoft
a
is
strong
getting
labor
at.
market through maximum employment
Yeah.
and stable prices.
Yeah.
Those are serious responsibilities.
That's
I'm
huge.
glad that you are
Microsoft
the
is,
man for the
you
job
know,
and you've
getting
taken
a
it
doghouse
seriously.
for a while.
They require clear thinking, steady
All the
leadership,
Mag
and
7,
the commitment
dude.
to follow
I mean,
the data.
all the ones that run the
political
doghouse.
ramifications. It also requires understanding the forces shaping our economy,
my other
including AI's impact on jobs,
Brady spent all day yesterday
wages,
charging his rocks are about to
productivity,
run.
and prices.
Yeah.
Independence is not a slogan.
We about to
It is a
run? Is that what you
responsibility.
said?
And the
Charge
best way
rock?
for the Fed to
So you
protect its
charged up your rocks
independence
are about to
is to
run.
stay focused on its mission. For too many years, the Federal Reserve drifted into issues outside of its core responsibilities, and America paid a price for it. Mission creep
Come
makes the
on,
Fed less
England.
accountable and
All right,
undermines
Come
public
on.
trust.
Y'all know that I
And
love the 10-minute
encouraged
time
by the
frame
steps
on
that you are
NQ.
taking
I
to
put pivot points
reform our
up
central
at
bank.
9 and 21.
That starts with a
that.
more disciplined approach to
Right
how
here,
the
we're
Fed
pushing up
communicates.
right up on the 90.
Moving away from overly detailed predictions
so
about
we'll see
where
what
interest rates might be going in the next several
like
months is a helpful step to make sure the Fed is able to adapt when conditions change. Families, small businesses, and markets are better served when the Fed follows the data in front of them, not a forecast that may
ES
change
honestly
in
doesn't
an
have a
instant.
whole lot.
Less
It's
guessing
got a lot of
and more
resistance up here, but it doesn't
discipline
really have a
will
whole
help
lot
the
on
Fed
either
stay
side.
flexible,
7640.
credible, and focused. The 5 independent task forces that you set up also sends a very important signal that the Fed is willing to start from its core principles and pursue thoughtful reforms to deliver on its statutory mandate. You and I had a quick conversation before walking in here, and I wanted to note that I think that the working groups are fantastic. Frankly, I think that the composition of the working groups are really important. One of the things that we talked about was a balance sheet working group. I must concede that I'm a fan of Abraham Lincoln's approach of these team of rivals, and it seems like you have Jeremy Stein, you might know Jeremy, from Harvard, as well as the former governor of the India Central Bank, Mr. Rajan. They have very nicely put competing approaches and philosophies about the balance sheet.
Came right down to the
If you're going to be
14
intellectually
SMA,
honest,
1 minute, and
you need to have a serious debate about what direction to go and, frankly, how to get there. And so I'm really excited about what you're doing there, and I look forward to hearing how that works out for you, for the Federal Reserve, and more importantly for the American people, because
right to
unwinding a balance sheet the size that we have today is going to take a deliberate
This
effort.
looks like
that will have to
950
be
is
paced properly,
where
not
it
to
wants to
create
go.
instability and
900,
volatility in the
950.
market. So thank you for
Treat like
taking
the
on
14
seriously.
SMA like a 9.
As AI reshapes the
Or like
economy,
a
the
5-minute
Fed
time
should
frame.
understand its impact on jobs.
I used to watch the
productivity,
1
and
minute
prices on the
9 and
financial
21 a lot
system
too.
without using technological change
Oh, I
to
don't have
expand its
that.
mandate.
I got a 30
That
second.
same discipline should guide the Fed's approach to bank regulation.
So like
The U.S. banking system
right
is
here,
sound and
here's a
resilient,
1
but
minute
we
look.
cannot take
Oh,
that
9
for
and 21 are crossing,
Preserving that strength
and it tried to
requires
hold it.
regulation
Now
and
it's pushing
supervision
back
that
through
are
it.
clear,
Mhm.
appropriately tailored, and focused on real risks. According to the
So this
July
is where you would
2026 monetary
buy
policy report, bank capital
buy
is
red,
near
sell green.
historically high levels.
Especially if you're
As
in
the
the
Fed
Maple
finalizes
Stacks
Basel
camp.
III Endgame and other capital rules, it should pursue better calibrated requirements that preserve resilience without unnecessarily restricting lending. When capital is stuck on the sidelines, a family in Irmo, South Carolina may find it very difficult to get a mortgage. A small business may find it hard to get a loan. A community bank may spend more time satisfying Washington
Be right back.
than serving its own customers. That is why this committee will continue pressing for regulations that protect the system without cutting off access to credit. I want the Fed to be very successful. We need the Fed to be successful. Prices become more stable when your job is done well. Markets gain confidence, wages grow, and more families have the opportunity to save, invest, buy a home, and live their version of the American dream. Welcome today. Ranking member, the floor is yours.
Thank you, Mr. Chairman, and welcome back, Mr. Warsh. So about 2 months ago, you appeared in front of this committee for your nomination hearing, and you refused to answer basic factual questions. I assume because you were afraid of contradicting President Trump. Your answers during the
Here we
hearing
go.
were so troubling that this committee had a party line vote for Fed chair for the first time ever in our history. You were confirmed by the Senate in the tightest vote for a Fed chair in U.S.
Pocahontas
history.
getting a little
So you now face an uphill
little
battle
frisky.
to show that you have the independence needed to run America's central bank and to serve American families and not just President Trump and his billionaire friends. Now, President Trump's corruption and failed economic agenda is raising costs across the board. Inflation has kept real wages from growing for the third consecutive month. That means in the Trump economy, families
thought we
are
just got
falling
inflation
behind,
report
with
yesterday and
less to
today, and that
spend
was pretty
every
good.
day that goes by. High interest rates are making mortgages, auto loans, and credit cards more expensive. More and more people are falling behind on their
Senator
bills.
Karen. I don't even think people from her
95%
party like her.
of Americans believe that the U.S. is suffering an affordability crisis, while President Trump continues to call affordability a hoax, telling Americans their concerns about the cost of living are made up. Lower interest rates would provide some relief to families, but the Fed hasn't lowered interest rates and may be forced to raise rates even more, all because of one man, President Trump. Now, the president knows this. So
Lord have
instead of
mercy.
changing course, he wants to take over the Fed. Installing you as Fed chair was a critical
Yeah,
part
thank
of his
you.
plan.
Whoever said
You
Starfire.
reportedly told the president exactly what he wanted to hear in your Oval Office interview, and
Lord.
Trump confirmed it afterwards, saying, quote, Warsh thinks you have to lower interest rates. Now, for your part, you were the
All right,
only
well, we're
member
pushing
of the
right
last
down off
Fed
the 9
meeting
EMA.
who declined to submit
Mr. Red
economic
Candle.
projections. Projections that are supposed to show how the Fed's
6 minutes
decisions
left in
under
this
your
10-minute
leadership
candle.
are likely
See
to
if it
affect
pushes
American
past the
consumers
low,
and American workers.
74.
People might look at
Like
that
body
and
candle
conclude
lows from
that you don't want to tell the truth
earlier.
about
Yeah,
inflation
this looks like a short
under
and a half.
Trump.
Minutes.
Trump
And
may
that
have
rejection,
you
pre-market
in his
low,
pocket, but he will
back
not
test
stop
rejection
until
there.
he controls the Fed. And he just needs one more seat to do that.
Problem
And
is,
that's
things
why
are
he
still
has
so
had
strong
his
on
Department of
Yeah,
Justice
I mean, we're
X7.
sitting right here on the
bogus
open.
criminal
Asia opens
investigations
below
into
us.
both Governor Lisa Cook
Prior day
and former
open
Chair
or
Jerome Powell.
closes below us.
And that is why he illegally
A
tried
lot
to
of stuff
fire
below us.
Fed Governor Cook.
This
His
looks like it's
own
going
Supreme
100 points
Court
lower.
recently blocked the firing, at least for now.
Let's see
But
if that
Trump
can
has
open
vowed
now.
to try again to fire Governor Cook.
Ooh.
The fight for control is a fight over interest rates, but it is also
All right, we're pinned
about
right
corruption.
between the 9 and the 21
President
on
Trump
NQ's
likes to
daily.
play king,
Yeah.
and the Fed offers many
fun.
appealing
Google
opportunities
is making a new high,
for the
but
president to enrich
Nasdaq's trying to make a new
himself
low.
while he
So is
fleeces
Amazon.
the American people.
Brian,
Start with
you
crypto.
got to turn off this one.
Trump's
I'm sorry.
family crypto company is World Liberty Financial, the centerpiece
I don't know
of
how
the
anyone else
crypto
feels about that, but
enterprise that
I have the
let him
volume
create
down low. I can't hear.
$1.4 billion in 2025 alone. Now it is currently applying.
I don't think we're going to see like a
for
40-point
charter.
candle on whatever
After
she
that
says.
charter is granted by Trump's own
No,
bank
it's
regulator.
it's more of
World
like what
Liberty
is
could
what does he
seek
say?
special
But
privileges
I
from the
know,
Federal
I
Reserve
know.
to juice its own profits, like a master account that would give Trump's own company direct access
We'll listen to.
the Fed's.
she is rough.
She's
And there's more.
I don't hate the longs off of this area, even though
Threatened to revoke banks'
I don't know. It's just it's hard for me to want to think short and lower, even though the chart looks like that. But then Google and Amazon are making new highs right now.
financial markets, making sure that he rewards his
SPX and IWM are about to make new highs. I think it's a long.
crisis.
yeah. You had this little volume profile even on NQ at like 810 down to 788. All right. Well, VIX is pushing lower. Oil is pushing lower. ES is pushing higher.
If I was only looking at NQ, I would probably try to short this. But
Yeah, I damn well see that too.
Thank you, ma'am.
problem is, you look at ES, like right about to take out the high.
I mean, the problem is, you just flip a coin on the daily chart. It's like, wow, this looks great if it just gets above the 21, or like, wow, I could see shorts like really playing out today. It cracks below the 9.
I mean, look where it just held is the daily 9 and 21 on QQQ or NDX. It's also the trend line. QQQ, it's exactly the 9 and 21 stacked on top of each other, 719.
We got more orders building down at the 700. We had about 90
can include an economy predicated on the brilliance
out,
of our
and now,
constitutional design and system
more
of
so,
ordered
or
liberty. An
whatever.
economy without equal.
So they're
in all
adding
it's
down
done
at
for human
700.
flourishing. Some forms of communication, including some that the ranking member referenced, are discretionary, but not this one, and for good reason. It's a prudent and wisely conceived obligation designed to keep the Fed responsible, accountable, and
Feels so
faithful
trappy.
to the mandate that you gave us of full
I'd
employment.
almost
and
rather
price
just
stability.
long and risk
These
25 points.
obligations are of a piece
Sit here and drink my
with
coffee
the
and
Fed's
watch Microsoft
rightful
come to the
independence
moon.
in the conduct of monetary policy. Today, we're at a hinge point in history, and it's up to each of us, myself included, to meet this moment. The Fed's
long
number
right
one
here.
objective is to get monetary policy right. That's our clear and constant aim, the star by which we steer by. And if we get policy right,
I think we're
and
going
we
Yeah.
will, the inflation
I'm like-
surge of the last 5 years
I'm like
will
just
be a
staring
thing
at
of
it,
the
waiting.
past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term
I
horizons
just can't pull the trigger
is
on it.
determined largely by monetary policy. As I've said before and will say today, inflation is a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to restore price stability. That was our focus when we met a month ago, in which we decided to hold the target range in the federal funds rate at 3.5 to 3.75%. Naturally, our work at the Fed demands a proper reading of economic conditions. As you might have seen in our report, economic activity is expanding at a solid pace, showing resilience in the face of recent developments.
Oh my God, there's
Household
orders building at
consumption
700.
growth is moderate, and manufacturing output has moved up steadily this year. The housing sector, however, strikes a different note.
This feels so
It's a
trappy.
different picture and continues to lag. I want to highlight the most striking feature of our economy right now, and it's business investment. It is a surge in capital expenditures. Compare that to what we've seen for a long period of financial engineering. This is a better situation. The rapid pace of CapEx, which appears to be accelerating, reflects in large part the construction of infrastructure, including in and around AI and the immense demand for AI-related equipment and software. Investment in equipment overall increased about 8% for the year in the first quarter. Within that category, high-tech spending logged an especially impressive growth rate of about 25%. We don't yet know the extent to which the economy will benefit from this build-out, yet it seems inevitable, at least to me, that what is now called AI investment will soon just be called investment. Even so, new opportunities for the economy introduce new challenges for policymakers.
Rename
We at the
investment.
Fed are monitoring the implications for the inflation and for the labor market. That brings me to the supply
We're
side
no
of the
longer investing
economy,
in
a
AI.
subject
We're
worthy of equal attention, where productivity growth has been strong.
Simmy's
And
about
I'll
to
note
take
that
out
this
yesterday's low.
productivity growth predates gains from AI adoption. America's labor force appears to be broadly stable. Job
Book map
creation
is
has
just
kept pace with the
700.
workforce. The unemployment rate
Yeah.
low, and has changed
And there's
little,
nothing
quite
under that
frankly,
really,
over the
so
last year. We're seeing relatively few
probably
layoffs
flip there.
and only slight variance in the rate of job vacancies. Solid growth in nominal wages too. I've been heartened by the welcome I've received and by the encouragement of my colleagues. We have a duty to point the institution forward, to take a fresh look at current practices, to make sure we're serving our objectives, and we're
Sounds
going
like a
about it
board meeting.
systematically. As the chairman referenced, I appointed a task force in each of 5 areas that are central to the conduct of monetary policy. I'll just reference them and close. First, Fed communications. Second, our balance sheet policy. Third, our use of existing data. Fourth, productivity and jobs. And finally, the Fed's inflation framework. Our purpose here is to make better decisions in the conduct of monetary policy and put these years
There
of
it
high
goes.
inflation behind us. We are the Federal Reserve, Mr. Chairman, and as determined as ever to fulfill our mission. Thank you, and I welcome your
Crack 'em.
questions.
Thank
Why
you,
the hell
Chairman.
not?
Each member will have 5 minutes to ask questions. and
Take
give
the-
answers, and I'll start that
Take
off.
700,
I'll start off with
maybe
the-
wick down to
with the working groups.
685,
I
and
think
then bounce right
credibility
back.
Equals transparency. And the names that I've seen on your
There you go.
your
So if you're
working
short,
groups,
you
Doug
could probably
McMillian, former
overcover
CEO of
right here
Walmart,
and start
to
getting
Mark
low.
Andreessen,
Yeah,
productivity and AI. Tells me that you're serious about getting
I flipped. I didn't call it
real-world
out.
experience
Right when I
and
got stopped,
expertise
I did.
involved in making decisions at the Fed. I want to give you just a minute of my time to walk us through perhaps 1 or 2 pieces of that, as we talked about the
I'm
importance of
flat. Just made up for that
having
loss. That's,
contrast on the committee, on the working groups. Really important from my perspective. I think it lends itself
Run
to
backyard.
having more confidence in the Federal Reserve. I want to give you a minute to talk about one part of it, and then I want to move quickly to AI.
All right, let me be brief, Mr. Chairman. But
562.
you're highlighting something that's awfully important. All institutions, including the Federal Reserve, which I am so proud to lead, filled with great people,
Oof.
on occasion, we need to bring new ideas to the fore. And after 63 months of inflation above the Fed's target, it struck me that any new leader should arrive at this organization and look to the very best minds that we could find. There's a lot of great ones at the Fed, but there's a lot of great ones that aren't even in the economics profession. And I reached out to 15 people who I have known and trusted with a diversity of views to see whether they would take the most important questions that are going to be the determinants of monetary policy and the determinants of the economy next 5 years and see if they could sharpen their pencils and do their best work. It's a move towards transparency and new ideas. I'll just give one example before turning it back to you. In the last couple of days, we've gotten data
Flipping
on
back long right
consumer
here.
price index today, on the producer price index.
600.
Any central bank would be happy to have the data going in the right direction. My view is these are all imperfect measures of the state of
Yes, may wanna
underlying
go fill the gap.
inflation. So one of the task force is going to see whether we can do better. have better data from external sources, and even better ideas as to how important organizations like the Bureau of Labor Statistics, the Bureau of Economic Affairs might think about how they could do a better job in an evolving economy.
That's not good.
Thank you.
Bruh. Definitely
We
not
met,
in the short.
just a few weeks ago with Dr. Phelan,
Which I
who's
was.
slated to be the head of the president's economic advisors.
No
And we talked
orders.
a lot about artificial intelligence and the impact it will have on our
I'm trying
economy.
to. I want to try to scalp along right here, but I just don't like how it's
Ultimately,
acting.
At the end of the day, his conclusion was it'll create more jobs. Artificial intelligence has an opportunity to change how
Whatever we do, we
do
probably sweep
so
this
many
low
things,
again
and much of
in the
debate
next
for me
20
is
minutes.
bifurcated into automation. Things go away and augmentation. People make more money because production goes up. And you've argued that perhaps there's a way for us to see a reduction in interest rates because of that increase in productivity. One of the things standing in the way of that conversation is what's happening in South Carolina, where data centers are meeting real headwinds. New York has basically banned them. We have a moratorium in parts of South Carolina because of issues like electricity bills, water use, aesthetics. So getting to the future that we're talking about, and frankly, beating China in this AI race might come down to something as important.
I'm going to try to bounce it
as
here.
electricity bills
Long
and
664.
water usage, which could prevent us from having a serious conversation about productivity gains. Thoughts?
Yeah, it's.
Keep curling.
I can't think, Mr. Chairman, of a more consequential change to the U.S. and global economy in my adult lifetime.
Yeah, just try to get back to
than the
690,
surge of
700,
investment
and
the
trim,
potential in
and then
and
see what
around
happens.
AI. That's part of the reason why one of my task forces is to focus on what's the effect of this general purpose technology on both parts of the Fed's mandate, on ensuring stable prices, but also on full employment. You gave us both parts of that.
Yep.
We don't have any legislative orphans at the Fed. There's no disfavored part. I would say it is a huge opportunity, but it's not without challenges. I'll make two other brief points.
It's taking way too long to get back through this.
Extremely well positioned to be at
won't
the
get it.
cutting edge and extract more.
All right, there's
productivity,
690.
which
I'll
should
take a
be good
little
for
trim
US
here.
companies and U.S. workers than any other country in the world. Any other country would exchange positions with us in a moment. Second thing is, I do want to make it clear that in the near term, I think this investment is probably
Sell
quite
one more
good
at
for jobs as
700.
we're building out the infrastructure. And over the long term, my best guess is that this will improve American productivity and will improve the real wages and will help us on full employment. But between the short term and the long term, it can have a disruptive effect. And we're attuned to that. And that's part of the reason why I wanted to shed some new light on it with some outsiders.
My time is up, but I will submit one question for the record around the issue of indexing our regulatory thresholds. We've seen so much growth in the since 2019 that our institutions might need to see a little recalibration on the thresholds that we have put upon them. Ranking Member Warren.
Thank you, Mr. Chairman. So the Federal Reserve has long been plagued by a culture of corruption and coziness with Wall Street. Over the last 5 years, at least 6 senior Fed officials have been implicated
One more
in
off here
serious
at 19.
scandals related to personal stock trading and self-dealing. But instead of trying to repair this broken culture, I'm concerned that you seem to be embracing it. At the time of your nomination, you owned more than $100 million worth of shares in private investment.
She's like the annoying sister I never had.
Funds, FSLLC, and you refused to disclose the underlying assets to the Senate and to the
Like the
public.
boys are just trying to trade.
You say now that you've sold those shares. In other words,
Yeah, I'm just trying to get to know old
more than $100 million
Big K Dubs,
days before you entered office.
Mr. Kevin Walsh, Big K Dubs.
Senator Warren, this is a discussion you and I had in the public square.
This 750 is.
And I'm thrilled to tell you that I've
Let's see what happens up there.
I had under the
Like to see a
office of
spike.
the agreement I had with the
Like
Office
to
of
see a
Government
spike.
Ethics.
Yeah,
And
I'm
there is
glad you
continued
in there.
disclosure, which I'm happy to make as
I asked
consistent
you a
with the
very
agreement.
specific question. Who gave you $100 million right before you were sworn in? Was it?
I don't know what she's saying. I
who
pretty
has
much turned down my
business with the
volume.
Fed? Was it Stanley
All right, spike it.
Miller, who's made billions
Come
of
on.
dollars betting on what the Fed does? Or was it a different
Pop it
billionaire?
for Poppy.
Who gave you the money?
I will fully comply with the Office of Government Ethics.
not an
and
answer.
well, it is an
Or
answer,
get
actually, Senator,
smacked.
because there are obligations,
It's
and I will
$100
satisfy them
million
completely.
that you got just before you were sworn in, and you won't tell the American people where it came from. Let's go to another incident. As you know, the Fed imposes a blackout period where senior Fed officials are prohibited from talking about economic issues with outsiders. The
Don't
idea is
stop
to,
me
quote,
out.
reinforce the public's confidence in the transparency and integrity of the monetary policy.
I'm with you, Ja.
No one will get some
I'd do a lot of
special
things for $100 million.
from the Fed. But shortly after your first FOMC meeting as chair, right in the middle of the blackout period, the Fed's vice chair for supervision, Michelle Bowman, was reportedly the featured guest at a secret dinner hosted by Bank of America for its hedge fund and Wall Street clients. At this closed-door dinner, she reportedly spoke about both
All right,
monetary
I just stopped in profit.
and regulatory policy. Now, I've called on the Inspector General to review her conduct, but you're the guy in charge. As
Back
chair,
down to that
you set
pivot
the
point.
tone on culture.
What's she gonna do?
Vice Chair Bowman
Wow.
provide any
688. For a second, I thought that said
to the
800.
attendees at that
Could hold
ceremony,
right here again, but
or
I'm gonna
discuss any
But it's not all one
regulatory policy
person.
matters that are subject
I'm
to
gonna
Like-
chill ski.
comment periods.
It was right there.
Senator, I agree with one of the
That's a lot of
premises
different
your
people right
question,
there at
which is
600.
I do set the culture.
Good.
After my very first week at the Fed, I sent a letter to the 21,000 people at the Fed outlining our
I
culture.
appreciate that, but we have very limited time and a very strict chairman. So can you just answer the question about the vice chair and her secret meeting?
Sure, I'm happy to the extent I can share it with you. The vice chair has been an excellent colleague in my first 7 weeks. I'm aware of the letter you sent to the Inspector General. Out of an enormous respect for him, his investigation, what he chooses to do with it, I'm going to leave.
Oh, $500 to start the day. $500 holla.
So you will support
$500
his
holla.
investigation. Have you
All
made your
day, every
investigation?
day.
I think
Did
it
you
could
ask
still.
her?
I think it
She
could still hold
spoke
here.
at a
Just
secret
looking
meeting
across the
during
board.
I see it
Oop.
I
too.
agree with the
Well,
I kind of want to long it again.
that the Inspector
I think I
General
want
is an
to click.
independent
I want to
actor,
click it.
and
I
I'd
know,
be very
you're the
interested
guy
in
in
his
charge.
decision.
You just said you're the guy in charge. Did you ask her?
I will say the one
about
problem I
the
have is
secret meeting
we
that took
should
place?
take IB low
Did you
statistically.
ask her?
I can answer a simple question, which is I wasn't at the meeting. I don't know
understand
the
that.
facts,
No one
but I'd
thinks
be
you were.
very
Did
interested
you
in the
ask
fact
about
finding
the
being
facts?
done by an
Did
independent
you
inspector
care
general.
enough to ask, how can you be chair and not ask your own vice chair whether or not she violated
All right,
the
let's
blackout
try this
period,
long right here at
violated the
699.
law?
I think it'd be inappropriate for me to prejudge facts that are
I am
being
looking
discovered
I
by
don't know
take
how
some
you
off in the
prejudge them
20s.
if you don't ask.
Well, I don't know how to prejudge them if I wasn't
Shoot
in the
that
presence
bitch.
of a meeting.
Did you ask?
Did you
She's
ask?
been an excellent colleague.
you
We've-
Did you ask?
I've asked her a lot.
Did
of
you ask
questions
for
about
726?
supervision and regulation
Yeah,
because we've
I
been
think
busy
that's one
doing
more
a lot of
question
real
you
work
don't
over
wanna
the last
answer.
7
I gotta
weeks.
say, I'm gonna take the same time you did. I just gotta say,
You hope so.
the tone that you are setting is one that seems to invite corruption, and that's going to be a real problem.
Mr.
Thank you.
Brown.
We've had 7 weeks, Senator Warren, and we've set a tone of performance, accountability, responsibility, and integrity.
Senator Rounds has the
already-
floor.
Thank you,
Yeah.
Mr. Chairman. Mr. Walsh, welcome to your first meeting.
Thank you, Senator.
Let me give you an opportunity. I think I've got some questions that I think are important with regard to the Basel III and what we're going to do with it. But before
Scooper.
we get into that, I think you've been basically harassed a little bit in terms of making accusations to you. Let me give you just a minute to perhaps
I know.
respond.
Whoever was asking to watch this stuff yesterday, like,
forward manner to some of this stuff.
it's like annoying to watch.
$1
It is
No,
kind of
Senator,
like
no one did
intriguing at
any
times.
such thing.
At
Possible
times?
that you may have had assets
Yeah.
that were sold based upon an agreement that you had.
Warsh's Warsh's wife
as
is
you
like
became
Estee
the
Lauder
nominee
or
for
whatever
the
or something, right?
championship.
Yeah.
I had earned
think
assets over a
Frank
long
told me
period of
that, I
time. and went over and above
Yep.
any ethics agreements and have sold, or in the process of selling, have nearly completely sold everything that I had earned during that period and have rolled those into the equivalent of cash and T-bills.
So basically, away from investments.
We're seeing right at the halfback the move we made up from Monday night to last night.
To treasuries.
Yes, exactly right. I thought that was the prudent thing to do, given the
Look
responsibilities
at our Mag 7s though.
and the importance of setting the tone at the top.
Look,
Culture is
Apple.
the big driver.
They're
of a
talking
lot of
about
things,
tone
and
at
in
the
my
top.
first 7 weeks, Senator,
Look at
we're
Google.
doing our
Good.
very best in the best of the Fed's traditions to get the
Getting
culture
into
right,
the compliance and ethics
strategy
stuff.
right, and to get policy right. And if we can do those things,
Sell
all of which are
semis,
the
buy
left of
Mag
the decimal
7s.
point, might not be of such great
They're
interest
talking
to
consulting
people that are
ethics.
trading on Wall Street. And I think
That's
the
my old
decisions we make
wheelhouse.
to the right of the decimal point can be better, so we can do a better job of fulfilling the mandate you gave us.
Yeah, the ranking.
If you got tone at the top, you got mood in the middle, and then the local climates of the organization feel much more better to report misconduct.
And you indicated that if there was an accusation being made as to an inappropriate meeting,
Misconduct
that
such
if
as
the
bribery,
Inspector
such as
General was
this,
doing it, that you
such
were
as
going
harassment.
to be hands off on it. It seems to me that that's pretty appropriate. Because if you would have gotten involved in it, the accusation from some members on this committee would have been that you were trying to influence it.
Yes.
Can you talk a little bit
Oop,
about the
new
logic?
lows, there you
Am I
go.
on the right track with regard to the reasoning that you
So
had
that's
for
why I didn't
allowing
want to take the
Inspector
second long there,
General to
because
do the job
statistically you
that
should
they
have
were
taken this IB low.
asked
You
to
just
do in the
did.
first
Golden
place
retraces at
by members on this
593.
committee?
Yes, Senator, you're exactly
There's a bunch of
on the right
orders at
track.
600
I'll just say more broadly
on this book map
that
now.
my fellow governors, my Reserve Bank presidents, they've received me
All the way down to
incredibly
580.
warmly.
There's several
I admit
things
that I
stacked
show
down
up
here.
with a lot of ideas for reform in monetary policy and supervision and regulation
Well-
and payments. I've only been there a short while, for 7 weeks. But instead of an institution acting inert, what I've found is
Friday
my
low
colleagues
is
are really
down
open-minded
at
to change. What I found is we're going to have a good family
567.
fight. I'm not imposing ideas. That's part of the idea of the task forces the chairman referenced.
There's a
But we're going to try
pretty
to
decent
be better
level
at our
here at
jobs,
this
fulfill our
around the
mission,
600.
be accountable, be responsible, and do it all with the utmost integrity. That's my intention. We're early into this. I don't want to prejudge outcomes. We made a lot of progress in a short period of time, and frankly, I'm proud of it.
I like the
Here
idea
comes
that you
SPY.
put
There's
together
600.
working groups. I think that will give an
599.
opportunity for a fresh look at a lot of things going on. As I shared with you in a phone call earlier,
530.
it's not a matter of being necessarily vindictive or angry with previous chairs or previous members. It's a matter of making things better for the American people, and that's really what we ought to
We
be
probably
talking
scalp
about
along
today.
off
So let me just,
600
in
if you wanted.
minute and 14 seconds that I've got left on mine, let me talk a little bit about Basel III in particular. I think you and Vice Chairman Bowman and the respective financial regulators, I think you've done a good job in terms of your roles with regard to the Basel III reproposal that was issued this March. The 2023 proposal would have substantially increased common equity capital requirements for Category 1 and Category 2 banks by approximately 19%, failing to strike a balance between maintaining resiliency of our banking system and doing so without hampering lending. I think this is a really critical item, and next to what artificial intelligence is going to do in terms of our productivity, I think it's one of the biggest issues out there. With the June 18th comment
Bro,
deadline
look
now
at this,
behind us, are
daily
there
chart.
any other categories of feedback that you're weighing more heavily than others, such as the adjustments to
Watch
leverage
this.
ratios or anything along that line?
All right, I'm long
could-
right here
Do you know,
again.
Go live date this year sometime? Any idea when you might actually
Starters
be able to
there,
talk
just
about
under
when this thing
600.
is going to go public for us?
Senator, well, thank you for your question on supervision regulation. As I mentioned before, I've shown up with a lot of ideas for reform, not just in monetary policy, but in supervision and regulation too. When I was before this committee some 20 years ago, there was a debate about what the Basel process should be. Boy, we should get to the bottom of that 20 years later, and we should end up with a set of reforms in the United States that makes our financial system and our banks safer, sounder, and more competitive.
Yeah, we're sitting
Because that
right here in the
competition,
midpoint
which
yesterday.
provides better and more
I don't like
agile
ES
credit
has
to
got
the real
written down.
economy. The Basel
Bro, I don't
endgame,
like
Senator, is not
long right
America's
now.
endgame. I am happy to
maybe
work with
Microsoft.
international regulators to try to find.
This thing might want to go down to
common views,
560s, but
we're going to do the right thing for the U.S. economy. As you mentioned, we're out for public
We'll
comment.
see.
I'll be very interested in the comments before we go final with a proposed final rule.
Let me just say, This is already off to a good start. But we're going to stay around 5 minutes, period. Thank y'all. Senator Reed, the floor is yours.
Thank you, Mr. Chairman. Chairman Walsh, I want to see if I put a cap on this discussion between Senator Warren and Senator Rounds. When will you disclose who brought your assets? When?
I believe there's periodic requirements under the ethics laws, and I'll fully comply with them. I think the next.
Talking about
Come on, get me back up to 37.
And you will fully disclose.
Was it on Billy Madison?
your assets?
Business
Fully comply
ethics.
with the law and the ethics agreement.
Thank you. AI.
I used to work for a company that did, there's like top places to work, like recognitions. Well, the
Yeah.
company I worked for did the world's most ethical companies recognition.
Commerce, Treasury,
We used to host
energy,
the
et cetera, have
gala dinner to
advised
celebrate the world's most
major
ethical
banks,
companies.
8 major banks, to use
Nice.
Mythos to evaluate their security.
Yeah, companies like
Would you
Voya
agree that's
Financial,
important? All
Uber
financial
actually
institutions
won
have
it.
access to these types of AI tools.
Met a lot of really
so
cool people.
that they could analyze their operations for cyber vulnerabilities.
How I met Scott
Yes, I think the
Schools.
broad financial
He used to
system
work
has
for
new
Obama
vulnerabilities with
as
these new
the Attorney
technologies.
General,
I
or
wouldn't want to
Associate
just
Attorney
isolate
General.
Mythos, though. The other
He
large
was a
language
compliance
models
officer
have
for
rival
Uber,
products.
and now
The
he's at
changes, the
OpenAI.
efficient frontier has changed even in the last month. But
Did a
as
job
these new
reference.
models find their way more broadly,
nice.
our banking system and
Good one
frankly
to
the
have.
Federal Reserve needs to do
Yep.
what we can to patch the
Yep, it was about
vulnerabilities.
bribery and corruption.
What are you doing to
Referred me to another
ensure that
company.
these
Ooh, I got
mid-sized
stopped
and
there.
smaller banking institutions have access
There we
to
go.
whatever
We're down
AI
to
tools
what?
appropriate as quickly as possible.
570?
Yeah, so I share the sentiment, Senator Reed. We are not the deciders as to who has access.
Yeah,
and I
I'm
have
seeing
not been
440s
shy in
maybe.
sharing my views with authorities across the government about the
400
vulnerabilities
points.
and have been asking for access, not just for the Federal Reserve.
Yeah,
but for
Monday's
have
low
institutions
down at
to a whole
387. You
range of
got the
these new,
body low candle of yesterday at
artificial intelligence
443. You
models
got
so
prior
they can
week
protect
midpoint at
themselves.
500.
If you said to me what worries you over the course of the next several months, I want to make sure that we're as protected as we can be from foreign actors that want to do us harm.
Yes.
Well, let me stay with AI, but change the focus a moment. Recently,
try it again
Governor
right here.
Waller and New York Fed President John Williams have warned that AI investments may be increasing inflation, and many economists have similar warnings. So are AI investments current drivers of inflation?
This is one of the good family fights. Let me give my own view on it, which might be somewhat nuanced from the way you just described it and some of my colleagues. The shock
Come on, we need a big old
of
bounce.
AI,
Big
the
old
supply
bounce.
shock of AI has an effect on demand and supply.
Come
We see
on,
the
give it
effect on
dry.
demand much more quickly. We see
Give
it
it
in
to
the
me,
capital
baby.
investment I referenced. We see it in the prices of chips that are going up. We're inferring, which is just a fancy word for guessing, when the effects will happen on the supply side of the economy. I don't view a one-time change in prices as necessarily being inflationary, because I think there's a supply response. In that way, this is different from a foreign conflict and what it might do, which tends to reduce the supply side of the economy. Will it increase measured prices over the course of the next 12 months? I suspect it will be.
All right, there's
Whether it's
50
inflationary or
points, 40
not,
points.
That's up to the Federal
Trimmed into
Reserve, and We're
590.
going to have something to say about that.
Okay. Now, one of the interesting things about our economy is
Go back to
becoming
Ivy
more
Low.
productive. But one of the disappointing things is that household pay is not rising relative to that productivity. And we're seeing less benefit from productivity gains. So what's driving this trend?
Yeah, it's a great question. I don't have a perfect answer to it. Like you, we think a lot about real take-home pay. The part that the Fed
Try
can
to
do
go
a
back
lot
to, like,
about is the real part.
725?
If inflation were lower, real take-home pay would be higher. That's just the arithmetic. Your other question's a broader one,
That's
which
just
is
the
what are we
arithmetic.
going to see the productivity improvements?
I like that
lead to
word,
a surge
arithmetic.
in wages. Wages have moved up at a reasonable pace, but it's likely
We need to
that
get
as
back into the
productivity moves up more,
630,
we should
In train,
640
baby,
area.
send them up north.
getting that timing right, understanding
Where's
when that
IB low?
happens, that's a puzzle,
639.
and it's a
Yeah,
puzzle
that's
we're
where I
gonna
need
continue
it.
to
Do it.
work on.
Do it for the gain
In the
train.
last 10 seconds, will AI eliminate jobs at a catastrophic rate?
AI eliminate
So
jobs.
you're asking me to prejudge the task force. My short answer is over the long term, absolutely not. I believe that this is a long-term job creator, but will it be disruptive? And will some people have their jobs at jeopardy because of the new technologies?
Oh, the selling's
I
still
can't
pretty
offer
heavy
any
here.
sort of guarantee or comfort.
Senator Britt.
Thank you, Mr. Chairman. Chair, thank you so much for being here with us today. Certainly appreciate the opportunity to have a conversation, and obviously so early in your tenure in this new role. In this year's monetary policy report, one of the most encouraging themes is the increased in business investment that we're seeing across the country. In Alabama and many places, we're seeing companies expand, manufacturers grow, and communities are benefiting from that investment. I believe that these are
Something
good
like that.
signs,
Yes,
and
feels like it
they're
could have a
also
lot of room
important
down.
for the future because they help us determine whether America remains the most
Go fill this
competitive
gap.
economy in the world.
We don't bounce
question for you
here,
is,
or
as you look
maybe we come
at
back
the
into
economy, what data tells you
IB low and
that
reject
today's
on
investments
NQ.
are laying the groundwork and the foundation for a
Then maybe you
stronger
think about it.
long-term growth and greater American competitiveness?
It's just they're selling semis and buying Mag 7s. Literally all that's happening here.
This is what most countries are searching for. This is the seed corn for the next group of job creation and productivity.
God,
To be
look at
honest, over
AMD
the
went off a
last
cliff.
dozen or
Good
so
lord.
years, we have been waiting for the surge in business investment. I know in some academic accounting
There we go,
sense,
buyers.
this is leading to a surge in prices in the next 12 months.
Give me
I
that.
don't want to sound
Give me that
dismissive of it. The
638.
surge in prices is real, but I'd sure rather the most successful companies in the world investing in property, plant, and equipment than doing a share buyback.
Well, the
So I'm
world's most
encouraged by
ethical
it.
companies in the
The
world
trend is our
outperform the
friend
S&P
here, and this
500 by
business
about
capital investment is
7.5%.
contributing
If you invest in the right
massively to the GDP
methodologies,
we've seen in the last
increase
12
the ethics
months.
of your
My
local
colleagues know I'm not
climate
big
of
for
your
forward
workforce.
guidance, but
That's simple,
I would
guys.
guess that trend continues. What
Makes
gives
sense
me
to me.
I should have
optimism
been a
about it?
politician.
Well, when the private sector
Yeah, I feel like I
deploys
would have
this
been a
amount of
good
capital,
politician for
they
sure.
must see something
Basically,
shiny at
you're
the
a
other end of
salesman.
that rainbow.
That's all it
They
is.
must see
Oh,
a
dude, if you know how to
very
like,
good return on
you
investment.
just know how
That's
to
why
like
they're
pull the
taking this
strings.
capital and they're
I
putting
know how
it
to
to
pull
work.
string.
Tell
I
people
tend
what they
to
want to
think that
hear.
private investment has a multiplier way higher than one. I'll let you and others judge whether that's true of government spending too.
I'm going to go ahead and switch gears because I know we're on a tight time frame today, which I
I'm going to
appreciate.
post a video
And I'm
of
going to follow
basically
up on
what
a
this
question that the
conversation
chairman
sounds
asked.
like.
I'd like to
There's this
curiosity
one
in
guy
this.
that does
Some banks are already approaching
he has a
and
filter on his
crossing
face. He
into
has
more
like
tailored
5 different,
categories,
7
and they're
different
making
personalities. And
staffing
it's like
and
you walk into a
compliance
room,
and
a
long-term
boardroom
business decisions
of employees that make
based on
10 extra
thresholds that
salary, and they're
haven't been
just talking
updated since
jargon around the table.
2019.
Basically
At
what
the
these
same
people are doing.
time, the Federal Reserve continues to rely on those categories
Not
and
really.
Gotta be
other
careful.
regulatory
Talking like
frameworks.
real
So my
stuff,
question is, how
but
are you thinking about
it's just
updating these
what she said
tailoring
in transition.
frameworks
Well, if I
when
could
it comes to
circle
what
around to
banks
this, circle
can
back,
expect to see and
I could just
proposals
elevate
moving
this to a
here?
higher
So
altitude.
it's a great question, one I take seriously. To be candid with you, when the
Come on,
chairman
take these
of the
trums.
committee, monetary policy
I
has
love it.
distracted me a bit in the first
All right, I'll
7
count.
minutes. But the Federal
Oil's
Reserve Chairman is
falling,
supposed to be the
NQ's
chairman of
rising. I'd like to see NQ get
monetary
above
policy and payments and
675 for
consumer affairs
longs
and
to really
supervision
do
regulation.
anything,
But I can
which
tell
is
you this.
the pivot level.
Vice Chairman Bowman has been working on these
We have not
initiatives.
tested that
She has
500
briefed me
level
about
down
them.
on NQ. I don't
And broadly,
think
I'll step
we're down there
back
at
and
this
say
point.
modernizing our systems, streamlining
Come on, give me IB low for a Trump. There it is.
institutions are not one size fits all for every other.
All right, that's about a 90-point gain.
1,000 banks and other providers of credit who know their smaller markets.
And we're down to runners. We're looking for 680 and 725 above here.
Institutions implicitly backed by their government. I think reform is coming to supervision and regulation. I have my own ideas. It might be as dramatic as I've already shared on monetary policy here. And I think the sooner we can get to the bottom of it, the better.
Watch this trade, and then we'll go go get a coffee.
As we learned in the
Coffee.
Silicon Valley Bank example,
Only get
First
coffee.
Republic example, the
coffee.
My predecessors had very little choice but then to do another overall bailout. We don't want that to happen again. So we want to tailor the rules in the capital.
Rooster had a Google pasture. That's actually kind of sad.
Which I describe as a system that is safe, sound, and competitive.
And I just hope.
And I do want to put my stop in profit.
What do you mean you have
Preferably.
pasture?
Yeah, it's a pretty wild statement, actually.
And also just the need for regulatory certainty. So thank you for that. In my last remaining seconds, I just want to say thank you for your commitment.
Put one stop at 580 and one at 560.
2 months. You said it earlier, but to performance, to accountability, to responsibility, and to integrity. Appreciate what you're doing and look forward to continuing to work with you.
Thank you, Senator.
Senator Warner.
Talking about integrity here.
It's good to see you again. 7 weeks in, you got a hell of a job. Inflation's still too high. How you predict the president's chaotic.
You see, the puppy was a dog.
The puppy lost.
But the industries, my friend, that was a revolution. Lehigh football rules.
I am going to hold you, and I've been appreciative of your comments about inflation, about the Fed's independence. But I think there are many, many common areas we can work together.
IV retrace should take us back to 724 at some point today.
Meeting was your recognition that probably the biggest issue you're going to face is AI.
Yes, has already done that.
Sense is, I think it is going to have long term. I agree with you. It's going to be job creation.
IWM didn't even pull
Very
back.
short term, I think you may see some upsurge in terms of energy production and data center build out.
Just the
Years 2
Nasdaq.
through
Probably
5,
should long
2 through
DS
6,
instead.
There could be massive economic disruption, particularly towards new college grads.
Ooh.
It's policy
Oh,
because
oil's getting correct.
has the potential effect. I hope I'm wrong, but I'd take a bet with you that 3 years out, we could see 30% recent college grad unemployment.
Dang it, I should have shorted oil again in the
What do
80s.
you see as the Fed's role is in terms of urging your action?
Trapping like the 80s.
Senator, first of all, I appreciate it. I promise to.
Don't say nice things about me. He's got me on a clock. Answer my question.
All right, good. Well, let me just say,
I do indeed.
let me just say this. I appreciate.
Let me just say this. Gain train, baby.
I haven't given up on you.
Seep.
Seep.
Go.
Bank. No matter how people voted, I'm going to be serving all of you.
Run it back up.
AI. Let me get to the core of your question.
Let me get to the core of your question here.
That there will be
If I could just circle back to this.
I wish I could just only listen to him
of
answer.
AI than any certainty about the effect on the labor market in the next few years.
Dude, I gotta get you to
The
help me
United
do
States
some
will be a
settings on
winner.
Bookmap
That
at
is
some point.
my informed judgment.
Word.
But this is a
do
time
that.
filled with both challenges and risks. We take both parts of our dual mandate seriously. Do I believe that the productivity improvements over time will be structurally disinflationary? I do. I believe everything technology touches ultimately gets cheaper. Your background, I think, would be consistent with that. What are going to be the effect on the labor markets in years 2 through 5? It's a fair question. The way I would frame it to you on
10
college
minute
graduates.
yes, looking
if
kind of
you're a new
rough now.
college graduate, AI is probably native to you.
But we're
You've been
holding this
playing
golden
with
retrace.
AI effectively since your high school years. I feel as though you likely have the skills and the intuitions the same way that people of my generation or younger were native to the internet. If you've already been in the workforce for a while and you're a little resistant to change, that's
some
where
of
the
that internet
encouragement
money.
needs to be to think about how these skills can make you more productive. These are fair questions. I don't have easy answers, but I do have a task force that's going to be thinking about it.
We have to work together on, because if we hit this bump, and I think it's going to come, we got to collaborate. Now, Senator Reid asked a very good question about Mythos, and I 100% agree. Mythos is already yesterday's news.
Who's this guy?
Because these models are coming out so quickly, and they pose such
Mythos.
security risks. I think it's incumbent, because of the risk it provides to our financial system, that at some point you're going to be. I'm asking you now. I think personally, I believe we need some level of mandatory testing pre-release because of the potentially draconian and dramatic effects. Now, how long, who's on that panel is critical, but what do you think about pre-testing?
Yes, just way to do low.
Regime going forward, more than just the voluntary willingness of a company to come forward?
Interesting.
Yeah, so two things. First, these models are in their capabilities.
You get a big
are going
turnaround
at
spy here. It
exponential
starts
rate.
to feel a bit better. The
Technology,
problem
we
is you
would
just
say,
how much are
Moore's
they going
law.
to do before
It wasn't
earnings?
long ago people sitting in my position thought that the U.S. was a time of
De-risk
secular
and
stagnation. All the good stuff had been
repositioned everything
invented.
else.
Boy, that seems awfully anachronistic. We're moving fast. So what can we do?
Taiwan Simi reports
I don't
tonight,
have, as
overnight.
currently structured, decision rights as to who has access. But I do have a bully pulpit, as you mentioned, and I'm unafraid to share my views with the Treasury Secretary and others.
Oh, man.
The cutting edge is moving very quickly. Key institutions are vulnerable. The sooner they can mitigate their vulnerabilities, the
Micron
better.
getting wrecked.
I'm looking forward to
Well,
working with you
I
on
hope
that.
that you will be willing to advocate moving on beyond a voluntary regime, because the downside risk. 12
Software
seconds,
tech
you know,
not
quickly address the
doing
role of
well right now.
all of the Federal Reserve banks and your vision of what the role they should play.
So very quickly, I'll just say this. We should be good stewards of taxpayer money. We should be consolidating functions where we can. But my mental model, Senator, as I mentioned to you yesterday, is we should have 12 centers of excellence. I've got more than 12 problems on my plate. And if each reserve bank were to develop an expertise on something that matters to our remit and the American economy,
We got 99 problems and a senator ain't one.
Senator Ricketts.
But this
Thank you,
budget,
Mr. Ricketts.
Great to see you. Thank you for being here, and congratulations on your first.
This guy's a
semi-annual
gangster.
report.
His name's
Good to see you
Mr.
again.
Ricketts.
We got some good news this week. Inflation was down, and that's progress.
Hey,
Progress
Mr.
under
Ricketts
this
actually reads the
administration
reports,
and
unlike
under,
Pocahontas.
Your new leadership at the Fed. During the Biden administration, we saw reckless
All
spending.
right, I'm going
which
to add
drove
back that
prices
stop
up
out.
and left Nebraska families
And it
to
still
foot
went
the bill.
680.
2019, the federal deficit was roughly $900 billion, and by 2024, that was $1.9 trillion. And we saw inflation go up 20%, really stressing Nebraska families at the grocery store. Cleaning out this mess is going to take discipline.
Maybe
and it's gonna
660s would
take
be
reform.
better.
Chairman Warsh, we discussed in our meeting also how to implement
Get up to
some
75,
reforms,
80.
such as process improvement.
Yes.
We talked specifically
Two
about
ads
Lean
and
Six
put two
Sigma
trims,
and the
665
opportunity
and
there.
682.
You promised to have
I
a
think that's fair. You got the pivot
reform
point
Federal
just
Reserve.
in between all
We're
that.
willing to break up or
Yeah, I'm just gonna
break
trim on
from
both
some of the
sides of it,
mistakes
hopefully.
the past. I commend you for that and want to work
Oh,
with
this
you
could
to
be a
see it
bear
through.
flag.
One of the most important places to start is with the Fed's balance sheet. and
But what I
ensure a
can do is
consistent rate
move
with
up
other
all
Fed
my
governors.
stops.
The Fed expanded its balance sheet dramatically during the
Give it to me,
pandemic,
baby.
making it nearly $9 trillion. Since 2022, the Fed has shrunk it down to about $6.5 trillion in December 2025. And I'm glad to see that the Fed was making progress over the last few years, but the balance sheet is still not down to pre-COVID levels. Actually, the balance sheet is rising again and now stands at around $6.7 trillion today. Chairman Morris, do you see the balance sheet increasing again as a trend in the right direction or the wrong direction?
Senator, thank you for the question. I've been focused on the Fed's balance sheet, frankly, since my last day at the Fed some 15 years ago into the present. I don't want to prejudge the conclusions of this balance sheet task force, where, as the chairman said, I put together a team of rivals to fiddle with it, to evaluate it,
He's
to
fiddling
come up
with
with
the
their
balance sheet, guys.
judgments. But I'll give you my predilections. Monetary policy is made currently through at least two material
it to me,
instruments,
baby.
interest rates and the balance sheet. In fact, we grew the balance sheet, created quantitative easing when I served the last time in the darkest days of the crisis, because we had already cut rates to zero. So expanding the balance sheet had the intent of helping markets clear, but it was also another tool of monetary policy. I still believe that is
And at the
true.
time, wasn't that supposed to be temporary?
Indeed, that was our entry principle, was that we would get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is, as we think about inflation risks and we think about the conduct of monetary policy writ large, we have two instruments that we should be thinking about. The balance sheet is
We
one
clear
of them. I'll make only one other point.
635, 640.
Monetary
Right here,
policy
we should
needs
get
to be
this nice shoot up here.
needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that is conducted by the New York Fed. I want the architecture to drive the plumbing, not the plumbing to drive the architecture. We're going to make a monetary policy decision.
It's a me,
versus the
Mario.
balance sheet. I'm very open-minded to changes, and any changes we make will be well discussed, well shared, and I think quite deliberate and the financial markets, who have seen the balance sheet grow effectively for a generation, they'll have plenty of time to adjust if we make changes.
I know you said you just wanted to make that one comment, but I'm going to push you to ask for a little more. What do you believe is the smallest balance sheet that the Fed could operate with?
My predilection, my inclination is interest rate policy should be the driver of monetary policy. The balance sheet should be as small as practicable to conduct operations. And the balance sheet can expand when there's a crisis. The balance sheet can also expand if an institution needs liquidity. That's part of the reason why we've created a discount window. But a permanently large balance sheet with a duration of assets that are larger than the duration of assets of treasuries, for example, that are held in the broader public markets.
I don't like the 10-minute.
Boy, that sure seems a little bit more like fiscal policy that I'm comfortable with. So I would like us
About
to
to
have
hit
a
that
leaner,
exit
meaner
all
balance
button.
sheet, but it's a discussion for my colleagues, and I've got 3 real pros that are going to help us think it through.
All right, well, I have run out of time, and I'm sure the chair will be happy that I'm going to maybe get done before it reaches 0.
Thank you.
But I do have a question I'll follow up with for the record on scams, because this is something that the banking industry is telling me they're increasingly seeing, and it's costing people who have deposits a lot of money. So I'll follow up with that.
Senator, we're opposed to scams, but I'm happy to follow up.
Good to hear. Good to hear.
That was a good answer. All right,
Thank you, Mr. Chairman. And
I've tightened my
Mr.
stop
Chairman,
all the way up
agree on
right
that
here.
Point.
It's basically break even
turn
on
to
the
the
rest.
headline inflation numbers that
588.
came out yesterday at 3.5%, above the Fed's 2% target. Prices are too
I
high
expect
for
you to take out
families,
this
and we
because
need
it's
to get
not.
them down. I think
It's
we
just
can agree
a
on
clear
that.
rejection of IB
At
low.
your press conference a few weeks ago, you said that higher inflation, in part, and I quote, reflects supply shocks that have
And
driven
I'm
price increases in certain sectors, including energy.
flat
unquote.
across the board.
In other
It'll
words,
probably
the
bounce
reason that
100
we're
points
seeing prices go up is that the supply of products and services
But I
has
made
dropped in some areas
some good
of the
money.
economy, right?
Yes.
And I do think it's
Well,
important that the
they
public
better not bottom
understand
take me on this. I'll be
the
pissed.
causes of some of these supply shocks. You would agree, would you not, Mr. Chairman, that the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right. And Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your colleague, Austin Goolsbee, president of the Chicago Fed, said that, and I quote, a tariff is like a negative supply shock, unquote.
Did I
We've
swear?
seen plenty of tariffs. Obviously, we have the
Sometimes
Supreme Court decisions
Rooster
that may bring those
just
down over
says some
time,
shit, and I go
the
look at the
impact of
chart,
it.
and there's
But
nothing
the
close to
negative
what he's
supply
talking about.
shocks have been real.
But he's got the
and can be
levels
traced
right.
to the Trump
But what he
administration
says about him
agenda.
doesn't make any sense.
So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks
I mean,
happen
hey,
to
you're
particular
getting
prices
you're
that
getting
we
the
don't
you
have
get the
control
levels
over,
pretty
but I
good.
don't want to suggest we don't
But
have
when you say
control
that
over
it's like a
inflation
higher low
medium
off of
term,
it, like
that's our job.
There's nothing
But
there.
screw what
There's
affects
literally
beef
nothing
prices,
there.
Other things that affect oil and
Like,
oil
I
prices
have
and
no
milk
idea like
prices,
the process
and
of how you come
I
up with
understand
your
that has
levels,
an
but they
effect
usually
on
match
people's
up with
household
something I have, or
budgets.
they're pretty close.
Indeed, it does, and I think we've seen the
But
price
like,
of
to give you
energy
credit,
go up
Rooster, you
by
do
billions
find
and billions
you
of
find
dollars,
levels that
and
have
American
good
people
reaction
are
points to them, and that's
essentially paying
literally
for
how I
that
trade a lot.
at the pump and other places in their pocketbooks.
So,
as
no,
you know,
I love
your-
fried
Your
chicken.
predecessor,
I had a whole mess of
chairman,
fried
was
chicken last
regularly
night.
harassed and berated by the President of the United States on social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference about any communications with the president. I think your response was, on the president, I don't have anything for you. Mr. Chairman, was that a yes or a no with respect to whether you've had communications with President Trump?
So I like what I said the first time. Senator, I don't have anything for you. I will say this, though. I do meet with the Treasury Secretary weekly. I talk to him often between that.
Mr.
And
Chairman, I just want to make sure
I'll make my own decisions as monetary policy.
I just want to understand the answer. Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have.
Okay.
I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing. And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
So, Mr. Chairman, I mean, I think it's important. I take from your answer, you've had communications. You don't want to disclose the content. Will you commit to do what your predecessor did, which was to release your appointment schedule and conversations
this stuff
with
is so
President
boring.
Trump?
Can you imagine having to like actually do
I
this?
don't know what the past practice was. I will be in full compliance with the law. As I understand it, there's an ongoing
SPX
FOIA
still looks
request
pretty
on my
good.
calendar, and I
It's
will
just
share
holding
consistent
yesterday's
with the law.
high.
I believe the
Not
first
breaking
one's already
down.
come out,
I think this was this wasn't in response to, any legal requirement forced by FOIA. It was a question of transparency.
They did bottom
I do
tick me,
think,
didn't they?
given the president's past record of trying to influence Fed behavior via social media with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy. And if he tried to, I would continue to keep my head down and do the job. I don't have a
So
long
we're
record.
630
but
is a
I've got
back
7-week
test of the high or
record.
low.
Before that, I had a 25-year record, and I think that should count for something.
I appreciate that. I hope you'll just follow the precedent your predecessor.
Senator Kennedy, the floor is yours.
I mean, there's a level here, but
well,
where's the back test of the high or
Senator
low?
Bowman's my buddy, so I don't. This is not meant toward him, but I always get a kick out of my Democratic friends talking about transparency.
I mean, 630 is definitely a level
toward
or an
the
area.
God bless him. You could
You go to
bake
the
a
1 hour, the 4
Thanksgiving
hour.
turkey in the time that it took President Biden to walk across the stage.
The higher lows are all down here.
And they kept it quiet till they couldn't.
Higher lows are here
I'm sorry we was in that
or
condition,
here,
but this transparency stuff cuts both
here,
ways.
here.
What's wrong with you talking to the President of the United States?
I don't know.
So, Senator, I've got a wide lens. I'm interested in hearing points of view from a whole
Rooster, I
range of
literally gave you
people
credit
with
that your
narrow
levels are,
I'm interested in what's
they
happening in the world.
work.
But I mean, is there anything wrong with it? Do you have
But
to
your
go-
terminology
when you
just doesn't
do
make
it, do
sense
you have to,
sometimes.
go out and look for the last phone booth in Washington?
But
and
it doesn't matter. Like I'm not. I'm telling you. Like literally, it's. That gummit, they did bottom tick me.
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the President of the United States.
Okay. Do you think Ben Bernanke
I have
ever
to get
talked
long
to the
again.
president?
I'm not gonna long into the 9.
Call several
You're kidding me.
conversations and
How about
frequent
Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being honored by him coming into the White House and meeting with the president and the president's advisors quite frequently.
Okay. I think what I would give me concern, and I think it's the basis for my colleagues' concern, is that
We should just statistically, we
you
should still go
just
back
do
to
whatever the
725 today.
president says, but you're not going to do that, are you, or are you?
Google's making a new high.
The best I see it. The president never asked me to do anything inappropriate, and if he did, I wouldn't do it. I'm
Okay.
going to follow the law and do my best to follow the remit you gave us.
Okay, so in the last year or so, recent past, I'll say.
What happened,
the Fed
Brent?
cut rates 3 times because they were
2 weeks
worried
ago, I
about
left
the
one
labor
con
market.
overnight.
Is
Forgot
that
about a
fair
red folder.
assessment?
Oh
That's
no.
my sense of what
And
they did
it
before my
worked.
arrival.
It worked.
The
correct?
worst I think that ever happened to me
That's
was
a longer discussion. They
Well, is the labor market in
I
a
like-
mess today?
I left like an order somewhere,
Yeah, okay, so it
and like
so
it got I got stopped out, and then it went to my TP and filled my order short.
So it worked, okay? Now we have inflation, okay? What caused it in 20 seconds?
In 20 seconds, inflation is caused when a one-time change in price is broadened out.
I know what inflation is.
And the
Mr.
Federal
Chairman.
and the
Tell
Federal
me what
Reserve-
caused it.
monetary policy, sir.
Okay, well, I would say what is causing it is AI.
What? What?
The conflict with Iran. Duh. And probably
gummit, they're gonna run this thing up.
of the fact that some imports have become more expensive. Okay? And I think any fair-minded person would conclude that. There was a lot of economists said, oh, you know, the impact of inflation on the rise in the cost of imports would be a one-shot deal. You know, you can teach that one round or flat. I don't know. I think it's probably had a residual effect. Okay, is it temporary or is it permanent, the inflation?
It's not going to be permanent under my watch, Senator.
Okay, what are you going to do about it?
So we're going to do three things. One is for those people in markets that think the Fed really was comfortable with a higher level of inflation, we're doing our best to disabuse them.
Okay, you're going to talk about it. What's the second thing you're going to do?
We're going to take ownership of it. We're going to say we have the power to do something.
Frosty dog. That's funny.
What's the third thing you're going to do?
We're going to look at our tools in the changing economy, both balance sheet and interest rate. And
What is
see whether
Evan
we can
talking about?
adjust policy to take it head on.
Why did France lay off so much during that game?
I'm not
It's not that France laid off. Spain is just very talented, very good organization from back to front. Spain's defense is incredible. They've only given up one goal the entire World Cup.
What are your options? Leave it alone, right?
And
Leave rates
even
alone.
Spain's midfield dominated. So
That
like
is an option, Senator.
France just try to play with talent and chaos.
Cut rates.
They link up pretty well, but it's
A
talent and
non-exclusive
chaos.
list of options, but yes.
Well, and a lot of it depends on whether
And
it's
France
temporary
makes mistakes
or
that they
permanent.
can
So
get
how
away
do you
with
decide
because they're
whether it's
talented
temporary or permanent? I
until
got
they
that
come up
in
against a
with
good
6
team
seconds left.
like Spain that
Use
will
5
punish you
task
for
forces to
mistakes
get to the big and hard questions
and
instead of trying
can
to
hold
paper
you off
over
long enough to let
with,
you make a mistake.
Policies that have not been proven as successful.
Spain, I mean, it's a tactical masterclass from Spain.
Chairman March, good to see you again. Thank you for meeting with me.
Thank you.
You've talked
They
about the task
absolutely
forces.
smothered
What's
and
the timeline
frustrated
for getting
Mbappe.
reports from the task forces.
So I'm not a very patient person. People have said that to do all this good work, you'll need years. I gave them 6 months.
Wonderful. Thank you. And that will be made public?
Yeah, so look, Spain was the I said this. Spain was the odds-on favorite going into the World Cup.
Because we all own these decisions.
They were one of my favorites. That first game, it was like, man, they can't even score or whatever. But
start to get briefings on some of
the
early reports from the task force, early indications.
the thing is, they didn't let it get to them. They couldn't score, but they figured it out throughout the tournament. They got better throughout the tournament.
Thank you.
Their
And then
defense
just
is
for
rock solid.
clarification, in
They control the
January of
midfield.
2025, do you recall the inflation
Spain
rate? It
can
was
beat
about 3%,
anybody.
correct?
Period.
I'm going to have to take your word for the precise number, but I knew inflation was still well above target.
Yeah, it was about
LAES,
3%, and that's when Joe Biden
SpaceX.
left office. And the current inflation rate right now is about 3.5%. Is that correct?
There are various measures. I'm confident in telling you it's been above target for 63 months. It's
Is it
not where we
above
want it to be.
3%?
By some measures, by other measures, it's not. But I don't want to suggest
The CEO of LAES is meeting with SpaceX, apparently, according to a tweet.
Let me talk a little bit about an area that is important for me, and I think many states that deal with a hospitality.
Yeah, I mean, look,
tourism industry.
France is super talented,
Unfortunately, under this administration, we've
but
seen
from a
significant
tactical
declines
standpoint,
in
they're
the
nothing
number of
special.
international visitors to
They're
the
just
US.
super talented.
Current situation has actually
Spain
led to
is
our travel
rock solid,
trade deficit in this
plus
country
very tactically
going from
sound.
a $51 billion surplus
England have
in
talent,
2019 to a
and
$72
they have good
billion
tactics overall.
deficit today.
But they
How
have
does
they have
the
some
Federal
weaknesses.
Reserve governors consider the specific impact of
Argentina,
higher unemployment, lower
Argentina
wages,
is
and reduced
they have
economic
a lot of talent. They have a cohesive chemistry group. So you have a really interesting of these last 4 teams that made it a really interesting like
Consumers
combination.
Of this information, we are keenly interested in.
So
the good
today's
side
game
of
is going
the
to be
economy
very
and the
interesting.
services side
England,
of the
Argentina,
economy.
very interesting.
My view, which is not universally shared in the economics profession, is that there's no limit
Jude has
to
been
what
the
this
best player of the
economy
whole
can
tournament.
grow. Productivity-led growth can move higher.
Absolutely
and that doesn't tell me
incredible.
it's inflationary.
Guy does it all.
But we care about the services part of the economy, and we're trying to take that into account.
EMA 9
try to make
rejection,
decisions about
VWAP
doing
rejection, pretty ugly rejection across the board here. Nvidia's making a new low. Google's making a new high. That just lowers my expectation for us getting moves really either direction.
It is not happening. What I am hearing from
SMH is still really weak. That's going to be the main tracker for
it's not necessarily full
NQ.
employment with good wages and livable wages. They're patching together multiple
see 460s
low-wage
today.
jobs because they are taking down from full employment to part-time employment. Do you consider that in your analysis?
Do you have a unfilled gap below us?
Part-time and
We
many
could go clean up.
individuals having several part-time
SPX to
jobs?
come
How do
fill
you
this gap.
calculate that into your analysis?
So we think hard about it. You heard in my opening statement the clear judgment of my colleagues and me, which is the labor market broadly looks in balance, but I don't want to make that sound like it's easy for hardworking Americans in your state and elsewhere.
Gold and silver just got wrecked.
There's a lot of dynamism happening in the economy. There's a lot of structural change. And during
You also have the
periods
market
of
reacting to
transition,
kind
it's
of
often true
pieces that
labor
Warsh is saying here of how they're going to try to run the balance sheet, how they're going to try to handle things.
parts. And during disruption, they try to recreate a job they had before through the gig economy and other means. We take it into account. Overall, I would say the labor market part of our mandate looks pretty good. The price stability part of our mandate looks less good.
All right, and I am concerned because not just Las Vegas, but many tourism-based industries and hospitality, what we're seeing is lower full employment. And I would hope, and this is a conversation I've had with
Bulls
previous
really
chairs as
thought. Bulls really thought
I
what?
hope that
Bears really thought
considering
they were going to
that
break
it
this
is
thing
the
down
first
5 times
sector
too.
of
It's
employment
this
across
is
the country.
this is
And I
a
know you
consolidation
stated
at
that
all-time
rising
highs.
prices is not necessarily inflationary, correct? At what point do you consider it to be inflationary? Is there a timeline associated with that?
So when an increase in prices in a particular category like oil or like milk,
There's
or
still
eggs,
nothing
when we
bearish
see that
about
broaden
this
out and
S&P
affect the
chart.
generalized price level, that's something we can do something about. That's what the way I think of inflation. When prices go up, I know it hits your constituents every day. I'm not trying to sound dismissive of it, but I also don't want to say that there's much that we can do about cattle prices or milk prices today. But there's a lot we can do to make sure that the entire grocery
It's
aisle doesn't have higher prices.
right at
That's what we're committed to
London
do.
low on ES.
Thank you, Mr.
Immediate
Chairman.
6-7 point
Chairman
bounce.
Warsh, on July 18th, almost
Gap
year
fills a
ago
little
today,
bit lower.
President Trump signed my legislation, the Genius Act, into law. A thorough rulemaking process is absolutely vital to ensure that U.S. dollar dominance exists here in the digital age. And I look forward to seeing the Federal Reserve's ongoing work in this matter. I just want to make that point clear. It's important, needs to be done, and very much appreciate the Fed's attention to it. I want to turn now, though, to a broader concern, and that has to do with the independence of monetary policy. You've had a number of conversations with my colleagues about this. I want to emphasize something that I think is quite important. The special insulation that
Decent
the
amount
Fed
of buying here on
receives
Bookmap, actually.
with regard to monetary policy, I think as far as I'm concerned, it shouldn't extend to every other function of what the Fed does. I think it should be limited
This bottom
to
wick at
monetary policy.
SPY and
For example,
ES are
you think about
pretty
bank regulations and supervision. That's entirely distinct from monetary policy. Regulation requires normative policy judgments about capital, about credit availability, about risk, economic growth, the structure of the banking system, all of these considerations.
I'm going to turn on the coffee machine. I'm up
And you think about what's happened
pretty nicely this morning so far.
Strayed far afield. You think about what's happened.
A lot of day left.
Effective climate
Some
policy.
caffeine in me,
Mars
and
failed Basel III proposal.
see what we can do from there.
These decisions are not the same as setting interest rates or managing the
Yeah,
Fed's balance
somebody
sheet.
filled 98.
Quite simply, I think they're forms of executive regulatory power. The Supreme Court has clarified, for example, that the FDIC is subject to ordinary principles of executive accountability. Comparable regulatory functions at the Fed shouldn't be held to a different standard.
Am I short or long today? I'm flat right now.
than the central bank.
It's hard for me to get bearish when Mag 7s are all at the highs.
Independence should be narrowly tied.
It's hard for me to get bullish with SMH down at the lows.
Senator, thank you for the question. Like you said,
do you want me to do?
independence is at its peak in the conduct of monetary
Expecting
policy.
such a, if anything, I'd probably
I believed
start
that when I
selling
showed up
spreads.
at the Fed in 2006. I believed at my confirmation hearing 7 or 8 weeks ago. I believe it now. In the conduct of bank and regulatory policy on things like the Genius Act, My general view is we should be working with our bank regulators, the other bank regulators, the OCC and the FDIC, see if we can't put out our rules together. What I don't think we want is any kind of regulatory arbitrage where firms are trying to game who's got the lightest regulation and race there. I don't think there's anything wrong with us working together with other bank regulators to try to figure out what's the best policy. I've got some extraordinary colleagues at the Fed. They've been able to think hard about these issues. I think those discussions should happen and do happen.
I don't disagree at all with that, and I like your approach in terms of coordination, but there's something deeper that I'm concerned about, Mr. Chairman, and that is, and just make an example, let's suppose a future Congress decides to embed some sort of regulatory function inside the Fed, seeking to insulate it from our supervision, from our oversight. In some way, that could become a backdoor that I don't think any of us want to see. And what I'm trying to make clear is that beyond monetary policy, I'll ask you the question. Do you think that this special insulation applies to other regulatory and supervisory types of functions?
So I spent 8 weeks as a summer associate at a law firm, so I'm probably not best positioned to opine on the Supreme Court. Senator Warren could do a better job than I. I do recall in the most recent opinion a footnote from the majority that says we are not suggesting that if other things
SPY
went
is
to
just
the
right under
proposer,
previous
it
day's
would-
high,
it would
and
get
Qs are
any
right
insulation.
right above
Beyond
previous
that,
day's
I'm
low.
on shaky ground in trying to opine on what the Supreme Court opinion means prospectively.
Yeah, I wasn't looking for your legal opinion, but I do just think as a matter of common sense, I wanted to get that
I
on the record.
like that this guy's got a
there is
decent
real
voice.
distinction here, and I appreciate that. I'm going to turn to another important matter, and that's the monetary policy report that you work with. The most recent monetary policy report added a new aggregate to the measurements, the M2 aggregate, and I just wanted to ask you to explain why this metric is useful.
Lord of Wall Street, you think the Mag 7s are shitty stocks?
Senator, that was an Easter egg that we hid in there to see if anyone read these monetary policy reports. So I'm encouraged that you did. There is almost a page talking about M2 and monetary aggregates. That was done with a purpose. I do not show up here as a monetarist. I do not show up and say the secret to inflation is if we only knew M2, everything would be swell. But monetary aggregates had been taken out of the monetary policy report probably about a decade ago, maybe a bit longer. My view is that a modern central banker should have a mosaic of information and should not be allergic to any data that happens to be inconsistent with dogma that he or she might have been taught in Econ 1. I have this old-fashioned view that
And the Mag
monetary
7 should
policy has
change.
something to do with money. I remember an old professor of mine that said, who was a proper Keynesian economist, he said, well, I don't understand how to think about inflation in a place like Zimbabwe without talking about money. So I think money matters. What we witnessed when we looked at some of the monetary aggregates is they are
They
not
have zero
perfect. We
upside,
don't measure money
zero,
very well. We don't measure
overcrowded.
the velocity of money very well. But it's a pretty good cross-check.
And far from growth
And had
stocks
we
away,
seen the
far from having
surge and paid
potential to move
attention to the
massively.
surge in inflation and money in 21-22, we might have seen this problem sooner. I apologize, Mr.
Senator Smith.
Thank you, Mr. Chair and Ranking Member. Chair Warsh, welcome to the committee. So you may know that Minnesota Senator Hubert Humphrey, who's once held the seat that I now occupy from Minnesota, led the charge in Congress to include maximum
could just,
employment as part of the Fed's dual mandate. And we can probably agree that keeping
Ask
these two goals
ChatGPT.
of maximum employment and stable prices
Mag 7,
within the
year-over-year growth
the
rates,
monetary
NVIDIA
policy
73%,
power that
Meta
the Fed wields, that
24%,
just makes sense. Because
Google
it's a
18,
strategy that
Microsoft
delivers
17,
stable
Apple
prices.
16, Amazon
You know,
14.
a strategy
So other than
that
Tesla,
delivers
every
stable
Mag 7
prices
is double-digit
while
growth.
working people can't find jobs or can't afford their lives. I mean, that's not a healthy economy. I expect you to agree with that.
And I do. Thank you.
So I was very interested in
I
the
don't know,
task
you said they weren't
forces
growing.
that you established last month to advise you on reform and
I don't know.
modernization. And I want to just ask you about one of them in particular. You've created a task force looking at productivity and jobs, and that's really good, it seems to me. This task force should be able to.
I mean, the thing
get
is, the
at
Mag 7s
power
haven't
of
done
the
anything in,
Fed's dual mandate
what,
and
7
ask
months?
Also, some of the big questions that everyone is asking about.
There's your
the
consolidation,
power,
right?
the impact of AI on wages and people's income and employment. So let me just ask about this particular task force on productivity and jobs. So as I understand it, It is led
Bears
by three
always use the
people,
term
venture
priced in.
capitalist and investor Mark Andreessen, who's made billions from AI and is a major Trump donor. Another tech executive who recently laid off thousands of people, and then an academic economist from my alma mater, Stanford University, who is currently on leave to do research at Anthropic. So I want to ask about this. Is there anyone on the task force who has experience in the labor market, or somebody who can bring the perspective of an employer rather than an investor to the questions that are going to be asked and hopefully answered by this task force?
So if I could say two things. One is those three people you referenced are three of the smartest people that I know. And I've been...
I'm not disputing that. I'm wondering how you intend to bring into
Brewster,
this work the perspective.
you can go look
of
up my
people
stats if you
who
want.
are working people, bring in the perspective of labor and not just investors.
I think it's a fair question.
5'10".
I've got 18 colleagues who are going to join
It's literally
me and
online.
consume the deliberations they have in the report, and we're the ones that have the dual mandate. And as I said to your colleague, there is no disfavored part of our mandate, and we're awfully focused on full
There you go.
employment. So that's my commitment to you. We haven't outsourced this decision to three people. What we've outsourced to is a bunch of thinking about this massive technology shock. And I'll only note one other thing. Chad Jones, that professor that you mentioned, his academic work, he's an academic, I'll admit that. But
And I'm not opposed to that. I'm just trying to figure out.
It doesn't look like me.
Very, very focused on what is the effect of the labor markets
Well, it
of
was
these technology shocks, both
14
the good
years
and the
ago
bad.
almost.
And I think that history he can bring to bear to the work of the task force.
So can you understand why a task force that is led by people in large part who are likely to get richer by AI might not be the most credible people to folks on the ground who
Yeah,
are doing
swap the
work,
hair
who
from the
are
top
worried
to the
about
chin.
what impact this AI is going to have on their jobs. And there's the concern, of course, is that the productivity
Oh, we just run
that
the
is
Oklahoma
expected to
drill.
be delivered by AI, if that actually happens, that the benefits of that productivity are going to accrue to capital and not to labor. And that, it seems to me, the credibility of this task force rests on hearing the perspective.
We've gone
of working
sideways for an
folks
hour.
in their deliberations.
I would expect before they come to their conclusions, they are going to hear from folks that will be affected. They are going to hear from
Yeah, so like
employers that are
NYG, I agree to some of these
this
points.
technology shock and have disruption in their labor force.
Like the opportunity
But I don't wanna
costs.
suggest to you that
Sure,
in any of
yeah.
these task
Like,
forces,
but here's the thing: Amazon going sideways for 5 years, one of the best companies in the whole world.
different backgrounds. But what
Is
I
that
wanna
not a
tell
big
you
enough
is
base
you
for
think
it
they have a
to break
credibility
out?
deficit? I don't. I think they're
Is
incredibly
Amazon going to
talented,
die?
and we will make sure to take both parts of our dual mandate in consideration of their output.
I think the issue, sir, is that when there are the big guys sitting at the table, is there anybody sitting at the table who's bringing the perspective of working people to those really important questions? There are labor leaders, there are labor economists, they are folks whose expertise is in issues around wage stagnation and how that impacts working people. And
For some reason, I have a feeling that Rooster is the same width as he is high.
heard on the side, but to be actually at the
Like
table
old-
with the
old
big
block
guys,
body ass.
I think that is a credibility issue that you could address very easily. Thank you, Mr. Chair.
You're welcome. Senator Tillis.
I need to go grab my coffee.
Good morning. I think you're doing a great job today. I appreciate your composure. Mr. Warsh, a quick question on just immigration. You know, some people are proudly discussing how we had almost net zero immigration in the last quarter, but we're starting to look a little bit like
Yeah, nobody says they're 6 foot unless they're not.
replacement rate in terms of natural replacement rate. So if net immigration were to remain near zero for an extended period, how would that change your estimates on GDP, the neutral interest rate, and the amount of non-inflationary job growth the economy can sustain?
We're holding here long enough. It feels like we're going to push higher.
I think Senator Cortez Masto's question too about jobs unfilled, but just curious.
Thank you, Senator. You sure didn't toss up a softball there. The way I think about it is immigration policy is
Frosty dog.
I don't want you to talk about policy. What I'm trying to do is communicate to the American people we can make the mistake of Western Europe, Japan, and other industrialized nations, or we can fix this population growth problem. If we don't, these are policies, then how does that make your job more difficult if we were to sustain the current trajectory?
The way those decisions affect us is it affects
Come on,
potential
let's
GDP.
find a way to get long so I
The hardest
can.
decision we make is what can this economy produce? How fast can we grow? Potential GDP is a function of two things. How many hours are we working? People in this country working.
But just in a word, because I want to ask a few other questions.
And then second, productivity. If
This should run a nice 15-minute hammer.
Just a real quick question. Would you be thrilled to know that we could guarantee zero net growth for the next decade because that would make your job easier?
We're going to take the number of hours the American people and your policies produce, and we're going to do it the best.
We got a problem. You can't fix it. But what I'm saying is if we're trying to make your job easier, having this on the agenda is not going to make your job easier. And I understand the position you have to take, but I want to point to something that people are high-fiving and talking about net zero immigration growth as if it's
I want to click long here. I'm going to go grab my coffee instead.
China and other nations that didn't get their replacement rate right. You know, bringing in great people that may have been born in Colombia and aspired to become a senator, for example. Those sorts of things. I mean, didn't get it right every time, but no. Mr. Warsh, I told you also, and just for the American people, do you have a magic wand where you can just walk in and convince 7 people of the FOMC to vote exactly the way you want them to?
Perhaps I wish I do, but I do not have such a wand.
So you are one of a body where you have to gain consensus to make an interest rate move, right? Monetary policy move, right?
Yes, and it's a consensus-led organization.
And based on some of the comments from even Governor Waller, who we'd consider to be, pretty hawkish just this week, he's not guaranteeing that we're going to be able to lower interest rates anytime soon based on data-driven decisions. Did that just occur this week? In a speech, I think, up in New York?
There are a diversity of views. I wouldn't want to dwell on any one of them in particular.
No, it's okay. But what I'm trying to explain to people who think the president can give you a call, you make a decision, it happens, that never happens. Wouldn't have happened under Powell, wouldn't happen under you, wouldn't happen under anybody who's responsible chairman. I just wanted to make that point. The last thing, if you could just tell me, I know you don't want to get in, I think Senator
Big old
Britt asked you some
barcode.
questions. I love the fact that you're doing reform. I would like to see the project charter for the task forces, if you have that, if people are managing this, milestones, any sort of dashboard you have, the things that any well put together set of task forces would have assembled.
All right.
I'd like to get track. Not necessarily for the record.
I'm going to try long.
Have a meeting with the people running it with me. I'd like to
6:32.
play out over the next 6 months. And then lastly, if you can, I believe Silicon Valley Bank is a classic example of why the Fed needs to have its independence on monetary policy, but on bank examination and supervision, I believe a U.S. senator should minimally be able to go into a SCIF and understand
Stay strong, Rooster.
Banks like Silicon Bank had multiple matters requiring attention and then matters requiring immediate attention well before they failed. And nobody knew except some examiner and likely people.
Come on, give me 660s here for Trump.
That stuff has got to change. I don't see any rational basis for that independence, and we've got some legislation I'd like to talk with you about. Thank
Google
you.
is screaming higher.
The chair recognizes Mr. Warnock.
Well, thank you so very much,
Lucky
Madam
you.
Chair. The American economy is heavily leveraged on the success of artificial intelligence. And this is an issue that I'm very interested in, been engaging and talking to folks in the industry and folks outside of the industry, various stakeholders. According to a Bloomberg analysis, AI spending most recently climbed to about 8%.
They're still selling this
US
thing.
gross domestic product,
Come on.
driving the country's
Come on.
economic growth. Chair Walsh, you have long been bullish on AI. However, up to now, despite investors betting big on them, none of the major AI models have been meaningfully profitable. what are the consequences to our
This
economy?
is actually a pretty good
if none of these
question. I don't know if he's already got an answer,
ever
but it's a
become
pretty good
profitable?
question.
So if they were to disappoint investors, I think the capital markets would dry up for them, and
Chat
some of
pecking
that
at each
capital
other.
investment would be curtailed.
I guess that's one way of putting it. I guess I'm getting at where ordinary folks are in the midst of that. The markets, behind the markets are real people who have retirement savings and who are trying to make their present as well as their future work. American retirement accounts are increasingly tied to AI. And so there's the
I don't like that we're still not able to get over
issue.
IB low.
Driven by massive increases in the stock prices of chip and AI companies. You might talk about the current markets in a way. It's sort of it's tall and narrow. Let's imagine if we are in an AI bubble. What would happen to our economy and more specifically Americans' retirement savings if that bubble popped?
So I think it's a fair question, Senator. I take it seriously. I'm not in the business of providing a Wall Street newsletter, but I'll say broadly to your question about the effects on the economy. Booms and busts do not help the real economy, and they don't make the central bank's job easier. What the central bank is trying to achieve is price stability, full employment, all in the context of financial
All right,
stability.
I just added a little bit more.
The question of these AI companies, certainly the surge in their investment and the surge in their valuations is notable, but I'll also note one other thing, Senator. Over the course of the last couple of months,
18 is my
we've
average.
seen the market cap, both of the public companies and of private companies, under some pressure. At the overall indices, we do seem to see a broadening out. Now, why is that? Because earnings now for the last several quarters more broadly are moving up. I don't want to suggest that that should give us any complacency.
Come on,
What
buyers.
the Fed's looking for is economic strength to broaden and the inflation that we talked about earlier to become more narrow.
So I'd be worried about a massive economic slowdown. You know, the impact of
ASML has a headline out.
and I'd be worried about job losses.
ASML plans price increases for chip
prices
making equipment
tumbling would
despite
mean
TSMC
Americans could not
resistance.
retire
It's
as
from an exclusive to the information.
And I don't want to see taxpayers holding the bag should this AI bubble pop. I'm not against AI. AI is not going anywhere. It has both promise and peril. I just want us to be thinking critically about this from all angles. Earlier this month, you announced a new task force to assess the effect of AI on productivity and jobs. The three individuals you chose for the task force
All right, I'm
are
gonna put my
tech
stop there for
executives
like 580s.
who have directly worked for or with AI labs, all three of them. Yes or no, will the Fed include anyone on this task force with an alternative viewpoint on AI? For example, anyone who represents the workers whose lives may be upended by increased adoption of AI tools and technology.
So, Senator, it's a fair question. As I mentioned to your colleague a few moments ago, what I'd say is one of the people on those
Oh, we
task
got some
forces
toast
is an
and some
academic.
eggs,
Now, I
too.
don't want to suggest that the academic
And
is
some coffee, and we're
representing
long.
some
You don't want to
labor
suggest
groups.
that the
make it a good
academic
morning.
is being academic.
I don't want to suggest that, but this isn't a faculty lounge discussion. What I do want to suggest is
A lot
that
of liquidity
academics'
bands
work
above
has
us.
spent a lot of
Go
time
check
talking
those out
about
on the
prior
book map.
technology shocks and the displacement that it has on labor. The assurance I can give you is that these three people on that task force, like the other task forces, they're not the deciders. You're talking to one of the deciders.
Right.
The 19 of us around the FOMC with a breadth of backgrounds and interest.
I'm not
we're gonna
trimming till I
decide
get
what we think of their
660s.
conclusions.
Yeah, but as a decision maker, I always want various viewpoints. I certainly have nothing against an academic expertise. I think that's important, and it's too often ignored in some of the appointments that we've seen around here lately. But here's my problem: Americans are worried about what AI will
Senator,
mean
you're
for the
talking
economy.
Rooster, he just
I'm
needs to get
wrapping up,
laid.
sir. And I'm worried that this viewpoint.
Maybe we can get
isn't
Rooster one of those AI
represented
girls.
at the Fed, and I would look to broaden.
Senator Lummis, your
perspective.
time is yours.
Thank you so much.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. I have a couple questions about bank supervision before we go to monetary policy. The first one is Vice Chair Bowman has ordered an independent review of the supervision of Silicon. Applaud her and support her efforts there. So have you instructed your staff, including the attorneys in the legal division, to cooperate with
Starting
the
to add
independent
some
So thank you so
some
much.
orders up here above us on the book
Call
now.
for a review of what happened around Silicon Valley Bank preceded my time at the Fed.
Yes, it did.
But I'm certainly aware of the ongoing investigation, and my general rule is that we should be cooperative to investigations, and we should try to get to the bottom of the facts of on regulatory and supervisory issues.
You know, there are rumors that there may have been destruction of records by some of the staff at the Division of Bank Supervision, and of course that's a crime. So if records relating to the supervision of these banks were intentionally deleted by staff before you were at the Fed, before you ever became chairman,
Come on, let's get this
will
15
you
minutes
order
with some
your
follow-through
staff to
here.
assist in recovery of these records and cooperate with law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here. But I think we want to get to the bottom of
Rand says no plans of negotiations at the moment.
Want
Focused on
access to
defense.
things. There's no reason why they shouldn't have access.
Thank you. I want to turn to a proposed rule that is being considered and ask for your thoughts on the proposed rule. And it has to do with the Federal Reserve Board's payment accounts. Skinny master accounts is kind of a term that's used. You know, my staff has told me that if a doctor submits statements to an insurance company, they have two choices. They can pay 5% in bank fees or wait 90 to 120 days for a paper check. It seems to me that the Federal Reserve is really on to something by trying to join other countries that restrict access to the payment system to consumer-facing banks. We're the only major country in the world that restricts access to the payment system to the consumer-facing banks. So I think you're on the right track to expand the opportunities to serve consumers. And I'm curious about what your thoughts are about the proposal, how it's going, when you expect the rule to be finalized.
Yeah, so as I understand it, this skinnier master account proposal's out for comment. It was sent out before I arrived, but I'm keenly interested in what the comments are. My mental model is that the critical infrastructure, the rails that the Fed runs, should be available to those that are applicable, that can comply with our rules and regulations. If I were to draw a hard distinction, this is a public good, and it's a public good that should be used by intermediaries. Don't want the public good to be used by consumers.
I don't like that the only large amount of orders are down at 152.
But financial institutions, new and old, want to comply with our regulations and take advantage of this public good. My general predilection is to encourage it.
Well, I think that's admirable and important. So that's it's out for comment now. Do you anticipate finalizing sometime this year?
I owe you a better answer on the timeline from here, and I pledge to give it to you.
Thank you.
Thank you.
I share a concern that was expressed by my colleague, Mr. Haggerty, that monetary policy should enjoy the committee not having to be as transparent about its process. I agree with Senator Haggerty also that the bank supervision component should not enjoy that same level of non-scrutiny. I think we need to scrutinize bank supervision. I'm concerned that that area was sort of hidden from public view for too long. And so I want to just echo what Mr. Haggerty said. Thanks, Mr. Chairman.
Yes, ma'am. Senator Kim.
Yeah, thank you, Chairman, and Chairman, thank you for coming on out. I actually wanted to build on something that Senator Warnock was going into.
It's looking like lower.
About AI, and I guess I wanted to ask you. I've seen some public reporting that there was a report produced by Treasury staff for Secretary Besson, the Federal Reserve, and other financial regulators that outlines the risks associated with the AI boom. Are you familiar with this report?
I can't say that I've read that report, but it's certainly a discussion that the Secretary and I have had.
Is that something we can follow up on, get a sense of where the status of this report is?
Yeah, I'd be happy to both engage in the report and share with you my views.
Yeah, but regardless of the report itself, from what I understand, it's raising concerns that that much of our financial system right now rests upon AI meeting expectations for productivity gains as profitability, and as well as raising concerns about the concentration.
There's
in a
153 orders down
that
at
are heavily
500
reliant on
have
private
not
market financing, specifically invested in data centers.
Yeah, that's what I'm looking at. There's
I wanted to just
nothing.
get a sense, do you agree
The only
these underlying
speculations on
economic
below us.
5 minute,
or
and
do you believe
it was
that
just a giant
analysis is overstating the risks?
It's like 5, 10,
This
15,
is
20.
the most important change in our economy in my
65 minutes
lifetime.
worth of
I think it has
sideways action.
plenty of opportunities and also plenty of risks, and I take both of them seriously.
Yeah, I mean, it's something I'm trying to
We're
grapple with
ranking
too. So
stuff, yeah,
I'm not expecting that you have a fully baked answer right now, but I hope we can work on this together, because I do think when we're looking at that future, trying to think through the data, I'm trying to think
so
through
on
what
your
data is
book
going to
map,
allow us
you
to
see
understand
the,
how exposed we are,
underneath the
what
settings, the
concerns
top,
are. And I guess I would just ask
gauge.
you, as you're looking at the data,
Over to the
how
right.
would you assess our economy, the state of our
Yeah,
economy,
slide that
if we
thing
were
all the
to
way over to the
isolate
right.
out AI?
This
Which
one?
I know is driving so much of our
All the
growth
way to
right
the
now.
right.
How is the
Yeah.
rest of our economy doing?
There you
It's
go.
a fair question. We can start to do
That
a
gets
little
rid of a
bit
lot of the
that.
noise.
So I mentioned in my opening statement the importance of
All that
capital
blue crap.
expenditures to aggregate
Yeah.
GDP.
That
A
gets
good
rid of
share
all the
of that
noise.
CapEx boom is broadly in or
Yeah,
around
you don't need
that.
infrastructure
You don't need
related to
that.
artificial intelligence. Not exclusively,
Mine's
but
all the way over
it's,
to the
it's
right.
part of the real
Yeah.
story here. If I
My
were
volume
to
bubbles
fast
are about
forward
the
12
same.
months,
I've got
whether
a
these
setting on
AI
there
models
where
continue to
each
grow in
individual
their
bubble
efficacy on
will
some
show you
exponential curve
the
or not.
size of
Most of
sellers
this CapEx
versus
is going into
buyers.
things like data centers, new sources of energy. And let's say there was a disappointment on the returns and what AI could do. Many of these investments have alternative uses. But if the question is really how much productivity do we expect to ultimately get from AI, the answer is I don't know. But I'm optimistic that over a longer time horizon, it'll be
And then
quite good for the
also
United
I've
States and
got
good for
the
both
heat
parts
map
of the dual
dimming.
mandate.
I've
Lower
got at
prices
79,
and a stronger labor
80,
force.
like around
Well, I
80.
hope we can work on this together and try to
So
get
up a little bit more.
clearer understanding of just
I
how
just got stopped
much
out.
risk there is. And look, I'm glad to hear about this, this task force that you're putting together about the productivity side. I will just say the concern amongst young people in particular is very potent and very real. And we have to come up with an answer to them. To help them feel reassured right now, because I get it, they are, as you said, more native in the technology, but that doesn't necessarily help them when the companies themselves are saying we don't need to hire as many.
Looks like a flusher, right?
Associates or other
Yeah.
jobs, especially
Yeah,
on the
we're coming down to
entry level
500.
side of things. No matter how much native fluency that they have or understanding and skills, if the businesses are saying, we don't need as many people at the younger, lower end. And so, as you're dealing with this task force, I hope it's something that can interact with this.
Breaks under 560. It should be a nice one.
And hear from them in that
I am
capacity.
pretty bored.
But I also say, we need to make sure we're speaking human about this.
But you know what?
and not
That's
just getting kinda
you know,
caught
I
up
could
in
be
this. So I just
doing a
wanted to
very
flag that
mundane
for
desk
you.
job staring at
One
Excel
last thing
right
I
now.
wanted to just touch
Could
base
actually be
on
working.
is,
I
Reed
can't
mentioned the
buy
concerns
this
about,
with I can't buy this
whatever
more
we
than a
want to call
scalp
it, mythos
without
proofing or AI
the
proofing,
memory
using AI to
stocks
be able to
catching
shore
a
up our
bid and the
vulnerabilities.
dailies
You know, we
just look like they maybe like bounce, but like they also may just let loose too, where they are. We're back at last week's lows.
You talk about
So-
the daily candle.
Yeah, look at Intel, look at Micron, they're all the same. I mean, they all look the same. They all big head and shoulders. Now, head and shoulders usually do not work out, but like these things could, you know, there's room if they break here. And you know what's happening. Like the trade is not going to stop. It's started. Moving into mags out of memory. So that's the trade for the next 2 weeks, 3 weeks, a month. 2 months.
Until they tell us something different, right?
Yeah. So, and obviously the market, you know, if they can't, the mags can't rally enough to uphold the memory sector because there's so many memory stocks. So, you know, I can't buy this until like they stop going down, even for like a trade. Maybe it's scalp during the day. I had a great morning, but like I also just tried to buy it. I'm like, you know what? This is stupid. Like,
Yeah.
I took a $500 loss, and I'm like, this is ridiculous. What am I doing? After having an awesome morning, I mean, I had a huge morning. It wasn't even 10% of what I made, but like, I think you got to be very careful here.
I find that interesting as a data point, Mr. Chairman, because
I mean, it may be a buy, but like we're down less than 1% in MNQ. You know, I've seen so many days we're down, you know, 1.5%, 2%. That I'm not like jumping in.
So the question is,
any of these techs bouncing?
That was a bunch of,
you know, NVIDIA goes, you know, 5 steps forward and 3 steps backward.
Let's talk about full employment for a second.
And that's
SPX is about to come fill this gap,
and then you got that,
which is still green.
Although,
Banks are making all-time highs.
Yeah, Microsoft. I got out of some, and I got out of my costs, and I sold some and moved and bought some August.
That's not good. Things like, for
moved them
example,
out a little bit, doing it the paper gains way. So that was a good trade too. But
we have to clarify twice a year whether you're working, volunteering, or studying would be a positive demotivator for not working. Correct? Meaning it encourages work.
I can't opine on the policies you make, but for
Anyway,
the implications
those are
for
my
the Fed, we're in the business of assessing potential growth. The more hours that are worked and the more
I'll be back. I'm
productive
going to
those
get some
hours are,
coffee and
stronger
some
the
to eat.
economy can be.
Yeah, that's what I just finished. Some eggs and toast.
I'm going to steer clear from immigration and leave it with you and the administration.
I heard somebody yesterday on Stock Talks on the afternoon, you know, 3 o'clock call, saying that the market is not moving with the stocks. How wrong could they be? I'm like, you're crazy. That's not true. They're moving hand in fist, like together. But now you have the benefit of the mags going up. But like, you gotta watch the stocks. That's like a big part of this market.
Yeah, well, and it depends how close you look at NASDAQ. Like, NASDAQ is, yeah, I mean, they are hand in hand. You look at the rest of the market, though, like, the rest of the market, like, pulls in slightly, like 0.25%, while SOX goes down 5%.
Oh,
but
yeah,
then
I agree.
SOX
I
bounce
agree.
back, and then you get a
about NASDAQ. We're not talking
NASDAQ
about
tech,
SPX,
which is, you know, I get it is the market, but
or we're talking, yeah, and it's like you have to have everything come together for a trade. Like this morning, you know, I was with you. I was with you every step. A little early. I had a nice short, so that bailed me out the early short when I had to draw down in the long, and then we hit it hard, which was great. But like, you had to get out on that rebound, or else, you know, it would have gotten ugly. But yeah, you have to see everything come together. It's not one thing.
I mean, like, you just go to the full S&P, and it's like
any
nothing.
sense for
You're
us
right.
to be thinking that
SPX
inflation
is
is being
like
caused by
up
data
We
center
were
investment?
0.38% away from all-time high at
Yeah.
the high this morning.
reality, you have government that's providing tax subsidies.
Yeah, different things
which
act
is
different ways.
lowering the cost and thus
IWM
encouraging
actually
more
come back.
irrational investment. Doesn't
Yeah,
it make more
a little
sense to
bit.
say let's not do any tax subsidies? Now we
IWM.
can't do that here at the
Still
federal
looks
level
good
because a lot
in
of these
chart.
subsidies are coming from cities, counties, and states. I actually believe, and I think Chairman, we should think about providing 100% federal tax on these subsidies, so that if a company wants to take subsidies from some state, tax it at the federal level 100% to discourage it, because I think it's
Yeah, I got.
insanity
I looked at.
for us to use
I tried to buy
taxpayer dollars to
Microsoft at the end of the day yesterday,
multi-billion-dollar
and then I
companies. And by the way,
listened
this
to
is how
A-Man. He
it's
said he's involved
Would you
in it.
agree
And I'm like,
that
I gotta get
seems
it.
reasonable?
I said I can't believe I tried to buy it at 4 o'clock. I couldn't.
Good.
Early. Thank you. Senator also Brooks.
All right, thank you so much, Chair Scott and Ranking Member Warren, for holding today's hearing, and Chairman Warsh.
Did you see
it's
my
good to see you
SpaceX
again.
tweet?
Before we talk
Yeah.
about the economy, I want
No, I didn't. Which one?
confirmation here.
Let me look.
Underneath
We're
my
under
name
questioning from Senator
on
Gallego
SpaceX. I
and
wrote something on
myself.
SpaceX this
You
morning.
said
Like
that
they
the
had
president
this.
never, quote,
I was
generally or
listening to a little bit
instructed
of.
you to
I can't say I
lower
listened to the whole thing.
And your
The
testimony
space
at the
last night,
time,
George
did
Noble, and
contradict
they were,
reporting by the
saying
Wall
how
Street
these
Journal.
poor people that work
So
for
Senator
SpaceX that
Gallego
were,
and I sent you a letter
worked
on
as
April
in the
26th,
kitchen or the
clarifying
cafeteria or
your
welder.
testimony, and we have not yet
How they're
received
suddenly
any
worth $1
response.
million, $2 million,
So
$3
as
million
we stated in our letter,
and
President
things
Trump told
collapsing
the
on
Wall
them
Street Journal that
before
he
they
thinks
can get
you
out.
have to
And I'm
lower-
like,
his quote was,
no, it's
he
not.
thinks you have to lower interest
Sorry,
rates.
my friend.
And under your
I mean,
sworn
these are
testimony
experienced
yesterday,
guys
you
like
said that
shitting
the
all over
president never
Elon.
generally or
And I'm like,
specifically
no, you're
instructed
wrong
interest
because they
rates.
all
So
have
I wonder
collars
whether you
on
just
because the
commit
markets
to
are much more
responding to that
developed than
letter.
when these guys were involved in the markets. you know?
Yeah, when those guys cut their teeth, you didn't have near the tools that you have today. Well, any of those people with
I knew about collars in 2000, 2003. I mean, we were collaring our seats on the New York Stock Exchange when they went public. You know what I mean? We collared them because they went to like incredible numbers. And I'm like, we got to collar these seats. We, as a firm, we own 14 seats. We got to collar them. And we did. And they went to freaking nothing pretty much. And we had them collared. And when they released it for sale, we were protected. Yeah, we didn't get the top, but we got the top, 85%. But like these people are collared, and if they're not, somebody should have advised them. Like, I don't think that this is. I think that it's a valuation thing that eventually will take out like all IPOs. But like I don't think it's like
when the Fed makes consequential decisions.
these people are going to be disadvantaged, and now they have all this money they can't get out, and then they're not willing to work anymore because they get $3 million more. Maybe that happen, but there's someone that will take their place.
no, they're looking for reason to
These boomers
go against this. It's a
but like really, you guys are juvenile.
you know what it is though. It's just
And I didn't get on. I didn't listen to it this morning. Otherwise, I would have gone on and said, you know what, guys, look at the tweet I just put up. But I put it up there just to break their chops today. They all know.
Well, so
like yeah, we make a crash at some point, but like they don't. They don't say when and they don't say where.
they've been calling for a crash since the lows of 2022.
Exactly.
Approved by the Board of Governors.
And more so in the last 2 years.
Yeah. Well, a lot of people have trouble like adjusting to the times.
I think it's jealousy.
It's jealousy. And like the cool thing, I need some online validation. The cool thing to do is go hate on Elon, right?
Yeah. And I think some of these guys are trying to make businesses too.
Oh yeah, they're trying to sell a subscription.
To argue their point of view. My addition to what's already been said.
But subscriptions got to be right for them to extend themselves at some point, and you have to get data points about when things are going to happen, and put your mind at. I mean, I hate Tom Lee, but like at least he makes bold calls and he's boldly wrong, and sometimes he's boldly right. And he's looked at kind of like a clown, but like people still follow him.
Yeah. Well, he got the crypto thing. He was super wrong on. But his other stuff he's done well on. His granny shots like idea thing is a
His
pretty
downfall was getting involved financially in Ethereum.
Just one
And,
last
I mean,
question.
Yeah.
You suggested
that was his that was his downfall. Like, not only I'm sure he didn't lose a lot of money, but like he lost a lot of reputation.
Yeah, I don't know who talked to, like, who advised him on that.
EMNR, like, oh, I'm good. This is my shot at making $1 zillion. Well, if somebody says, you know, if this thing goes up and we make money, you're going to become a billionaire. He's like, oh, okay, I'll try that. Wrong. Stay in your lane.
So look at these Mag 7s, Frank. I mean, yes, Nvidia's weak, but Apple at the highs, Google is still at the highs, just hard trend to the upside. Microsoft's at the high. Amazon's on top of IB high, just slight pullback from the highs. Meta, look at this, this is bull flag pushing on the 15-minute. Broadcom's just sitting down here at the lows going
It's their
sideways.
time for outperformance, finally.
Yeah.
It looks
And they
like to me.
outperformed for 3 years, and they didn't do anything for 9 months.
Suggest that
Big deal.
productivity and the AI wave only impacts one part of it. We've got no legislative orphans, and I think that the effect.
Honestly, Mr. Beast would probably be a good, investment.
Short-term, medium-term, and long-term.
Thank you.
Senator Banks.
Thank you, Mr. Chairman. Chairman Warsh, welcome back to the committee for the first time as the chairman of the Federal Reserve. I was proud to vote for
Look, we're just
your confirmation back in
tracking lower, but holding previous days low. I mean, we probably make a new low here,
I'm looking forward to
and then it comes back.
continued dialogues with you and before this committee for many years to come. You're very familiar with my state, Indiana. We've talked about Indiana a great deal. There's no state in America that has a stronger manufacturing base than Indiana. Manufacturing jobs are the biggest share of our workforce in our state and accounts for about a quarter of our state's economy. For decades, though, policymakers here in Washington have turned a blind eye as foreign countries erode our manufacturing base and rely on artificially cheap labor. But under President Trump, we have a renewed focus on fighting
You
back
probably have a
and protecting
decent risk-reward short right here.
edge. In addition to President
But
Trump's
what you have a better thing is just not getting involved until something happens.
competition by investing in new technologies that help American workers make better quality goods more efficiently.
This does
than
look
countries
like this is the
rely on
back
cheap
test
labor.
for
Mr. Chairman,
your
business
short
investment in
down
the
to
US is
500.
surging right now. Fixed investment grew at a rate of 10.1% in the first quarter of 2026.
The problem I have is, like, what happens if you gap fill right here on SPX and just bounce?
Like AI and robotics can strengthen America's competitive position against the rest of the world.
Be right
especially
back.
when it comes to manufacturing.
So thank you, Senator Banks.
Before I do leave, I do see us coming down to 500. I mean, I think that level has been inevitable since we saw it grow in size on Bookmap. The strength of that liquidity line has grown from like 80 to 95 orders to like 108 to now 142. You got oil regaining the 9 and 21 EMA on the 5 minutes. You've got ES would not want to get involved on the long there. VIX is pushing up. So I drew a trend line on the daily chart for NQ. Let's see, starting when basically down at the lows in June 9th. It was a Tuesday. It kind of splits through the 11th, which ironically is my birthday. And it basically goes through like the lows in late June, the Friday. We're trading on the other side of that trend line. Like, we have closed a candle below that other trend line. So, you know, it's tough. Like, a lot of what Frank was saying is kind of like what I'm feeling too. It's a very tough area to trade. We've had a lot of price action in this area for the past week, and then you look left on the chart and there's still more bars that we've been hanging around. So till we like break out of this area, like, you can't really hold anything for swings or options. I haven't touched in a while, so kind of got to be in and out. It's tough. So I will be right back though.
All right, so SPY coming right into the gap fill here. Probably going to be around the same time we hit this same area on Q again. There are orders that have stacked up down to 62. There's the gap fill on SPY. So if you are short in Q, just keep that in mind. Could get a bounce right off here. A shorts cover at target.
J Duff with the $10 holla. Let's go, baby. Emp, I think we got David from Quantify in the back. If you're ready. You're muted.
Let me hit this real fast, J Duff, and then I'll come back to this here in a little bit. The chart doesn't look good. I talked to Stock Talk about this yesterday and some others. This chart does not look good. Now the story may be fine, the fundamentals may be fine, but right now the chart and price action is not good. The 200-day is creeping up to you right here. That's if you're short, that's where your target's going to be. The fact that these bounces aren't even getting into a 9 EMA on the daily, it's just not showing strength. You broke the trend line that you kind of had building down here, so you're kind of out of saving graces. And if anything, if I draw this lower trend line on the daily, look where it rejected. So you had kind of these two lows, and you popped up and basically rejected right in that area. So now if you're in these, you put 115. I'm assuming that's for January of I'm assuming you meant 27 there. So 115.27. I don't know where you bought them. I personally, just if I was in the trade, I would probably reset. It depends how much they are down. I would probably reset and just go, hey, my entry was wrong. Maybe the trade's right over time, but my entry wasn't good. I would probably want to reset now. Do you want to sell on a huge down day, a 6% down day? Not typically when you have that much time left, but yeah, the chart doesn't look good. You need to see some kind of reaction in this area, and even if you go to the weekly chart real fast, and then I know we've got our guest coming on here to share some great knowledge. But yeah, I would be looking for probably lower even on this weekly chart. Maybe the 50-week moving average, maybe this high from back here. So maybe in the $5, $5.50 range. So somewhere down there. But you need to see some type of price action slow down. Like right now, this is a huge rejection off of a $10, which is, once again, going back to like the IPO. That's a huge rejection and failure to go higher at that area. And it's resetting. It's almost getting cut in half. So I know this is a popular name, but the problem with popular names is a lot of times once they start selling, retail really gets wrecked. So we'll come back to that here in a little bit because I know we have the guest coming on here, but shout out to the super chat there from J Duff. And we'll circle back to this. We'll get some more charts this afternoon, but we do have a great conversation here coming up right now with David. What's up, David?
How's it going, guys?
Can't complain. Little still, I mean, I'd say little consolidation. We're tracking in here just a little bit. I mean, S&P's basically break even. The Dow and the Russell are both green. Obviously, semis, once again, is the story. Resetting some of that leverage and stuff over there. Waiting on earnings season as we just got kicked off kind of, I guess, yesterday into today. What's going on in your world, David?
Yeah, I think just trying to figure out how soon this AI trade is going to lead to real productivity gains in the market. I think this earnings season might be very strong, but I think it's actually less about this quarter results than what the guidance shows going forward. Obviously, our firm Quantify Funds has at least currently a lot of focus on scarcity assets with crypto and Bitcoin and gold. I'm actually quite bullish on both, especially given the pullback we've seen. We've seen a little bit of a bottoming forming in both. And if you look at Bitcoin versus the Qs, it's actually starting to look pretty good. We'll see what war talks have to do with all of that. But yeah, I mean, honestly, what assets are not near their all-time highs right now besides for treasury bonds, Bitcoin, and gold? So we're very excited for what we think is a very good value play right now in both these assets. And people often ask me like what attributed to this pullback in these assets. And, I think it actually very much has to do with both the AI story and with geopolitical tensions. We saw one of the biggest growths in productivity in equities that we've seen ever in the last couple months with the last earnings cycle. And we saw interest rates spike. And, you're talking about two assets here that don't have the ability to have a productivity jump and don't pay interest rates. So we're quite bullish on both of these assets going forward.
Yeah. So the macro side of things, like obviously gold went on an incredible run. We saw silver obviously just go parabolic.
Yeah.
We have a new Fed chair coming in now. What's your take overall? We were actually watching yesterday and some this morning. I finally had to turn it off because you know how that, when they put Warsh there in front of the House and the Senate, they get 5 minutes each and they spend 4.5 minutes just making political statements and pandering and all that. And then they ask some kind of maybe halfway question that he gets to respond to. What are your thoughts so far on Kevin Warsh as he's come in and taken over the Fed? And how do you think it's going to affect, and what should people be like looking for if they are looking at gold, if they are looking at Bitcoin, the anti-inflationary type of trade, the money printer trade, I guess, if you want to call it that, which has cooled off the last few months after it went on an incredible run. I'm just curious, kind of your first takes around those pieces.
Yeah, I think Warsh is definitely a very capable person for this job, so I'm excited to see what he does. I actually very much believe in the story that Darius Dale has been pushing out to the market, that Warsh is a dove in hawk's clothing, right? I think he's stepping in here and wants to appear as the responsible adult. And, even in his comments yesterday said he might look past recent inflation numbers that looked a little bit soft and still increase interest rates. I think he's trying to show he's a responsible individual and that the Fed will have independence from the rest of the political sphere. But ultimately, there's just only one way this goes, is that, we're just going to keep printing our way and hopefully growing our way out of this debt. And so ultimately, long run, I think it's very bullish for both Bitcoin and gold and other scarcity assets, silver, real estate, etc. But that might come with a rate hike or two in the short term, just to show that he is a responsible adult in this room. But I just don't know if he has much leeway to do much else than really play by the same playbook that every other Fed chairman has played by in recent history, especially if we see any sort of pullback in markets. There's just only one playbook that they can use, and I think all of that will be very bullish for scarcity assets. I'll say that I think it's very healthy that the average MNAV, which MNAV is the value of these crypto treasury companies' holdings to their overall market cap, is now below 1. I was definitely worried about some of the extended MNAVs we saw in that space for a long period of time. And if you saw everything that happened in the preferred space in MicroStrategy and SATA, obviously I think the hedge fund world was really attacking some of these DATs and specifically attacking the lack of cash on Michael Saylor's balance sheet. But that's kind of a thing of the past. While MicroStrategy is still trading at a premium to their MNAV a little bit, the entire category is trading at a discount. And I think that's a much more healthy market for Bitcoin and other cryptocurrencies.
Yeah, on the Warsh stuff, I like that he's a younger guy coming in. I do think his pedigree is incredible as far as his background, his education, his experience. So I think all those things are great. And I really actually liked, now he did mention something about like 17 task force. That was kind of confusing to me, but the hey, we're going to use way more data, we're going to get better data metrics, all those things sound good. Like to me, like that, all of that sounds like a vast improvement over what the Fed's been doing, and hopefully it improves the process. So I'm excited about that. I'm excited for him to see how it goes. I don't think the money printing thing is going to slow down. It just doesn't seem like that's ever going to stop. This 2% inflation kind of arbitrary target I just don't think we're ever going to get there. And it's just by the action, even with somebody new coming in, just by the actions we've seen both from the government side and then the Fed side of things, it seems like your anti-inflationary assets, your gold, maybe your Bitcoin, whatever, those things are just going to continue to be a trade. They just have to, they make a big move up, then they consolidate for a while. And that seems to be kind of where we're at right now. I don't know. What's your take around that, David?
No, I agree. And he's even alluded to eventually moving away from the 2% target, but hopefully hitting that 2% target just to show our credibility. And I think the market will determine whether he's able to do that or not, even if he has desires to do so. What we do here at Quantify Funds with our stack lineup, both in its pure form and in the income stack lineup, is target this 100% exposure to both assets. So you can kind of replace these one for one with underlying assets. But what really unique is that we're very active in how we harvest volatility on each one of these underlying assets. And most importantly, right now, when we choose not to harvest a lot of volatility, I think actually the biggest head scratcher in Bitcoin, in my perspective right now, is the fact that we've had this 50% drawdown and volatility is at an all-time low, right? We're at an all-time low in volatility since almost the inception of Bitcoin, definitely since the inception of iBit. And that's why we're so excited what we're doing here on this income stacked offering, because we're actually harvesting as little volatility as we ever have on the Bitcoin leg of this portfolio. And in some instances with our long beta actually being long volatility. So we can both keep that 100% target rate, but also maybe benefit if there is a little bit of a spike of volatility. And, I think that's a leeway that some of our competitors in the derivative income space that have some focus on cryptocurrency aren't allowed to do by mandate.
On the Bitcoin side of things, and I do want to get into kind of the ETF that you guys have constructed over there. Once again, David from Quantify Funds hanging out with us, sharing some great information, some great thoughts around different pieces of the market here. Bitcoin, when I look at the chart, to me, it doesn't look good until recently. This kind of like, okay, golden retrace, your 618 Fibonacci people are looking at that. You look left on the chart, huge consolidation that is kind of bouncing off of over here. So there's a couple like recent arguments you can make that start to make this look better. But up until the last couple weeks, it just hasn't looked good. It just hasn't looked good, just like it's been in a reset. It did make an incredible run, but just a little bit of a reset. What do you think is going on in Bitcoin? Because you mentioned the volatility is super low. A couple things. I don't like the chart, and I really don't like that you have, because of this AI kind of revolution, the shiny object. I feel like the shiny object of Bitcoin, those speculators moved and they looked at the memory stocks and all the energy stocks and everything around the AI build out, and they kind of put Bitcoin to the side. Bitcoin still has other things going for it, right? I mean, there's still somewhat of an adoption curve there. There's still the anti-inflationary side of things. Do you think that maybe as the AI trade kind of levels off and cools off a little bit, that people will start to flow back into Bitcoin a little bit more? Do you think maybe that's part of this, story that we're dealing with?
I think that will definitely help, but I don't think that's necessary for Bitcoin to gain some legs, at least in the short run here. I do think we moved a lot of the speculators from the market. Even a lot of companies that were mining Bitcoin are now moved over to the AI space. And so it feels like a lot of the people who were trading on momentum have walked past it and kind of left it by the wayside. But I think that's actually a very good setup to build a base and a bottom to really grow from here. I think, you have to ask yourself, well, what do other central banks around the world want to consider as assets that they want to hold their balance sheet in? What do institutions want to hold their balance sheets in? I think, treasury yields are pretty much at or near all-time highs as they've been in the last 10 or 15 years, especially on the 10 and 30 year. And, I think fewer and fewer people feel comfortable holding duration as a safety asset. And so, AI is the biggest productivity growth we've seen probably in mankind. And it is the driving force of earnings growth we'll see going forward. But what is the other side of your portfolio outside of just your equity growth productivity assets. I'm a believer in always having some level of diversification. It does seem like if we ever actually do get an end of a war, it might be a pretty good top to oil for years to come, right? What else are you diversifying in your portfolio, unless you are truly just a short-term momentum trader and always trying to find the newest, hottest segment? But you see an ETF like DRAM launch has $26 billion in it.
It's insane.
Insane. I saw you guys had interviewed Dan Niles. I'm a big believer, believer in some of the research he produces. The memory names are definitely going to have a good run for years to come, but it does feel in the short term a little bit overheated. And I prefer to play in spaces that are not the hottest asset class that's being discussed in the market right now. And, I think we could sneeze in a week or two and the technicals on something like Bitcoin could totally change. You alluded to a pretty strong 2-week period here by Bitcoin, minus some war issues earlier this week and Thursday last week. Bitcoin actually had a really, really strong 2-week period. And so who knows how long the geopolitical tensions arise, how long the strait is in conflict. But if you remove the 2 market days in the last 2 weeks that really had pullbacks due to geopolitical tensions, Bitcoin really has had a really nice leg up versus growth assets, versus the Qs, versus semiconductors over the last 2 weeks. So I think it's only a matter of time. You're going to blink and those technicals will look much stronger on this asset. Obviously, if you're a momentum trader, wait for those signals to change. But I think it's very constructive how Bitcoin has performed against growth assets in the last couple of weeks, and I see no reason for that to flip. I think those that wanted to trim or sell some of their cryptocurrency or Bitcoin allocation have done so. You're seeing, everyone from the big banks to big asset managers start trading things, tokenizing assets, and using using Ethereum for things on that side. And, I think the sentiment can only really move in one direction in my mind.
Yeah, you mentioned some interesting pieces there, and I think this is like what we're seeing in the broader markets. If you're any type of institutional investor or somewhat active portfolio manager, and you have anything related to SMH in your portfolio, whether it's ARM, whether it's AMD, whether it's my kids are home from school for the summer. But if you have any of those things, any of those high flying names, Micron, if you've had those in your portfolio, they went up, crazy amounts of percentage, and you probably got very, very overweight in your portfolio with those. And you mentioned some portfolio construction there, and I think that's what we're seeing across the broad market right now. You're seeing money flowing out of the SMH. You're seeing it go into other things that have underperformed for a while. You're seeing, the equal weight of the S&P itself has been making new all-time highs. You're seeing the Dow perform very well. You're seeing, banks are making new all-time highs. The XLF is making all-time highs. So you're seeing those money, rotate out there. And then you were mentioning, gold, Bitcoin, having some, a portion of your portfolio that's just not tied to this super high beta tech. How important do you think that is? What do you guys maybe, I know it's not financial advice or anything, but when you're constructing a portfolio, what are your thoughts around, hey, I need to kind of rebalance and keep, this, basket? Everyone's different, of course, but whether it's, 10%, 15% weighting or something to have a well-balanced portfolio into, some places like gold and Bitcoin and other areas that aren't just NASDAQ names.
Yeah, I think anywhere between a 5 and 20% allocation in what I like to call scarcity assets, whether that's, and it's not just Bitcoin and gold, it could be real estate. I do think gold is a better barometer there than silver, because silver is more tied to GDP growth in the AI cycle. But anywhere in a 5 to 20% allocation, then you might say, wait a minute, how am I going to fit a 20% allocation if I'm a growth allocator? And that's where the concept of portable alpha or return stacking comes in. And this is one of the fastest growing categories in the institutional world. Everyone from JP Morgan, BlackRock, AQR, WisdomTree, return stacked ETFs, and others are using this concept to introduce a little bit of leverage in your portfolio. And it's leverage that doesn't always come with more downside volatility. There's more and more papers coming out showing you that adding 30% leverage to a portfolio without concentration, without overweighting equities, can actually minimize drawdowns in your portfolio versus exacerbate drawdowns. So that's, even if you want to be closer to that 10, 15, 20%, call it scarcity asset bucket that, I think could be a mixture of both Bitcoin, gold, real estate, other assets. That's where using an intelligently structured leveraged tool such as Stacked or Income Stack can really help complement what you're doing on the growth side of your portfolio. And we have BTGD, which is just a 1-for-1 exposure on Bitcoin and gold. And then we have the new Income Stack lineup, which I like to think of it as a derivative income strategy where you don't have to sacrifice total return for income. If you have a traditional cover call strategy, it's going to float. And actually, if you scroll up a little bit higher, we have a very good deck up there on the investment outline. You don't have to choose between total return and income in these vehicles. A traditional monthly rebalancing cover call strategy's beta will fluctuate. This is, I think, probably page like 8 or 9 on this deck, where you might have a beta to the market of 0.75 when that call's written. 2 weeks later, the market runs, and your beta might go down to 55%. And you might outperform on a risk-adjusted basis, but you really have no chance of performing on a total return basis. And that's where this active daily rebalancing strategy comes into play here. If you follow us on Twitter at quantifyfunds.com, we actually post daily trade rationale for all of our trades in the Income Stack lineup. And I think we're one of the only managers that obviously not only discloses our trades, but also gives rationale as to why we're doing it. And I think the last 2 days is a perfect example of that. 2 days ago, we had some calls expiring on Friday this week that had almost no premium left. And we decided to trim them. They were just capping a little bit of the upside. So we got rid of them and the market ran. And then yesterday we decided to add calls again for Friday because they got a little bit more attractive. And it's these small little active tweaks that allow you to both keep your exposure and try to garner a little bit of alpha in these markets. And I don't know of too many other managers in the ETF space who are doing it truly in this active format, where most derivative income strategies, your exposures float and your option strategy is formulaic. We do the exact opposite. We have a fixed target, 100% exposure, and our option strategy is truly active on that side.
What do you guys look for going into a brand new earnings season like we're kind of entering into right now? I know we were talking about rotation, and we've seen the dip in memory kind of coming in, and you look at names like some of the Mag 7s like Meta, Microsoft that have gotten pretty killed over the past few months. And to me, it looks very enticing to big investors to maybe that have been trading memory, right? Been running up SNDK, been trading things like MU that have done very well, maybe rolling some of those profits into things like Meta, Microsoft, some of those Mag 7s that haven't really performed very well over the past few months. It seems like kind of the move going into earnings season. I'm curious what you guys look for specifically and how that might affect ISSB as well.
Yeah, I think there's definitely value in the hyperscalers, as you alluded to. I think what has scared people away from the hyperscalers is that same chart we've seen all over Twitter, where the hyperscalers are now in negative free cash flow, whereas the memory and semiconductor spaces surpass the free cash flow of the hyperscalers, which is something, if you would have told people a year ago, you said absolutely no way that that could ever happen. And all of that is supposed to result in massive free cash flow being generated by the hyperscalers in the future. Like all this CapEx is supposed to lead to profits and cash flow. But that's a tall tale, and it won't just be if it will happen, it'll be when it happens. And so I think you're going to see, we're very curious to see companies that beat expectations and potentially underperform the following day, even with beating expectations, just because I think there's such lofty expectations being baked in that you have to, look at like the financial sector today, right? It's the other areas, the markets that are actually going to benefit from this more than I think even some of the semiconductor space. We saw some very good numbers from some of the memory stocks as of late, and even so, some disappointing stock performance as a result of it, mainly because the expectations have gotten so lofty. So I'm more curious to see how the market reacts to some of the forward guidance coming through on these names. But the ISSB ETF, as you alluded to, is a great way to both keep your S&P 500 exposure, but then maybe start taking a nibble back into the cryptocurrency space, into the Bitcoin space, and stack it on top of your equity exposure. And you don't have to underweight equities versus your benchmark. So if you are looking to take profits down, but you want to keep your full equity risk profile on, that's a fantastic vehicle to do both in one vehicle.
Yeah, it's really good stuff. And it's just nice to have, especially when market maybe is a little bit quieter, but you still want to have exposure to things and just get paid that income. I think could be useful, especially in the choppy market we've been in, or even when things are kind of on a downturn, like you say. Might see some, if we get some rate hikes, might be some dips in the market, might be some bounces in Bitcoin and gold and things like that, kind of flood to the safety assets there. So,
and I think quieter is a very good word
that it can be useful for,
Yeah, and I think quieter is a very good word there. You need a lot of noise coming out of memory and semiconductors for this rally, at least in the short term. Not talking about 6 months, 12 months out, but in the short term, you need a lot of noise coming out of that area in earnings for a rally to continue in the short run. Whereas, as we've seen in the last 2 weeks, Bitcoin and gold can very well be those assets that on those no news days seem to actually be performing very well and have very good beta versus underlying markets in the overall S&P 500.
100%, some great pieces. I'll go back over to you, Ryan.
Yeah, I have a follow-up question, David. A lot of these kind of income-producing ETFs, they do, cap the upside, and that's one of the selling points you guys have got on here is not capping that upside as much. How do you guys, what's the process? You were kind of alluding to a little bit there about, some of the active management of the calls and that side of things, but how is this constructed? Because a lot of times these products, they're good for what they do, but some people look at them and they go, okay, well, I'm going to get the distribution, but my upside's capped like pretty hard. What's the selling point that you guys are working with here? What's the concept?
Yeah, and that's where truly treating this almost like a hedge fund product in the ETF wrapper comes in, where we can rebalance multiple times a day. And our partners and team at Convexitas are targeting a Delta 1 leg on each one of these asset classes, whether it's stocks and Bitcoin or Bitcoin and gold. And by Delta 1, all I mean is, when the S&P moves up 1%, we want to get a 1% move from that in ISSB. And so sometimes that means you have to continuously reposition your portfolio to keep that upside exposure. And, especially now, if you are, for example, a derivative income strategy, and let's say you're focusing on, for example, Bitcoin, you're trying to hit, call it like a 30, let's say for simplicity, a 36% distribution target. You got to generate 3% income a month, right? Your math as to how much of the portfolio you write calls on is not based on your expectation or viewpoints of that asset class. It's just based on the volatility. As we talked about earlier, the oddest thing going on in Bitcoin right now is it's in a 50% drawdown and its volatility is at an all-time low. That means to reach a desired income target that you might have stated in the past, you have to cap even more upside. And that's where having this active mandate that will look past an index approach and say, well, that doesn't make a lot of sense. We actually don't really want to be short a lot of volatility in that asset class in this environment. Really allows you to capture that upside. So one side is choosing when to harvest how much volatility, and the other side is, even if you're harvesting a lot of volatility, being able to actively reposition the portfolio so you still keep that exposure on the upside. The next couple slides does a good job of displaying some of our mindset as to how we're getting the exposure on both. I think it's the next page here. If you go one page further. So we're looking on each individual asset class. What is the implied volatility versus realized volatility? What is the skew of each asset class versus its historical norm? And how does that look at different tenors on the market? And that's how we decide how we construct a volatility harvesting program on each one of these assets. and how much volatility we're deciding to harvest at any given time. So it's definitely active, but we're not actively saying we think Bitcoin is going to go up or down. We're more looking at its options curve versus historical norms in that asset class. And we feel that's a much better source to try to generate some alpha than trying to directionally bet on do you think Bitcoin's going up or do you think Bitcoin's going down? Let's face it, a lot of these assets are going to be swung by what is happening on the geopolitical war front. And those are things you just can't really predict. But trying to predict, is the skew in line with historical norms? Is the volatility in line with historical norms? That's something that we think is a much easier source of potential alpha for funds like this.
Yeah, that makes perfect sense. I also want to go back and just hit on kind of the construction. I know we're talking about a few of these different ones here. Make sure everyone, if you're, these kind of spark your interest a little bit, do your due diligence, go to quantifyfunds.com, make sure you read the prospectus, everything, understand these products. That can be great tools, great spots in your portfolio for stuff. But make sure you go in, read the prospectus and everything. I do like how you guys have that set up where you have the flexibility. A lot of these ETF wrappers, obviously they box themselves in sometimes. I like how you guys have the flexibility on these. I want to go back to BTGD and just the construction around this, where you get the 100% Bitcoin and 100% gold exposure. Just curious, the construction of it, how it works, how the rebalancing to keep that kind of balance between the two. What does the management process look like on these?
Yeah, so we use futures and exchange traded products to get 100% exposure on both sides, and we'll generally rebalance on a pretty tight band. So we're rebalancing 4 or 5 days a week to get back to target on both our exposure legs of this portfolio. And that kind of, I like to say, forces you to take advantage of the diversification benefits. Now, there have been moments over the last 9 months where we've seen some of the highest correlation between Bitcoin and gold. We saw that in the fall. We saw that a little bit during the first leg of the war. And that's very much been the anomaly and not the norm over the last 9 months or over the last 10 years in both of these assets. These assets have very good correlation benefits. And diversification doesn't mean just owning assets that move independently of each other. It really means harvesting that volatility and doing that difficult rebalancing between both of those assets, which we find a lot of people have difficulty doing, just like we talked about on the memory and semiconductor space right now. If you were trying to harvest diversification in your portfolio, you'd probably be trimming some of the semiconductor memory names right now. But as you guys can probably allude to, that's one of the hardest trades to do. And so this forces you to trim high and buy low. I don't want to say sell high and buy low because we're never getting out of the asset class completely, but it's a rules-based approach that allows you to take advantage of those diversification benefits and harvest it in a wrapper. You don't have to make those emotional trades. I think we all find difficulty in truly trying to buy assets after they've been beaten down and sell assets as they've been running up. But to have a vehicle that systematically does that in one wrapper, I think can be very helpful.
Yeah, absolutely. And I just keep coming back to how insane the April and May into June run was and this rebalancing thing. And I have to think that, experienced money managers are reallocating funds out of memory into other areas just to keep a balanced approach. Earnings season's hitting right now. Jordan was asking about that a little bit. It does feel like going into earnings season, like the market's not going to go anywhere until it has the earnings data. The macro side of things, it just seems like, we got PPI this morning and CPI yesterday that were both a lot cooler than last month. So, anybody screaming about the macro side of things being, a market moving piece right now, I think it's going to take a few data prints. But the earnings side of things, it's like, okay, we could still have good earnings in other sectors and the market itself be fine, but it almost feels like we need blowout earnings from the AI trade to go higher, and anything that's like middle of the road down could be, a even bigger reset than we currently have. And it just seems like if you're still over, Go ahead.
You have CXMT going public in China. You have, as you guys alluded to with Dan Ives, you have Apple considering and trying to use their political will to potentially use some Chinese-based memory stock chips. There's a whole lot that has to go right for this story to be perfectly priced. Like, I don't disagree that there may be some point in the future where Micron is a $1,200, $1,500 stock, but the question is, will it be an easy road to that path, or might you see 600 before you see 1,200 again?
Yeah, that makes perfect sense. It's like, is the, I don't know, the alpha there, the big move, is it kind of done? And then, like, I mean, are you going to get another 5-10x return like you did in a lot of these names? It's just very unlikely from the probability standpoint. It feels like, you know, if you miss that trade, like, okay, you could probably still find a basket. I mean, like Dan Niles was saying, and you know, I look at the, you know, the people much smarter than me that look at the fundamental side of things, and they say, well, Micron's still trading at a pretty fair valuation, and we know they have about a 3-year runway. So could that still fit in? Sure, but is it something that you want to be like overweight in right now? And I tend to think probably not. I think it's probably a good time to rebalance into some other pieces of the market. And I'm interested to see what this earnings season is going to tell us, and if it's going to set us up for another leg up, or if we start to, you know, I mean, the rotation has been crazy. And this market, David, is, I mean, the 2 months coming out of that low was just crazy. And the moves that were made in some of those names were just so insane. It feels like, I mean, kind of like gold, last year, it feels like some of those moves, like, they need to cool off and just go sideways for several months to kind of just reset things across the board, you know, let water find its level a little bit. And while that's happening, I think about this all the time. Is it why this is happening? How do I, you know, continue to make sure I'm getting some type of return from my portfolio, and I'm not just overexposed to something that maybe has a better probability of going nowhere? I mean, I start to think about opportunity costs there a little bit too.
Yeah, I mean, I think gold is a perfect example of an asset that was everyone's favorite child for a very long period of time there, heading into the first quarter of this year. And everyone, I think, was a little bit shocked in how it performed in the face of geopolitical tensions. But again, if you just look at the context of who has been increasing buying in gold, it's been a lot of the central banks. And who needed to access their balance sheet in light of a constraint in oil and rising oil prices? It's those same nations that needed to do so. So it made a lot of sense for potentially China, for Turkey, some of these other countries to trim their gold allocations and shore up their shortfall in oil. And that goes to show you that gold did exactly what they had hoped it would do in their portfolio. It was a last resort to provide freed up dollars to buy the commodities that they need to keep their economies churning. And it went from everyone's favorite asset class to almost a forgotten asset class. And, you know, that's often when you can find a base in a rally. And, you know, then all of a sudden the technical guys, after another 5-10% up, will say, oh, this is starting to form a base. And then the momentum names start getting back in. And then all of a sudden it becomes like one of the favorite areas of the markets again. But, you know, the sentiment on all of these assets are kind of at an all-time low in our perspective.
The psychology side of things there, it's kind of tough, and a lot of times because people like to chase the shiny object, and they feel like they're missing out on something, and whatever small little dip they try to jump in on. And, you know, anybody that's done that lately with gold after the big run it made, they were probably a little bit early to it. But now, the way you were hitting on that, I think is an important piece to consider for people. Is a lot of times you need that base to kind of get built again. You want the sentiment like low, right? You want it seems like the best opportunities in the market a lot of times come from when sentiment is just in the gutter. I mean, remember when Google was dead because of search, and sentiment was hitting an all-time low around Google, one of the greatest American companies we've ever seen. And then obviously you see what it's done now. You see software, the sentiment's kind of been in the gutter, but you're starting to see some of good companies from that sector get really big moves. I mean, even like the cybersecurity sector, but you go back a month, 2 months ago, and people are like, cybersecurity's dead, AI's killing cybersecurity. And that sentiment, how do you condition your brain? Or is there like a set of like maybe rules or guidelines that you can kind of develop as an investor and say, hey, I want to check these few things off. Is sentiment poor right now? Is there something, has this been hated for a little while? Is it basing out? Is volatility low? And speculation's really low here. Are those kind of some of the things that you look at on the psychology side of things for opportunities in the market?
Yeah, I mean, look, if you've had one of the biggest drawdowns in gold that you've ever experienced, a 50% retrenchment of Bitcoin, given its volatility, makes sense that a bottom could be forming. And, at the end of the day, markets are supply and demand. And if sentiment is an all-time low, even a small uptick in that sentiment can really change the short-term price dynamics of all of these asset classes. And, just sometimes it's good to diversify your portfolio with things that have had very poor performance over the last 6 months. What has pulled back? It's treasuries, it's Bitcoin, it's gold. There's not that much that is not near an all-time high beyond some of these assets. So I think this is a good way to round out some of your growth exposures in your portfolio.
You've mentioned treasuries a couple times in this conversation, seeing rates where they're at, like on the 30-year and the 10-year, for example, being pretty high. If those start to back off a little bit, do you think people, maybe look at gold and Bitcoin a little bit more from there? Do you think people are interested maybe in TLT? What are your thoughts around kind of the rates and how high they've been? And is it a problem? I mean, a lot of people, historically look at a 30-year at 5% and they go, hey, this is kind of a problem here, unless it starts to back off, and then that can kind of create maybe some momentum into some of these other areas. What's your take around rates and bonds and treasuries and where they're currently at?
Yeah, it does feel like some of the momentum guys have somewhat forgotten about rates. Like every other time we've seen rates this high in the last couple of years, or even close to this high, we start to think, is this truly going to affect equity markets, right? The yield on the S&P 500, I think, is right around 1%. At some point, there's a real rational reason for, especially people who are further in their investment journey and are more looking to live off of their portfolio, to truly consider some of these assets. But yields can only go so high before they start affecting equity markets, and then we get into that cycle of what happens when equity markets fall. That's when the Fed steps in and the money printer starts, and they start buying treasuries directly. And there's lots of expectations in the future of yield curve control happening and capping some of the yields on some of these positions. And that's where I look at an asset like Bitcoin and gold and say that's where scarcity starts to matter again. So I think treasuries become interesting at these levels. But again, you got a dollar cost average in a little bit. I think there's some protection that could be forming in treasuries. But given how much we are printing and the debt and deficits we find ourselves in and the demographics that you see in the developed world, I don't think that's an asset that you can necessarily buy and hold for a longer period of time. That's an asset that you can trade.
Yeah, and a couple other pieces there where you just got a big pop here across the market. I know Trump was speaking, making some comments, but a little pop here. There's a headline. I'm listening in my other ear to see if we get any headline here on this. I'll make sure and get that out to everyone. I do want to ask just crypto. Hold on. Let me see what this headline is. Political says senators are meeting with Trump on crypto bill. There you go. Senators to meet with President Trump on crypto bill.
Time to pimp it?
Maybe so. I don't know. It's to David's point a while ago, the chart has not looked good until recently. It's starting to look better from the area it came off of. The base it's kind of put in here, tried to break down and couldn't. Volatility super low. Now you're trying to retake the 50-day up here on Bitcoin, for example. And if you start to anybody that's short, you start to reclaim into some of this area here. You start to, from a technical standpoint, you start to get at least a nice relief rally again, if not, a potential turnaround here. But the thing I wanted to hit on there, David, as we get close to the end of our time here, the government doesn't seem like they're going to stop printing. It just doesn't stop. And also, it just has a broad general sense. if things start to get bad, whether it's, oil goes back to 100, 120, if, the conflict drags out forever, if there starts to be like a credit issue, maybe all this money being spent in the AI trade. And we even heard the senators this morning, asking Warsh, what are you guys going to do? We don't want the American taxpayer really to bail out, these AI companies for overspending. But I tend to think that they will. I tend to think the government is going to, especially after what happened in, from 2000 and then again in 2008. I think they're going to err on the side of just bailing out and keeping the economy and just printing and printing and printing. They like inflation, whatever. And I don't know, what do you think that in that line as well, that the government's probably got, I mean, we know they're going to spend. We saw the Doge experiment just fall on its face. We know they're going to keep printing, but if things did turn poorly, you think they're going to throw everything at this to keep it together and just turn the money printer fully on again?
I mean, I think it's very important that we have a government that wants to support growth and innovation. And there's no bigger innovation story probably in the history of mankind than AI. I wouldn't phrase it as the government bailing out the AI names, but it's really the government bailing out the 55-60% of Americans who have a lot of their wealth tied to financial assets, and really just bailing out the S&P 500. So I just, there's the amount of lost revenue and lost taxes, if there's a sustained pullback in the market, will absolutely cripple our financial situation as a government. So they're bailing themselves out. They're bailing out the average American that has a lot of his wealth tied to the S&P 500. And obviously they're supporting the innovation cycle that is crypto. And all of those things will be very, very bullish for scarcity assets.
Yeah, I think so as well. Jordan, I want to give you a chance. We're coming towards the top of the hour here. We really appreciate David spending the time with us. Jordan, I want to give you a chance if you had another question or so to sneak it in here in the last few minutes.
No, I think we covered it pretty good. I just always appreciate David coming on. It's been a while since we talked to you. So good to see you and good to chat and good to get your thoughts on the market and what's going on right now, because a lot of things have changed since the last time we talked. So love to see how you guys are thinking about things. And obviously Bitcoin is interesting and we're watching that pretty closely right now. We've been pretty bearish over the past little while, but this is the first time I've seen EMP look at the charts and be like, things actually look okay. Here we're getting a little bit of a bounce. Like,
David, I've been super bearish,
and it's true. Like things are doing, like things are starting to bounce back a little bit here. We'll see if we can hold this range, right? And yeah, no, just great conversation all around. We appreciate you coming on the channel and speaking in front of the audience.
Appreciate you guys having me on. Yeah, thank you all.
Always a pleasure.
David, any final pieces we didn't touch on today that you want to make sure and mention? QuantifyFunds.com obviously is the website. ISBG, ISSB, and BTGD are some of those tickers we talked about throughout this. Once again, please make sure you go in and read the prospectus on these things. David, anything that you want to make sure we mention or touch on here today for the audience before we let you go?
Just please give us a follow. You can subscribe on our website or give us a follow on Twitter at quantifyfunds.com. I think if you are an avid options trader, you'll really like the messaging and consistency we're putting out with our trade rationales. I think a lot of managers try to almost hide from their options trades because they're just formulaic in nature and there's no real rhyme or reason or logic behind them. They're just like, well, we're just rolling over to the next month's contract, but you can really see the insights of a true options hedge fund team on a daily basis. So even if it's just for your own edification and knowledge and options journey, I think this information can be very helpful for you.
Absolutely. I love the openness there, the transparency that you guys are putting out here on the timeline. At Quantify Funds, they're on X. I thought I was following you guys. You guys were following me. I wasn't following back, so I just make sure and correct that. So I've got that there. David, appreciate you coming on. Thanks for sharing the insights. Shout out to you and the Quantify Funds team, all the great things you guys are doing, and we really appreciate you sharing some of the insights here with. Look, I don't care if there's one person in our chat that was listening or not. I get so much out of having guys like you come on and share things. It helps me put together my big picture and reset some of my thinking around investing a lot of times as well. And I'm sure a lot of people in the chat took something away as well. So we appreciate you, David.
I appreciate you. Thank you guys for having me on.
Absolutely. Yes, sir. David, appreciate you. David, are you still here?
Yep, I'm here.
You a World Cup guy?
Oh yeah, of course I'm watching the World Cup.
Who's winning today?
You take it.
I don't know.
Is this not a tough one?
Yeah, who do you
England,
got?
Argentina. I don't know. Like, I honestly, yesterday I was confident Spain was going to pull it off. Today, this is a coin flip for me. I'm excited to watch. This is such a coin flip for me. I like to bet on these games a little bit, or I see a good team go down. I like to buy the dip on a good team. I'm a trader as a sports bettor at times, but boy, this one seems so 50-50.
Well, use that mean reversion concept and let's get people turning the corner on Bitcoin and gold at the same time. So,
hey, there we go. We do look. Bitcoin is due for some mean reversion. Period.
Yeah.
And gold is too. I've been actually trading a lot of gold. I bought a decent amount of gold recently. I think gold's getting ready to make a nice little move here as well. And Bitcoin looks like it is too. Honestly, like I look at the chart. I'm not the most bullish person on Bitcoin, like long term. I like gold, but I'm more of a gold person myself. But just from a shorter term perspective, I've been very bearish in the charts and the overall narrative. And we're at a point now where that is starting to turn the corner a little bit. So we'll see how it goes.
Thank you guys. I will talk to you soon.
All right, David, take care.
Take care.
All right, let's get back into the markets here a little bit. Appreciate David and the Quantify Funds team. Shout out to them. Yeah, we made a little track lower here. I was gonna pull up and see where SPX made it down to. That 75.30, big level right there. Go to the daily chart once again on SPX. The 75.30, actually, that's right there, this version. Right there, once again. All these highs, all this value area, and we bounced right off of it. Bounced off of the kind of trend line. So that's still intact. QQQ. 710, 711 area. Yeah, there's definitely a bounce spot there. Where did NQ get down to? Back into that same, the unfilled gap. The unfilled gap, we finally filled it. From Monday up to Tuesday. There you go.
Nice.
Let's go to NDX. Yeah, so right
we
there.
Almost filled that gap from Sunday. We got like ticks away. We never actually did it on NQ. Crazy.
Yeah. So it's an interesting spot there, a little relief rally, but I've been watching the book map. They've cleared out a lot of the stuff below us. There are still some orders down here. Let me pull that up on the screen. Down at 300, but all the stuff that was built up down here from 460 down to 400 is cleared out. If I zoom back out a little bit, let's see. Yeah, you can kind of see right here when we got down to 400, all of the stuff that kept building up down here got cleared out. So either people covered positions or bought that dip a little bit. So we'll see what happens here. Let me reset this. Interesting. Just kind of pull that back out there a little bit. We'll zoom in. The interesting thing is, like, even with this pullback, like, semis are still getting crushed, but Apple's still at the highs. Google's still at the highs. Microsoft is coming in a little bit. Amazon's still up there. We'll pull back in Meta the last 30 minutes. Kind of trading opposite of the market. So some of you guys hit some shorts there. Well done on that. I did scalp a short right when he was coming on to get down to that 460 area. Closed out of that. I have a pretty good day going actually here, and I have one account I haven't touched yet that I'll be watching to see. Maybe we can play some mean reversion back to the upside. I'm about to mean revert these kids with an elbow here at some point.
The Groms.
And we can reset. We can start looking at some charts. We can look back around some stuff here. I love getting people. I think all of us kind of naturally get that shiny object syndrome where we start to look at, the memory trade or the tech trade or, whatever else is hot right now. and you almost forget to look for, the forgotten assets start to bounce. Or some of you guys in the chat have been bearish, and if you are bearish, then, balancing out that portfolio into some of those, gold, Bitcoin, anything that kind of, income producing assets during, sideways market or pullback, something to keep on your radar. Do your research on. LCDL, I believe, is delisted. I think they just delisted it.
Yep.
Yeah, somebody's about to catch the people's elbow over here. What was I gonna say? Where's Rizzo? Rizzo's been taking care of some business. I don't think he's at home. I think was traveling, taking care of some business stuff. That could be a really good spot for a low on SPX, to be honest. SPY right off that same spot as yesterday, 750 area. If I was going to be long this afternoon, I think I would rather be long ES back to like 7,600.
Do you think those perfect equal highs at 650, 625 will become a target, whether it's later today or tomorrow or something? I don't know.
Yeah, and we still have a decent statistic that says we should come back into 720s. IB retrace. So I would be thinking down here, you get some kind of turnaround look, build a higher low, and you track your way back to that IB low and back into the IB a little bit. ES looks better to me. IWM has come off pretty low. There was a decent amount of volume that stepped in down there at the lows as well. Where's SMH? Yeah, SMH, decent little turnaround here. You're touching the 21. It's actually the second touch of the day, but need to flip some of this to get me excited about longs. I wish I was to be honest, I probably would have tried like 460s, 440s, and I probably would have got stopped out and relonged it and then made up for that. So honestly, probably good that I didn't try. SPY still holding the daily 9. Yeah, basically. Everything about the S&P still looks good to me. Period. Full stop. There's not a whole lot of arguments here. Lower high, and then now you have a higher high here. I don't know. Still looks good. Do you think the June or July NFP highs are significant levels? Yes, I do think they're significant levels. NFP stuff, like from paper gains, has been heavily back tested at a very, very high percentage win rate. Nothing's perfect, nothing's 100%, but you look at this on QQQ, look at the May NFP right there. It's a beautiful bounce spot. As you were overextended, SPY undercut the July one and then reclaimed back over it. SPY's back green on the day right here. Doesn't feel like a green day, but we are green. Google's up 3.5%. Apple's up 4%. Microsoft 2.5%. Meta up 2%. It feels nasty out there, but it's still rotation. Still just rotation. Any copy trading platform recommendations? Ooh, Jordan, good question for you right there from Calculated Risk. I'm assuming you're talking about just like copy trading futures accounts. Jordan, do you want to hit on copy trading? And I think ClearEdge is probably worth a mention in there as well if you're doing automated stuff.
Yeah, I mean, the one that I mainly use is going to be TradeSyncer for doing my normal copy trading of like my funded accounts and all that. So that's the one I use. I've learned that pretty well. It's pretty simple and easy, and I don't really have any issues with it. So there can be some issues with copy traders. I've also learned about some of the glitches that are in TradeSyncer that make you think there's an issue when there's really not an issue. So if you try that out and like you need help, I'm always here to answer any questions on that one, because basically there's a glitch where it's like you'll be in a position and you'll trim a portion out and it'll still say you're in a position for, you know, too many contracts when you're actually not. You look at your orders, you're out of it, it executed for you, but on the TradeSyncer page it like screws up. So we don't have a code with them or anything. We don't work with them, but that's the spot I use. And then ClearEdge also has been working on their own type of copy trader I know about, which you can check out. It's called Echo. We do work with ClearEdge. I would check those out. And then obviously if you're automating any trades, you can copy those trades within the ClearEdge platform pretty easily. So there's that as well. But TradeSyncer is my main one.
I've heard a lot of people that are using TradeSyncer and they like it. Replicanto used to be one that a lot of people use, and it feels like most people have migrated from that one over to TradeSyncer.
Yeah. Again, like I know TradeSyncer does have some little glitches here and there, but it's more times than not just like a physical glitch on your screen. It's not actually happening within your accounts, what I've noticed. So just keep that in mind if you do get TradeSyncer and you're like, what the fuck? It's in my position, blah blah blah. That's why we do it first.
This right here is a really good topic that I think we should talk about a little bit here. Good afternoon. I was upgraded to a live account on my funded futures this AM. So first off, we're going to celebrate big W's in the chat. W's in the chat for somebody going live. I mean, going live, less than what 1% of all traders ever make it to a live account. So luck of the raw. First off, let's go. Let's go. Major W's in the chat for one of the Wolfpack members getting called up to live. Welcome to the big leagues. Now, let's talk about it. The mindset, and we've got a nice little 15-minute recovery happening here on the markets. But let's talk about it a little bit. The live piece is... so here's the thing. You're really nervous about going live. Here's the thing. Go slow and take it slow, because you are going to have some emotional side of things, but nothing's different. The only thing that you'll want to pay attention to being different is if the executions are a little bit different. So if you're a high scalper type of person, or if you set a lot of close limit orders and things like that, you need to double check, make sure that it's working smoothly for you in whatever platform you're trading on. But outside of that, you're going to have to deal with the emotional side of things, but it's all a psychology thing. And what you need to do is try to overcome that, and just remember, whatever got you here is the same recipe that will keep you going. There's nothing different. It's just like a soccer player at the World Cup, whether he was playing in a tiny stadium in Paraguay or if he was playing in, good Lord, hold on.
You're good. Now the live account is a big W though, and I'm assuming MFF, your My Funded Futures. I've traded the My Funded Futures live accounts specifically. I haven't seen any difference in order fills or anything like that. So you should be pretty good. Everything should be pretty much exactly the same. And payouts are quick. The My Funded Futures payouts are very, very fast, especially on the live. But yeah, nothing's really different. I also treat my prop like the prop firm live accounts is still a prop firm account to me personally, because they give you, I don't know what size account you got, but they gave me at the time like a $1,200 account, which is sick, but you know, it's hard to do a lot with that, and anything you do that makes good money with that, you're over risking, and so it's easy to blow. You know what I mean? I still treat it like a normal prop account.
All right.
But
sorry.
But no, it's big W's. The My Funded Futures live accounts are very solid. I've found no issues with them whatsoever, and I trade on TradingView. So
yeah, so go slow, size down. I would still trade like other prop accounts, around it, and just be very picky and go slow as you get your feet wet, because you are going to feel some of those emotions. But just like I was saying, a soccer player that's playing at a tiny stadium in Paraguay and then goes to the World Cup, a basketball player that's playing in the European leagues that goes to the NBA and is playing in Madison Square Garden, a football player that was, playing at a D2 college with 4,000 people there, all of a sudden, makes it to the NFL. It's the same field, right? The dimensions are the same. I mean, there's no difference in the arena, right? The arena is the same. The only difference is the arena's bigger, but nothing changes, right? The rules are the same. It's the same 100 yards, same field goal posts, same 10-foot high rim at a basketball. It doesn't change. So only thing that I would tell you to do is focus on your system, focus on your trades, make sure whatever got you here is the thing that you keep doing, because you got here, you completed this, you've made it to the top 1%. Whatever got you there is what's going to keep you going. There's no difference. There's no change. Like, yes, you're going to deal with it from an emotion standpoint. Just like when you first were passing your eval accounts and getting to that funded account, you probably had some kind of mental hurdle that you had to get over there. This is going to be just the same. The difference I would say is you've already done this once. You already went from eval to funded and started getting payouts that way. You overcame that hurdle of, well, this is just an eval account. Now it's funded. I can make money off of it. And people freak out at that point. You've already got over that hurdle once. So this hurdle is going to be easier for you to get over. Believe in yourself and just keep going. It's all the same. Hey, welcome to the big leagues. It's an accomplishment. And if it doesn't go well, it doesn't go well. Big deal, right? You know that you can do it. You've already accomplished it. You know you can get back if you have to. But I wouldn't even think that way. I'd just say, hey, whatever got you here, keep going. Keep doing that. Lean on that. Focus on that. If you feel your emotions, you're tense, just walk away. Take a loss. Walk away. Get out of a position. Set guardrails on there. If you know that the emotions are going to creep in, set some guardrails. Set size limits. I'm not going to size into anything. Set loss limits, daily loss limits. Set profit goals. Hey, I made a good trade here. I'm up a few $100. Stack up those base hits. The same thing that you've been doing since June. Keep doing it. And here's the thing: you said something changed for sure since June. I'm reading your comments here. The psychology, you think it's going to be tougher, but it's really not. The only thing that's tougher is if you overthink it. Like, you're going to be your own worst enemy if you overthink it, but there's no reason to overthink it, right? It's still, like Jordan said, it's still a prop account. You built up the time and the money to get here. So even though they're putting in, it's real live money at this point, it's still...
That's a free $1,500 you're given. Like, you don't gotta worry about it. Shit, it's
if you lose it,
you just got given.
If you lose it, you lose it. It's not coming out of your pocket, right? It's not your
It'd
money
be
until
different
it
if
hits
you
your
were
pocket.
opening a $10,000 live account. I would tell you strictly risk 1% or less every trade, and I would tell you, strict risk management plan. I would tell you, after you take a loss on the first trade, I would go half risk, 1 to 2 Rs at least, right? Like, I would have strict parameters, but like, you're still in a prop account, even though it's live. Like, it's still only $1,500. You have $1,500 to draw down. You can't trade it like a live account, really, in my opinion. Like, you still got to treat it like a prop account for the most part, right? And so that's where you don't have to have that stress, I don't think, just because it says live. You know what I mean? Just take that stress away, trade it the same way you've been doing it. Dude, you kill it.
Yeah, just keep focusing on what got you here and keep doing it. And like you said, when you're looking back at June and you're seeing what changed, go back and review. Hey, what did I do in June that got me to where I'm at? Go back and look at those. What trades did I take? What rules did I follow? What mistakes did I avoid? And I think that's a big one. People go back and review their winners all the time. You need to go back and review your losers too. Or, hey, what did I do right here that kept me from having a big red day? Hey, I have, 4 green days this week, but I had a red day, but it was a small one. That's a great job. But what did you do that allowed you to do that? Go back and review those things if you're not feeling confident about it. So there you go.
Bangers.
But big hats off to you. Big congrats to you. Once again, that is not easy. Not easy to get there. And then the one last thing I'll say, start trading in that live account and get used to it. And think about your end goal here. Your end goal should be, let me get comfortable trading real money in the market. Let me try to make some more money, of course. And then I think MYG set it up higher. Let's get your actual live personal money account. Use the prop firm to fund that, and use the prop firm to get you ready for that. That's the whole point. The whole point of these prop firms is to get you trading. They can be an income source, and then your end goal should be, I want money in my pocket, I want money in my long-term investment, and I want money to fund my own account so I can start trading my own money. No profit splits, no guardrails may be a bad thing for some people, but you've trained yourself within guardrails, stay within those, and then boom, hit that end target of becoming, a true real trader in the futures market, trading your own money. Man, I'm fired up for you. Let's go.
Fired up.
Yeah, start a Discord and sell a course. Boris is ready to sign up. He's going to pay you in coconuts.
Nice.
Boris, big coconut guy.
Is he? Okay, noted.
Yeah, big coconut
Boris,
guy.
you going to be at the event? If you're at the event, I'll bring you something special. No, I'm poor. Damn it. What if me and Emp flew you out?
Hell no. Hell no.
What if though? That'd be fire, dude.
I might charge Boris extra.
Show me your
I will show you my coconuts if you come.
Yeah.
If Rooster showed up, I would buy Rooster a drink. Just to watch him in his element try to go after some
Rooster
women. Oh my
shit
god.
housed. We'd get him shit housed.
Rooster, I would love to give Rooster like 3 drinks and just watch him just go after every chick in the bar. Oh, dude, he would just oh, female. Can you imagine Rooster at the bar looking over and being like, all right, this chick right here is not bad, but there's kind of a lower high forming. But over here, I've got a good level on that one down there at the end of the bar. A great level right there on that one at the end of the bar.
Rooster out in the bars, dude. I don't know if we can handle it.
Rooster might get us kicked out. That's harassment, brother.
Never average in Unless you're starting out not with your full position. Like me, I can't average in because I start out with like risking the total amount I want to risk. The only way I average in is into a winner. And I am only averaging in if I'm able to move my risk to what I was normally risking from the start. But if you're starting out saying, I'm willing to risk 500, but I'm going to start out with one contract, that's different. That's something you see EMP do, where it's like, that's where I find it a little more okay to add to a loser.
If I have a
Even though I
zone,
don't subscribe to that thought, like I don't subscribe to adding to losers at all, but I do see where it works doing it like that. The way it doesn't work is you're willing to risk 500, you do it, and then you average down more. No, it's either you're willing to risk 500 and you start out small contracts, and you can add to losers, or you're willing to risk 500 and you're only adding to winners to that and keeping your risk the same. I don't see any other way to do it profitably at all. So that's how you have to do it. I think if you're sitting there going, I'm gonna risk 500, and then you're like, no, I'm gonna risk 1,000, I'm gonna add more. That's where things get rough. Obviously, with
don't do
you
that.
can probably still figure out how to make some money, right? But you're gonna blow a lot more accounts. So it's just a give and a take, right? It's the same thing as like lower win rate, higher R strategy, or a higher win rate and a lower R strategy, right? You just pick your poison where it works for you more. But you can't really have the best of both worlds, meaning taking the full position you want and then adding to that full position more. It's just not conducive for profitability in the future.
I bought some Q0s while you guys were on the call.
Nice.
Someday,
Nice.
I'll tell you.
Frank, you've been ripping trades, dude.
Ripping it.
Frank this morning, he's like, yesterday morning, he called the short pre-market, shorted that shit on the morning drop, and then today you called the short too. You're short all morning. That was beautiful, man. Killing it.
all right.
I could probably.
Oh my god.
You're over 50% retracement of the range from the low to the relative equal highs at 656. If you're long and you're holding runners or trailing stops, I'd be looking for those perfect equal highs, 656.25.
Bookmap's telling you 600 right now.
Yeah, I can see that. We have a short-term high to the left here, right into 600. Makes sense that there's a lot of orders there. That's where, in this scenario, even if you're looking for higher into those equal highs, I would just be trailing every low. So like that low we made at 115, my stop would be sitting below that. If we consolidate and make a next leg up, where's my stop going to go? Below the low of the range that we make right now. If we start consolidating, right, you just keep trailing and trailing and trailing until you either get stopped out or you get your TP.
Order filled.
I have a beautiful video of me executing on my X timeline, and it's on the Wolf Trading timeline. It was either yesterday I posted it or the day before. If you want to see what I'm talking about there, like just trailing your stops. How to properly do it.
All out of my zeros, short,
nice,
and Q.
Animal.
A little bit. For a minute here. Just for
There's
a minute.
still orders growing up here at 600.
Order filled.
Yeah, take it to 600s, that short-term high. That'd be nice to see. And we'll see if we get momentum over that. If we do, I expect equal highs. If not, if we get wiki, maybe we got to breathe for a minute.
Can we finish talking about TE? Yeah, absolutely.
See?
So you just hit the 200 day during that last little pullback. And look at this, and like you're already getting a bounce there.
I'm going to put your chart up bigger so he sees better.
Yeah, please. Sorry, I just
No, you're good. I know
here.
you're showing Bookmap. I know. You're good.
So right there, you have the 200 day touched. So shorts, that's a spot for shorts to cover, take profit spots for some passive people to buy. So you're getting a little reaction there. My take is that it's going to take some time. Like I don't think this thing's just going to V back up. unless there's some like fundamental reason for it to. I don't think it does. It's not a bad spot off of this 620s. But just the way it's acting right now, I mean, yeah, I would rather see it kind of, you know, base out or something. Maybe come undercut this and get back over. It's just like this just isn't a chart that looks great right now. It needs some repair. But if you're down, you don't sell and close out of a position typically when it's hitting the 200 day, and it's, you know, it was down 6-7% on the day. Plus it's down what, a ton this week. So if anything, if you're concerned about it, you know, I'd probably try to wait and see if I could see it back test, hit the 9, maybe back test up here a little bit, and then get out. Other line I think would be just cut your losses and reassess. I mean, if you look at this, does this look like a good long entry? Not really. Still have a weekly gap down here. Could be. I mean, it could be, but I just don't feel... I don't feel like this chart looks good. And actually, I mentioned this to Stock Talk yesterday, and he's like, yeah, the chart doesn't look good. His thesis is still intact, but the chart's not acting right. Something about Disney FTC ruling is closed. Yeah, I don't have much else to say about TE because it's just you've broken too much structure here. The shorts kind of played out. So like if anybody was short, this is, you know, your main target. But I don't know that there's just not enough here that tells me, hey, like you're gonna get a huge rebound here. I mean, you could say one good thing is like even on some of these selling days, the volume has been pretty low. There's been a little bit more buying. There's been more volume on some of the green days than there have been on the red days, other than this one huge down day where they did the offering or whatever. I don't know. Evan's in the stock, so it's probably not going to go anywhere. That's about all I got for you on TE, to be honest. I mean, if we're looking at, so if you're looking for solar, I mean, FSLR, does this thing start to slow down and base? Now, just because it slows down, it may do one of these and then try to, but that's what I would need to, like, look, whenever FSLR sold off here, see how it came down here and it based out and then started making the move back up? This is what I look for more than anything. Or even down here at this low. Came down here, it based after a, you know, rough downtrend. It came down here and based, popped up, came back and back tested the base, and then it went on a nice trend. So this base here, breakout, a little bit of a quick back test, not much of one, and then made a nice move. But solar, yes, we need energy, but we have a very anti-solar administration. What is Sunrun? God, this chart looks gross. Sunrun, look at this. Every pop recently has been sold. Multiple rejections off the 200 day, but it is basing. basing, and it's basing over this right here. But this doesn't look fantastic because, I mean, instant rejections at the 200-day multiple times. And then obviously if you look left, support and resistance. It's hard for me to get excited about solar. Now, midterms start to turn around for the Democrats. Maybe you start to think about it. Otherwise, I just think it's going to be tough with the current viewpoint on solar. Dump the Qs. We already went down 1%.
Order filled.
This doesn't look like a dump to me. This looks like a recovery.
Order filled. Order filled.
There you go. Just
Order filled.
pretty large order just filled here at 600. And you should run right to IB low. You see those liquidity bands starting to pop up above here all the way into it.
Order filled.
A little bit of orders popped up at 700, but nothing really. 850 is the other amount of orders, but it's pretty far away.
Order filled.
I would just say compared to this morning, you don't have hardly any liquidity below us now, and there's more above us.
Order filled.
ES made it right back to IB low there, 7,600. Almost at yesterday's high.
Order filled. Order filled.
Like market internals are all positive. I feel like shorts feel like a losing battle. I mean, at this point, they worked very well this morning. Finding a pretty loose. Like, look how much buying is happening here.
Order failed.
Spies hitting VWAP. IWM got over it. NVIDIA is about to hit VWAP from the underside.
Order failed. Order failed.
Even Tesla's getting a bounce. Who was saying Tesla 390 this morning? Frosty or somebody? There's another big order hitting right there on the book map.
Come on. Come on.
Order failed.
This should shoot up into IB low. Or like Jordan was saying, those kind of equal highs there. Maybe you pull back in one more time to 600 or 580.
Order failed. Order failed. Order failed. Order failed.
Yep. Yeah, how about the NFP? 5 minute was a beautiful view of it. Stop holding us down, Frank.
I know. Come on. Let me get these back.
I think it's gonna pop. 635, 650.
I'll be out by then.
But if you're trying to get it, I don't know. It's just stair stepping right here.
Order failed.
This straight up line. Oh, we're getting real close to those equal highs. 650, 650.
You see the liquidity just popping up?
Is it 650, 650, 650, 625? Sorry.
Here's Ivy Low coming right here. Oh, my SPCQ hit like 125%. I did take a little trim on that. A little trim, I sold half. Dude, my kids are wild right now. Well, they broke my door. And I'm still trying to get estimates on somebody that can come put in like an actual full soundproof door. I should go take a picture of what they're doing out here. That's why I keep muting those, because they're just screaming right out here. They're playing, they're having a good time. It's hard for me to like get mad, but now the baby crying earlier, I could not handle that. I just lose my freaking mind. Get down.
Order filled.
Come in a little bit. Come on. Just come in 10 points.
It's got to get up there, and it's got to hit this 40 to 50 area.
By now, it's fucking bullshit.
Just got to wait on it.
Come on, give me a whoosh. Just a little one.
I think you're going to get a whoosh up. Honestly, I thought that's what you were waiting on to try it.
No, I'm fucking short. Too early. Fucking little tiny bit too early. It's a game of inches, centimeters. This is crazy. It's just sitting here.
Yeah. I can zoom all the way in. Look. Hold on. If I zoom all the way in here, There's just nobody on either side. Everyone's waiting higher. I mean, this happens a lot. It's because, like, who wants to buy into, you know, this spot where everyone's about to trim? Right at previous day's high on ES.
Fulfilled.
I'm out.
Order filled.
I'll re-enter. There's stock. There's at 50. There it goes. 50. 60. That was good out.
Look at him running.
Order filled. Order filled.
There is no voice cancel feature on these mics to tune out a 5 and a 3-year-old.
Order filled. Order filled.
Also, I don't know if anyone noticed, I have a pink coffee mug because I made a coffee. My wife put her creamer in my coffee and then made her own. So I took her coffee mug and used my creamer because I don't want that whatever extra sugary stuff she uses. Let's go. Look at this blast through. Once again. 680s, and we should make it back to 724.
Not right now. Come on.
I look at all these stops that are getting ran right now.
Yeah.
Anybody that was short at IV low earlier, that whole consolidation just got ran straight through without even slowing down. Look at SPY's candle right now. SPY is back above yesterday's highs. Flying. And what did we talk about? We're almost at all-time high. We're like half, whatever, less than 1% away. All the internals were... Don't do that to me, stupid restream. Look at ADD ripping off the bottom, still very positive. Never made a new low on internals. Look how strong the internals came off the lows. Never went negative. More buying than selling, even with price going down. And look at this, flying off the lows. And a big rebound on SMH. XLF's making new all-time highs. Oh, I forgot to drop a like on my own stream. What am I doing? Oh yeah, and here's the Gex maps. Once we got back over the negative to the positive, you saw how much faster it started running, and they've just been stacking higher levels there. We're trying to flip back on QQQ. There's 680, as mentioned. Almost a half back of the day.
Okay.
Look at SPX. This is a full-on V shape. And as I was saying, statistically, 720s should get a hit on NQ. Does it have VEX? I believe so. Gamma, Vanna. Look at the heat map here. 7,600 on SPX, or SPX is very high. That'd be a wild move. Yeah, I don't know if it fully has VEX or not. I haven't. Net change. Yeah, you went from negative back to positive, though. I know that much.
Tonight's going to be the big night. TSM. That'll tell us about memory.
Yeah, it's like ASML had good earnings last night, but they sold it off kind of anyway.
Look at that comeback in stocks. Holy shit. 540 to 553.
Why do I expect 720s? Because of... let me get logged in. This right here on the right side of the screen. When you break the IB low, you retrace to the 25% mark 69% of the time. Really 70% if you round that up to a whole percentage. So let me turn off drawings. Here's IB low. Obviously, here's the high. Here's the midpoint. Here's 25%. So there's a 70% chance once you break down here, there's a 70% chance that you come back to here. %70. Break IB low, you come back in. 70% of the time, you make it back up here.
There's also some other data around IB that I found interesting. I don't know if you could see it on Endful, but it's around like, let's say, traditionally we look at if IB high forms first, we look for the low to get taken first. But there's always outlying days, and sometimes we have a day where we form IB first, IB low gets formed second. You're expecting a low to take out, but we go take out the high. And a lot of the time, a way you can tell is by using a 50% retracement of the IB range. So it's, I forget the exact statistics. I posted it over the weekend. I'll go back to refer to it, but it's about a 70 to 80% chance that if we do like what we did today, but we end up like getting above the 50% retracement of the IB range, you have like a 70, 80% chance of going to the high instead. So I found that interesting. It's on my timeline from the weekend. I'll try and look back to it here. Where is it? Yeah, so if we get a candle closure, regardless of which one formed first, above the midpoint after IB forms, you have a 70% chance of breaking the high by noon, and then an 82.3% chance of breaking it by the end of day.
Anyone care to opine? Oh, Ty, by the way, most everyone is hanging out in the YouTube chat on Wolf Trading. But the question here, and look here, I'll just so you can see, this is what all the chats look like. By the way, this puts all the different channels together for us. This is what we see, but SPCX performance today or for the remaining of the week. It hit my first target downside, so I took a trim. Maybe you get back over 135 and go back into the low, the 140, 147, 150 area. But I think it keeps going down, personally. I'm not interested in SPCX until it's like $70 or so. B as in Black Dragon. B as in balance. IB. Do I need to say IV? V, IV, IV, IB, IB. No, Ty, it's free. It's free, it's smoother. It's where everyone hangs out at. The YouTube chat. There's 340 plus people on the YouTube right now. I saw Casey Trades' YouTube turned on and he's not even here. I don't know how that happened, but shout out to Casey Trades' channel too. Let's see, we got about an hour until World Cup, hour and 2 minutes. He's foreign and you're hillbilly. Give him a Black Dragon, are you foreign? We haven't checked in on where everybody's from in a while now. I know Rooster's going to say some dumb shit. From Palestine. From Iran. Let's try that. Who is not from the US? Or who is not from or not currently in the US? That's what I'm really actually curious about here in the chat. Black Dragon. Oh, Chile. Are you in Chile or where are you from? I mean, where are you now? Yeah, we got Germany. Oh, there's UK. Cancun. Ooh, Cancun. Go south or north. Canada, Canada, Canada. I should have said Canada doesn't freaking count. I'm just kidding. Just kidding, Canadians. England. So some people say England, some people say UK. That just makes me think, are you in Wales or are you in England too? Like Belgium, never been to the US. I'm in Rooster's. Oh, wow. Germany. Deutschland. I'm in Florida. We are not US. From California, but live in Colombia. Manizales. UK, England. There we go. What is San Diego, Hungary? It doesn't even make sense. Originally UK, import day today. There you go. Watching from the Strait of Hormuz. There you go. That's great. A lot of Germans, a lot of English. Born in Bangladesh, but reside in DC. There you go. I live in the highway next to New York. Nick, are you going to come by the event? I'm excited. How many, like, what, 15 days, 16 days? I'm flying into LaGuardia.
We're having air quality alerts in New York City.
Hell yeah.
Unhealthy for everyone. Thank you once again, Canada.
Is this Canada's fault?
Yeah, they had a big fire sitting over New York right now.
Oh, it is. It really is Canada's fault.
Fucking Canada's fault.
Canada.
Bastards. They're fucking us. This is all revenge. Great, isn't it?
Well, hopefully it's got 2 weeks to clear out. New England, there's wildfires, red outside. Wow. Western New York. Does Western New York mean Buffalo to you, or does Western New York mean like Syracuse?
I don't know. Western Buffalo may have. Western New York's got issues too.
I have a great aunt lives in Buffalo or Lockport. Actually, I think Lockport is where they actually live now. This is Rooster's fault? This is all Rooster's fault, right? Finger Lakes between Rochester and Syracuse. Oh, okay, nice. Kosovo? I don't know if Kosovo is the 51st state, but... Do you feel this PA is a little more tricky than the past couple of weeks? I personally think it's better, but I am a revert to the mean type of trader. I mean, it has been like a couple times it has like made much more dramatic moves than I expected, but to me it's not tricky. But this is like where the environment's where I thrive. Now, back a month and a half ago, when we were like in that just crazy bull run, like I had to trade differently and just look to try to buy dips off EMAs all the time, which I don't enjoy doing. Come on, let's get up here to the 725. Go figure that I've been calling for 725, and now look at how many orders are sitting at 725 right here on the book map. Right here. Biggest amount of orders in this area. I can see where this PA would be tricky for a lot of people. It just depends what kind of trader you are. I think the bigger key is knowing like what scenario and market that you're in and how you trade in that within that type of market. Like I just don't expect much follow through on either side, especially after 4 or 5 weeks of consolidation. I just don't expect there to be, I expect there to be less and less follow through as the range gets tighter and tighter. But yeah, I guess, you know, for some people, this would definitely be tricky price action. Where's Cindy to the Penny? That's who I haven't. Need to reach out to him. Frank got a little pep in his step, excited for his visitor in New York. He's got that quarter ready, is what he's got. Yeah, Lord of Wall Street, are you like? I wish I would have got long down around 400 when I saw the rest of those orders clear out, but Whatever. Good job, Fenster. Lenny, I love the updates. Please keep them coming. Up $400 today on the Lucid Eval from yesterday's giveaway. Count is locked for trading. Let's go. That is huge.
Double kill.
I like that. Yeah. There you go, Finster. I appreciate you getting that for me. And yeah, I love this type of PA. Two-way action. It's like you have so much level and traffic in here, but as you get extended to one direction or the other, there's just like bounce spots. I love coming into a spot where sellers are going to sellers will cover at a target, potential buyers will step in and get a reaction, and if it goes in your favor, you trim, and then if it keeps going, you ride the train to the next station. What's IB high and IB low? That is the first hour of the market. So like right here on NQ, the high of the first hour and the low of the first hour, which gets marked by this indicator that I have there's a free version of this indicator out there, probably IB or initial balance. The B is for balance. And what it does is the first hour of the market creates what we know by data backed analysis that is an important range of the market over the first hour. So whatever happens in the first hour sets an important range that you can then play off of. If we get through right here, the next spot you're looking for is going to be the midpoint of that first hour, right around 808. Oh, sorry, I'm showing the wrong screen. Hold on. We're hitting the target right there. Boom, look at that. There's 154 orders sitting right here on the book map.
Order filled. Order filled. Order filled.
Oh, and I'll go to the other view in just a second. I want to watch this. There's your target for the 25% retrace that I've been calling for since we broke down. I wish I would have got long at some point, but whatever. Hopefully it helps somebody.
Order filled.
There's still a ton of orders up there that haven't got filled. Let me go back to the IB thing. Shout out to Lenny, by the way. So here's the screen. So the first hour here is the low of the first hour. Here's the visual of it. Here's the high of the first hour, where this green bar is, and where this red bar is the low. And you can see once we broke it, we rejected, came down, and then we made our way back to it, got back within it, and here's that 25% retracement. Above here, you're going to be looking for midpoint. Probably want to front run that at previous day's close in the 80s here, or at least, split trim here if you're still long. If we go to like ES, for example, here's ES. Here's the high of the first hour. Here's the low of the first hour. We broke down, made our way back to it, and we've retraced all the way to the midpoint actually here. And you can look back at like previous days at times as well. I have it turned off for now, but pretty clean look at it right here. And I talked about the gap that we had. We left this gap here. Let me go to NQ, just a clean chart here, and let me turn on the gap fill indicator that I have. So from Monday's close was right here. We opened up here, so we left and we drove down, but we left a gap right here where price never traded. If you go to NDX, it's much clearer. So we closed here on Monday, and then next trading was up here. We came down, we left this gap. And if you look where we bounced right on the gap, and then we went straight through it, filled the gap, here, and we turned right back around. So all we did was come down, fill in a gap from Monday to Tuesday, and now we're right back up. All the way up. And it just so happens that that was right on the fib down there too. So I'm going to take off this that says unfilled gap because we filled it. And we bounce right off the 786 fib. Go right back up. That other fib is in the bigger picture of things. But now I'm watching this intraday retracement from the move down this morning. 755 golden retrace. And if you look at the book map, all those orders just got filled. You can see right here, 167 orders just got filled here. Probably a target for a lot of people from down lower. And you can see there's still 51 orders sitting here a little bit higher. And then I start to look and say, okay, are they building up higher than here? And if you look, even if I zoom out, there's nothing really down here below us anymore, but they've added stuff up here below us. So there's 100 orders been sitting up here at 850 for quite a while. And then you can see some of these little liquidity bands up here where they've started adding orders above us. 770s, 800s. Somebody's already sitting, I mean, we're a pretty good ways away from that. Somebody's already sitting up there on, with their orders in place. And like just from this, like if you just looked at this only, you see all these orders, like, and market's looking for liquidity. Where do you think this goes next? And then I can turn it down and make it just look, filtered a little bit more there. So you don't know if they're buy or sell orders. This platform is called Bookmap. It's just the name Bookmap. Here, actually, I should be getting a discount thing for you guys. 20% off, I think, first month. There's a link if anybody wants to go check it out. Super powerful data platform tool. Very popular. Brady swears by it. I've watched his for a long time, but I wanted to get it on here to add some value for you guys on the stream. It's not cheap. Just like anything worth buying, usually not cheap. And here's the thing, hopefully, for me, because I'm a futures trader, I like Bookmap way more. I think I can get interesting pieces out of both. I mean, look at this. You see how these are just growing up here? Look here on the left side of my screen. This is SPX. Once we flipped back over the purple ones, which is negative gamma, we got back to these. Look how these just keep popping up and stacking up here. See how each one of these popped up? So like this one started popping up. This one right here started popping up. This one right here started popping up. Just like a little bit after each other and just popping up and growing. It just tells me like that's where the positioning is getting put onto. Just now you start getting a little bit of stuff pop up actually above us on QQQ again, which was not happening. So like, yeah, this is a useful tool as well. but I don't know. I'm a confidence trader, guys. I'm building as much, what from price action to structure to big picture to small picture to what are big participants doing in the market. I mean, I'm going through all those pieces. And look, there's VWAP right there on NQ after a crazy trend run. A little pullback probably makes sense here. And we completed the IB retrace that I was asking for. Turn that back off. Right here. Now what I would want to see is IB low down here at 640. I'd want to see that hold. If it's super bullish, maybe it holds a little bit above that, but that's what I'd want to see hold. Or if it just wants to go sideways here a little bit, maybe wick down, just kind of go sideways and build for another move up. That would be nice too. I don't know how much the bookmap cost. I really don't. I want to say it's like $200 or something like that a month. Full street trades from 9:30 to 10. Yes. So you can literally go to any chart that you want. Here, I'll go to SPY. I'm going to turn my indicators off. So here's SPY. And I can go to this morning. Here's 9:30. So this is the first candle of the market. So it's one of these two. So close enough. And then I can go and say, okay, where's the low of the market? So this candle opened at 10:15, closed at 10:30. So right there is the low. So I can literally draw it if I want to just draw it. I don't have to have an indicator, but I don't want to go in and draw it every morning. So just give me an indicator that draws it for me. I think there's some free ones out there. Yeah, there's all kinds of different packages of price points, all kinds of stuff. Depends how deep you want to get it. I'm going to try to have it here for you guys as much as possible. If you find it useful, probably go in, check it out for yourself or give it a try for a month or so. Like any new tool, like we've always talked about, even like Edgeful, if you try to use Edgeful, don't try to use something for a week and think you're going to figure out how to use a tool in a week. Do we need a code for the discount? I still haven't got an answer. I was just double checking here. They're still trying to get all the back end set up because like I said, I woke up super early. The bookmap representative that I met with the other day, I had to wake up at 6 a.m. in the morning to go to get on a meeting with her because she's like in Europe. So I woke up super early one morning to come jump on a meeting, get bookmap for the stream. Well, my ADHD loves watching bookmap. And look at how we did the retrace to where you typically retrace right here. Here, hide drawings. Right here, this is the 25% mark. And look, we went multiple green candles in a row. And we're getting a little pullback here right on that target. Doesn't mean it has to be a rejection point, but it is a target point. So even if this isn't a rejection to come down, this is a, hey, let's take some profit point here. At this point, I'd rather see a red candle or so to kind of reset this. Pulled back to the half back of the day. EMA 9's trying to catch up. You haven't even touched this EMA 9 in an hour. You do have a 5-minute kind of sell signal up here, but the 25% retracement of the IB is based on today's IB. So like you can measure this out pretty easily. So here, look, if you drew this yourself, what you could do is you could take your what's it called? Your measuring tool here. And if you measure this out, it gives you this right here. You can tell is the exact midpoint. And you could take a line and go right here and say, okay, here's the midpoint of the IB, and draw that. And then you could go from the midpoint to the low, and you can see right here. So obviously half of the range, and then half of the half is 25%. Right there. Right there. So it can all be done manually. You're probably better off just going and finding a free indicator or telling AI to build one for you if you don't want to. But yeah. Here's the ES. ES is a huge, and ES always looks a little bit different than NQ because it's not as volatile. You can see there's a bunch of orders right above us here. And look at all these bubbles, how big these green bubbles are. Buy volume, buy volume, buy volume, buy volume, buy volume. So yeah, super cool tool. I wanted to go get it for us here on the stream to just bring you guys as much value as I possibly can. Hopefully it's helpful. And then of course, if it's something that you see and you like and you think that you find an edge around it, go check it out, get it for yourself. This is really interesting. And like right now we're still in consolidation. Right now we don't have a whole lot of things going on. But what gets really interesting is once you have like, I can't tell you how many times like FOMC day or even CPI like in the morning, stuff like that. If you go look at the book map, you'll see nothing in the middle, and then you'll see huge orders like way outside of the range. So you know that somebody is interested in buying at a certain point, if that makes sense. In Q trapping both sides makes no sense. Who are they trapping?
Fulfilled.
Look at this daily on SPY. Tell me this doesn't look bullish. In Q, what's being trapped here? That's my question. Tell me what's being trapped. This is just price compression. Daily squeeze is starting to set up. I mean, look at QQQ. It's just price compression. I mean, like here, look at this. High, low, high, low, high, low, high, low. I mean, it's literally just compressing. This is how ranges work. They do this and then they get smaller. If you went back 4 weeks ago, 5 weeks ago, maybe 3 weeks ago, I was kind of trying to illustrate this is what I expected on the daily chart. You know, big swings that start to level at water, finding its level. Throw a big rock in a pond and watch the different waves and watch how they just get smaller, smaller, smaller. Isn't knowing whether the resting order, a buy or sell order, a big deal? It's not a big deal. All you know is somebody's executing a big order at a level. And that's very useful information if you use it in the right way. So either somebody is looking to open a new position or trim a new position. Either way, somebody's buying or selling. It just tells you that there is interest in that level and that level can be, and if that level lines up with one or two other things you have, you know it's worth either getting out of your position or possibly entering a position if you've been waiting on an area to enter a position for reversal. So I would say the buying or selling is kind of irrelevant. Now, after it happens, it tries to tell you if it was a buy or sell based on like ask side, bid side type of stuff. But the I think it's irrelevant for me in most cases. I just want to know where are people, especially big orders, where are people getting involved in the market? And then I'm going to put that in context with other pieces. My shampoo is real. I need to shave my head again, actually. I kind of like the shaved head. It's way cooler. When I was Jordy's age, I had as much hair as he does or more. Yeah, exactly. The WAPA, you're 100% right. There's two sides to every trade. So if somebody's selling 1,000 lots or 100 lots or 10 lots, you're selling them to somebody. Somebody's buying them at the same time. So that's basically, that's a good way to put it. It's kind of why I think it's irrelevant. Jordy's got to make a video of himself wearing his suit at the airport. Yes, I agree. He does. That would be classic. 30 minutes till World Cup. Yes, I can't wait. I'm actually glad you said that. I need to go grab the tablet for my son and plug it in. I have to grab a snack here because there's no new trade for me. I don't know that you want to try to short this either. Maybe at the golden retrace 755, which is also 30-minute orb low, opening range low. Maybe. This is pretty daggum trendy, though. And there's a little stick on oil. Look at gold. I mean, something's got to give at some point. Look at VIX is just off a cliff today. VIX, lower high, lowers high, lower high, lower high. Pretty big internal spike down just a few minutes ago on the NYSE, but I mean on the NASDAQ. The NYSE is still super strong though. Nvidia full on V shape. Apple still at the highs. Google almost just hit a new high. Microsoft still in this upper quadrant. That was good work right there, quadrant. Amazon just consolidating. Meta, fine. Well above IB high. Broadcom. SMH trying to get to yesterday's lows. Software with a little pop over the last 30 minutes. I saw some quotes from Trump earlier. I don't know where he was speaking. I think it was maybe to reporters or something. Yeah, he's speaking to reporters. That's a new headline right there. Asked if he'd give Iran a deadline before bombing. I don't like giving deadlines. Yes, he does. KC wants y'all to bring him up. He's not even showing up for me. Now he says he's here.
Well, it's about damn time.
Dude, I looked like
I took
3
a-
times right there.
Yeah, I took a $750 tag on that short.
I had to send in reinforcements.
But that was how many points ago? Oh my God! Thank God I got out of that. $560, $660. It was 120 points ago. Oh my God!
SPY's going to see a new high of day. You guys
I had
ready for
several
this?
chances at break even too. I just couldn't fucking help myself. SPY is just unbelievable. You know what?
Yeah, I hear you, Frank. It was one of those where like,
But
I'm glad I wasn't
saw
in it because I would have fought it.
developing, You know, and it's like, all right, if it's here, if it's not here, it's not ever.
Yeah.
And that was at like 9:20, 9:30, 6:20, 6:30.
Well, if I had, I was looking at it and I was like, well, I have there's too strong a momentum on this, and there's too strong of statistics telling me we're going to come back into the middle.
The fucking candle was green. Yeah, it was one of those days. We hadn't had one of those in a while.
It was just V-shaping up.
But I did have the 0.714 QQQ calls that made up for that bullshit. And some.
Bought more NVIDIA calls today for a swing. Let's pump it up.
Well,
Coin
you
is
find out, I mean, tonight, Taiwan semi.
coin vaults out 172.50. I like it. Daily looks good. I hate trading this name. Last time I traded, though, we caught a decent move on it. So maybe we can do it again. Let's do it again. see what we got. Let's go check some flow. See if there's anything fun coming in. They're expensive as shit.
The U.S. has explored the possibility of an air assault on Cuba. There you go.
There's a nice little short scout at VWAP. I'm probably closing these accounts for the day.
Oh, I'm getting ready for this World Cup game. There's some selling hitting right here.
Coin's already going. I wouldn't mind a rejection right up here on the hourly and a pullback. But coin could go. Yeah, I'm seeing 172 increasing right now, 175 as well. $180 increasing up a little bit. It's breaking out right now. It's just, do I chase the breakout and hope for continuation and no pullbacks, or do I wait for the pullback?
There's the first touch of the 9. Back test of halfback. VWAP on NQ is 726. On ES, it's 7604. On QQQ, 717. You know, where is that? 716.26 by 753.33.
It's almost a 50-point rejection there at VWAP. If it breaks here, you might get lucky for another flush down to like 660. Freaking coin.
This looks like it's going to shoot down to 660s. Mm-hmm.
What a biblical, what a biblical rebound, Lord of Wall Street. I launched 20 contracts by mistake from the bottom and got scared because the bounce looked weak. Missed out on 8K profit. Is what it is, bro. They say men used to go to war, and the key word is used to there, because you don't know the mental toll it takes on a man to be 20 accounts deep at market open, looking for next pan. Israel is real. Yeah, I ran out of beer and the struggle is real.
Here we go, about 10 points away from that 660. Right up near VWAP. And 21's about to hit.
21.
There it is. 660.
21.
Do I long it now? Do I flip it?
That is the exact thought I just had.
Thinking about it.
I'd rather see 640.
Minute evening star. Mm-hmm. Could retest previous day high on SPY, 753.34. Q's also had a 15-minute evening star. You would want it to bounce here to invalidate. This is backtesting your 15-minute VWAP in 21. Daily level 716.35. Could see a little bounce on a 5-minute. And then the 15-minute still play a downside, but you do have a 15-minute evening star. I wouldn't mind scalping it long right here. 660. Down to like 660, 640 area.
I'd like to see a wick down, IB low, hold. And then I would like it much better.
Oh!
What happened?
Oh!
Oh, like that wick down right there.
Oh my God, SPY went straight to previous day high. That was quick.
Was that a headline?
I don't know. I kind of want to long it though. But I'm scared. I saw that shit flash before my eyes.
I was like just about to throw my orders on, and then I had to do that.
Ooh, that was quick wiki. Recent U.S. strikes on Iran are strengthening options for a potential U.S. escalation.
Potential U.S. escalation is what I'm hearing. 3 U.S. officials, recent U.S. strikes on Iran are strengthening options for potential U.S. escalation. We're about to sing God Save the Queen. I mean, I'm not going to sing it. I'm not singing that BS, but I'm sorry. God Save the King is the current version. My bad. This is an interesting headline, though. 3 U.S. officials, recent U.S. strikes on Iran are strengthening options for potential U.S. escalation. What is that like? How does striking them strengthen your options? That sounds like it doesn't even make sense. That headline doesn't even make sense. Well, Lord of Wall Street, I mean, have you noticed that's kind of what I've been doing overall, like in general? Like, I'll taking a short here or there, but mostly I'm just trying to buy dips for trade, just for trades, right? Just for bounces and trades. But the thought process, like the rationale is price is in consolidation. It's just what it is. It's just price is in consolidation. I don't know if this if they really just like step in here or not. You want to try it light right here, Casey? Or do you want to wait?
I mean, I kind of like it for a long right here.
Okay, well, say less.
Just don't like that 15-minute.
Yeah, no, that's the one thing I'm like, ugh.
I think your 15 can take SPY a little bit lower under 753. Maybe look for a sweep down there. Closer to underneath 715 on QQQ. Getting down closer to 714.34. I think that would be a good higher low snipe area for a long, letting this 15-minute play out for the evening star first. There she goes.
All right, I'm starting longs right here.
Your 15-minute 21 on SPY. Previous day high back test on SPY as well.
Yeah.
Q's is still
low.
lower, but oh. Shit.
I like longing it from here down to 595, risking about 570s. Oh. Shout out to Shakira. She's still crushing it, huh? She looks like a clone at this point. You mean shorting it down to 9? No, I'm not shorting it. I am getting long between here and there. Oh, like I just got another fill at 607. God save the king. Nuclear war? What nuclear war? When this thing bounces back to 680s right here. See how crazy work it is. I have a 610 average with like almost 2/3 of a position.
Just in case we knife down for whatever reason, I put ads in starting at 570 to 550 to go start a long.
I don't love that the book map hasn't adjusted above us yet. There we go. No. Really? We're gonna hold right on this whole fib here? Come on, do something. Boy, big game here, boys. Big game. God, 99, Brent? Oh, let me see what it is here.
Sell it down. Come on. Let me get long.
There we go. There we go.
15-minute playing out, baby. Sell it down. All right, so the NVIDIA calls for profit. Nice. Nice work. Yeah, nice little move today off that low. Just back up to 210 to 11.
It's 77 at my house right now, according to this. Oh, I got the rest of my fills. Oh, did I bottom tick this? Almost. I filled at 96. My average is at 603. Yeah, I worked it down to 603.5. Arranca! All right, run it up.
NVIDIA looking like a flag still, chilling, consolidating. IWM is selling.
IWM is There we go.
NVIDIA. What you want to do? Act a fool. Up in here. Up in here.
Who said it was crazy work?
Nice bounce on SPY, previous day high retest. NVIDIA, yes, yes. Come on, baby. Busted. Busted. Oh, that's a stick. Oh my gosh. What is she doing? I'll tell you what she's doing. She's freaking, she about made me trim. Nah, it needs to go higher. It needs to go higher than this. But it's not bad. Calls are almost at 400. Bro, if they rip Qs off 600, I'm gonna be so mad. I just wanted like 575. I want spine Qs to reject here, but I want NVIDIA to keep going. Oh my gosh. Yes, NVIDIA. Oh. Shawty's popping. Good Lord.
What's up, chat? What's up, chat? Everybody always talks so much. Everybody always talks so much.
Alert. There you go. Bang.
Can't believe. Why would you go long here? You're under the EMAs. Why would you go long here? That's crazy work. Rug it. I've already got a trim for over 50 points.
All right, sent.
How did you know it was going to bounce there? I don't know. But I already got 50 points and I've locked it in. And if it hangs in there, it hangs in there. An SPX trade before end of day? I don't know. It's crazy.
Trim out some of the videos up here.
Hey, Rooster, what does this mean? Price is below my EMA, so I'll go long now. I mean, I'm not an EMA trader, but...
If EMP was only an EMA trader, I'd agree with you, but he's using so many points of confluence. That's not just EMAs. But you're right. If you're an EMA trader, yeah, you shouldn't be looking for longs under EMAs. But EMP is
the
not.
Hell is an EMA trader?
I mean, your guy that plays every 921 EMA cross. I mean, I would consider that an EMA trader.
I'm gonna take a safety trim here on the video on these calls at 410.
I just love reading the chat. Like, it just cracks me up. Like,
you could be entering the most obvious free position ever, and it doesn't matter how good it looks, how bad it looks. People will say everything against it. It's just the way it is.
if y'all went long, thanks for the dough. Okay. What kind of... What?
What you don't understand is EMP is already trimmed and this stops at break even. He's like...
Filled at 415.
If it rolls over, he's good.
Do you have a cousin named Rooster?
Just safety trimming on that strength right there. Let's go. Who took these NVIDIA calls, baby? Look at that stick. Just give me a new high of day before market closes.
I'll be back in 7 minutes. In 7 minutes, it
So
could be in
this is-
profit for you, but he'll be already out. That's the difference between like quick scalps and like full day trades. Emp can win and you can win here. Like you both can be right.
Yeah.
You know the amount of times I'm in a position and Emp is like, I'm going long here. And I'm like, what the fuck? Absolutely not. Absolutely not. No chance.
Dude, it
And you
happens
know
to me
what?
with Maple all the time too.
You know what'll happen? Emp will get his scalp long. He'll take profit. I'll be still short for the higher time frame move. I'll catch my move. We both win. The amount of participants in a market, all participating in different styles of trading, you have to account for it and just play your plan. Don't concern yourself with everybody else's shit. More red. I hope it goes for you, brother. Hope it goes for you. Maple is gnarly with it. So high frequency. I love to listen.
Dude, I hate when I'm working into a position and he's like going against me because I'm like,
I know.
that means I'm gonna have to, you know, it means it's probably gonna shoot down a little bit further.
Yeah,
than I
because
want it
even
to.
if he's wrong, you're gonna have to withstand that stress of like, you know, his entry and like him getting it right for a second or whatever. It's just,
Dude, it really used to get on my nerves with Rizzo too, because with Rizzo I used to, like, literally, I would short like 3 times within his long. Okay. Conejito de chocolate? Chocolate bunny? Where are they?
I'm honestly,
What are you
solid
eating?
with the chat. I'm more with
An
you
apple?
in the bigger time frame. We just tapped into an hourly bearish gap. We're delivering from that. Not getting any strong closures over it on the hourly. I mean, I'm not super gung-ho, like bullish here. But time of day also plays into why I'm like not actively taking any positions based off my thoughts, you know.
Ooh, volatility.
I would say if we get over 755 on NQ though, the bears are losing it. Like the bears have this clear spot to hold on the hourly gap. If they're letting it get through 755, 75, it looks to me like bulls would be taking control back over a little bit through that. So
Look at that
that's
volume.
what I'm watching.
Look at your 1 minute.
Lower.
Oh, volatility.
Volatility.
Something's hitting.
at the same time of expecting lower, you got to realize the time of day. And it's like, okay, it's 12:12. We're in power hour. We've made some big moves today. We ripped 400 points up from the low made. Wait, was that? No. Sorry, that was from yesterday. Where are we at? Wednesday. We ripped up on CPI, and then what we tanked. How many points was that tank? 580 points. That's not directly from market open, but from that like most recent high in pre-market. I don't know. The way I look at this is I'm not expecting a whole lot into the end of day. I'd expect lower prices like into the nighttime just because of this gap, but going into the close, I would just think we stay in this range. $500 points down, then we've ripped back 300 from the low. Why even do a whole lot into the end of the day? That's the way I think about it. I'm not in longs personally. I don't really trade this hour, this time of day for the most part, unless it's just depends on the day, but it's almost always a never. I tried one long this morning. I came into the day pretty bullish. Market told me I was wrong, so I actively flipped my bias and caught 130 points to the downside.
U.S. is striking Iran again.
Uh-oh.
3 p.m. Eastern, U.S. forces launched operations for a second wave of strikes today against Iran.
Sheesh.
We're so back.
We're so back.
$3 p.m. Eastern. What time is that in Arabic?
In Arabic?
Yeah. Or Farsi.
Farsi. Say wallahi. Say wallahi.
I'm all out, Em.
Yeah?
Yeah, I bought 4 at 28. I bought 4 at 16. I bought 4 at 10. And then I bought 50 at the figure. And I sold everything at 50. 50 points. Boom.
I gotta tell you this, just looking at Bookmap, it's just very light here across the board.
Yeah. So like I'm like that
There's
was
not really.
I shut that account down. That was like a hit and run. So
Wait, this game is crazy.
Trade my personal account. I gotta make some money back here. Down a little. It's been a good day though. Good day. $18 days till our big venture in New York.
Yep, I was looking. My flight is in 16 days.
16. I hope they got a good restaurant because I'm a foodie. You know that.
Yeah, I don't know where we're gonna eat Sunday night.
What time do I fly out?
What day are you getting there, Casey? Sunday?
Yeah, Sunday. Let me see. I think I'm going to leave. I think I'm going to fly out of here at like 11. I should land there at like 1:30. Let me go check.
I land 7 o'clock on Saturday night.
Let me go check. I forgot.
Wow, Casey's got an easy short flight.
Here we go.
I will say mine's much better than going from California. least I'm
Yeah,
just going to Puerto Rico.
Trump making comments again somewhere.
Uh-oh.
Yep. What
He
is it?
said lower interest rates.
August 2nd. My flight, Jordan, I leave at 11:25. I'm going to land at 1:12.
11:25. That's like an hour and a half.
Yeah, basically like an hour and 40 minutes flight.
Dude, I'll leave it at 5 a.m. my time, and I'm landing at 7 p.m. New York time. It's 12-hour total.
Ah, fuck that.
But I have a decent layover in
Are
like
you
flight
coming
time.
in
I think it's like 5 and a half.
Saturday night late?
Yeah, 7 o'clock Saturday night.
What day are you leaving? Wednesday?
Wednesday morning. I'm trying to pull up
Same.
my.
Yeah, I'm leaving Wednesday morning. My flight's at 8:50 in the morning.
What airports are you flying out of?
I'm flying into LGA.
Yeah, same. I'm flying into LGA and I fly out of
Kennedy?
EWR.
Newark.
Yeah. Same thing I did last time. Last time I flew into LaGuardia and flew out of Newark.
Microsoft with a dollar candle upside, downside. What? Oh, hi. Yeah. Just a little poppy. Nothing crazy.
My flight's at 6 a.m. leaving from Newark. That's gonna be fun.
I still don't have a real ID, so I had to do some other TSA bullshit.
How long is my flight? 2-hour flight from here to Houston. Oh, whoa.
More headlines just dropped.
Yeah, that hourly gap is starting to really deliver. Makes sense.
And there's my stop out. Slight green on the trade. A little bit of green on the trade, I guess. Three hours, 44 minutes from Houston to LaGuardia.
Still want to see if we can get down to that 570, 550 area.
Watch the bounce right here again.
I know. I want it to break this spot just a little bit.
I think I just want to just put a couple more back on here. Light.
Oh, what time is Trump going live? Yeah, I had to pay like $45 to TSA for some like extra screening shit just in case. I think I can go get my real ID right now. The question is, can I get an appointment and get it done before I fly out? What questions do you think they're going to ask me?
For what? For the real ID?
No, because I don't have one. So TSA is going to do some like extra screening shit.
Why can't you get the real ID? I never understood that.
You can't fly without unless you have a passport.
No, but why can't like whenever I got the real ID, I literally just took like a water bill, my birth certificate, and my gas bill.
So that's what I did. So I showed up there with my birth certificate and they told me no. They said, we don't want your original birth certificate. We want a certified copy from the clerk of courts from where you were born at. I'm like, I literally have the original one from 30 fucking years ago right here, and you're telling me this doesn't work? And they were like, that's correct. I was like, okay.
Dude, I went up there with the deed to my house, and like in one spot it said drive, and in a different spot it didn't say drive after the street name. And they were like, oh no, these don't match. And I was like, I literally prepared,
I don't have a passport,
filed this
guys.
deed. I'm the one that wrote drive on this document and filed it and got it back from the courthouse because I work for the title company. You cannot legally reject this document. And I made them call the supervisor's office in Little Rock and whipped them into shape a little bit.
I probably should have done that because I drove 3 hours to get to that appointment and back.
I just told him, I was like, by law, you have to accept this. There's no doubt that this document is real. You have no authority to tell me that this document is not real because you're not familiar with it. That's your fault that you didn't do the training.
Yeah,
So,
I brought my social, 2 bills, and birth certificate, and they were like, "Yep, you're all good except for your birth certificate." They're like, "We don't want your original one." So I paid $45 online to TSA, and it's valid for the day that I fly.
Well, they can do like a. I think you can get like your own. Like if you did like global entry or something, it's kind of the same thing. It's like I have global entry. I have obviously I have a passport. My driver's license is about to expire in a couple of weeks.
Ooh, Eva. Hi, Eva. I'm definitely going to look into that.
Yeah, the global entry with pre-checks, great. Okay, so you haven't flown that much, have you?
No.
Dude, I don't know how people fly without pre-check. Which at some airports, the pre-check line is like just as long as regular.
I don't even know what that is.
Pre-check, it's like you basically they do like a little background check on you, and if you have that, then you have pre-check, and it's like the faster line. You don't have to take your shoes off or your jacket off. You don't take the laptop out of your bag.
Well, shit. How do you do that? You got to pay extra?
Yeah, you just go sign up with it with TSA. Like for mine with global entry, I had to do an interview one time, and then it was good for 5 years, and I just renewed it the other day. Both of my boys have the same thing, global entry. So like for me, like internationally, it makes even more sense for people like Eva too. So like if when I land in the US from outside the country, I don't like go stand in line for immigration for an hour. I just go up to the little kiosk that takes a picture of my face and then walk in, go grab my bags, go to the United Lounge, start drinking beer. Trump says Iran wants to meet.
Again, after what did you do? Just had to go drop a couple bombs on them, and they're like, all right, we'll talk again.
So what if he's like bombing them while he's talking? Like
he just makes a phone call real quick. Like the talk's not going well, so he just makes a phone call.
What if he's like, can you imagine he's like at the podium and he just looks down and he's like, oh, by the way, I just got long again, a little bit smaller position size here. He like looks down and he's like, what time is it? Oh, 3:27. There's bombs sitting right now in the Strait of Hormuz. Iran, my phone's waiting on your call. All right, same spot. They took my stop out by 4 points. Where was IB low again? I probably should. I want 680. I want 718. And if we get real crazy, we'll go to 755.
Gosh, dude, same freaking bounce.
Yep. The nice thing about the global entry is it comes with the pre-check. And like Eva was saying in the chat, my credit card paid for it. The clear looks pretty good too, but I feel like that, like some airports don't even have it. The ones like the places I've seen it, there's only like one line that has it. Like when I get to Houston, normally I see there's like one spot for clear and nobody knows how to use it, and that takes like longer than what the pre-check line takes.
Or like, yeah, like it's definitely nice at certain times, but most of the time I'm flying so early that they don't even have that shit open yet. And I'm like, bro, what?
I get frustrated like at the smaller airports. I'll go in there and like it'll be like a Tuesday and you'll go to pre-check and the pre-check line's just as long as the regular line. You're like,
yeah, clear definitely just depends on where you're at.
Am I doing a pleasure trip to NYC? No, business on the Amex Business Gold Card.
I've seen that Nexus thing too.
Oh yeah.
The Nexus seems pretty cool. But see, that's the thing with global entry. You have an ID card. You also have pre-check included. I think it's like $100. You know, it's good for like 5 years, and a bunch of your airlines like give it back to you. If you have a US visa, you can get global entry, by the way. Or if you're maybe if you're a resident. You guys ready for this thing to rip? Look at NQ. Rip it, Lotto. Rip it, baby. Rip it. What's needed for global entry? It was super easy. You literally just go on the website. I think it's TSA. Just type in global entry. Go find the website. Or it's US Customs, USCIS maybe. And you go on there, you fill out an application form, and then they move you to pre-approval pretty quickly. It runs like a little background check on you. And then you have to go do an interview. But the easiest thing is like next time if you fly internationally, you fly through big airports. So like whenever I landed at Houston, whenever I came through, I could just go over and do the interview while I was going through customs. It took like 5 minutes. They fingerprint you and then you're done. I did it for me. I did it. My wife did it. Both of my sons have done it. $60-point gain here. I want 80. But it's super simple. The only thing like you have to do is like figure out where you can do the little interview thing, and then once you get it, it's good for 5 years. It gives you pre-check, so like even if you're flying domestically, whatever, it's perfect. Here we go. Break over. Break and go. Don't you know? Pump it up.
I mean, can we just take a minute to show that Emp just did the exact same thing twice in a row for like, I don't know, fucking 70 points from that low to this high?
Yeah.
Like, even if it rejects right here, it like doesn't matter. It's just the fact that just waiting for those spots to hit.
Yeah, and I didn't try to like add to it while it was up there.
Yeah.
You know, on the little pullback.
Break this, you might go back up to VWAP. Back to your
so I have a
730s, 750s.
660, no, 687. I have another trim. I have a 718 VWAP trim. I have a golden retrace 755, 754 trim, which is also 30-minute or below in case you go all the way up there.
Big volume coming in. Big volume.
And Trump's still talking, so we're still chopping.
Oh my God, look at the 1 minute volume coming in. I mean, 5-minute candle shows it too, but oh my god.
There's a 100-lot chasing. Trump is leaning towards expanding military operations in Iran. Wall Street Journal. Trump is looking to expand military operations. That's not going to help. Buy it up. Buy it up. I don't know, I kind of really much rather pay attention to the soccer game because I've missed the first half hour already. Oof.
All right. I think I am about to head out for the day.
They don't know what they want to do here on the book map. This thing's all over the place.
Waiting for this dude named Ryan with a beard to show up to my house and fix my microwave and oven, but he's not here yet.
Oh. You should have hired a Jorge.
Dude.
Jorge would have been there.
Look,
Jorge would have been there before you woke up.
Look, this dude, he's supposed to be showing up here. Look, his name's Ryan. He looks just like you.
Well, hold on.
Look at this guy. Look, you look the exact. Look, it's basically 2 imps right here on the live stream. Look at this. Look, I bet he's bald underneath that hat. I'm gonna make him take it off when he shows up. And I'm gonna take a picture with him and post it on X. And I'm gonna tell everyone that I met you today.
There you go. You should.
Dude, it said he was supposed to be here between 2:15 and 4:15, and I skipped the pool so I can stay here and let this dude in the house to fix
this game is hot right now.
I'd rather be sitting at the pool watching the World Cup than watch the charts right here.
Yeah. I don't care about this trade anymore. I just want to see I just want to watch this game.
Yeah, I'm gonna go ahead and lock the futures accounts. I'm already positioned for a swing into tomorrow. Did I ever get stopped out of my pound tiers after this morning? Are they still green? chip.
I've had a pretty good day, honestly, trading.
Oh, I'm still in Palantir. I'm up 32% right now. Nice.
Any swing longs, Casey? It's not.
I mean, on indices or just in general?
In general, there's probably a couple individual names that you've got.
So I took Palantir calls yesterday for a swing into today. 60%. I trimmed. I'm up 30%, still in the swing, not letting it go red. I told you right when I came on stream that I'm swinging NVIDIA calls. NVIDIA was at 210 at the time. We got that pop up, made a safety trim as well. I'm still swinging those calls. So as of right now, my main focus is NVIDIA, but I'm still in the Palantirs from yesterday as well. So it's kind of, I like coin. I hate trading coin, but I think coin has opportunity for maybe a little bit higher, but I'm not going to jump on that one right now. And then before I go, let's look at some flow, Caterpillar. Some calls on ticker CAT, Caterpillar coming in.
Ooh.
Nice 4-hour bounce off 900.
It's a Catalina wine mixer.
Dude, and look at the 5-minute intraday. Look at this nice little cup and handle or inverse head and shoulders curling up after that sweep of 900. Some calls came in. NVIDIA calls keep coming in, different strikes, different expirations. Cat's a slow mover for a swing. NBIS calls coming in, 210s, July 24th, 2026. It is getting a stick right now, ripping on some volume to high of day.
Look, they're moving up, moving up. Here we go, here we go.
Ooh, daily chart closing decent. Weekly 21 bounce, NBIS. Okay. Maybe we'll add on another. Let's see. Let's go look at the premiums on this one. Oh my God, it's stupid expensive. What the shit? Look at the IV too.
Boom. Come on. Come on. Seep.
Bro, who's trading NBIS? Oh my God. I mean, what do you like 250 lotto calls for next week? Just for a move back up to like 215. Nice bounce.
You guys ready for this?
Flying cues. NVIDIA, come on, baby. Don't you know? Pump it up. You got to pump it. I guess I might as well stay. MOC is in 9 minutes. I already missed the pool today. I'm already
80-point gain, Trum.
Here you go, baby. Yes, Docu is still in. Yep. Still in the squeeze. Sent that one a while ago. Yeah, I'm debating on that coin. trading coin. But monthly support. Weekly's trying to catch a bounce down there. Daily. 3 green days in a row back over EMAs. Could be an inverse head and shoulders with a green hammer right now. Just broke a trend line. It's like anything else, I'd be like already in calls, but because it's coin, I don't know. It's in multiple squeezes on multiple time frames.
Rip it.
I mean,
Rip it, Lotto. Rip it, baby. Rip it. I spit a racial slur. This shit a horror flick, but a black guy doesn't die in this movie. Well, Trump is just blabbing on right now about nothing. What does Bookmap look like, guys? Ooh.
Like someone get his ass another steroid.
Blah, boo, blah, 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 blah.
I ain't hear a word you say.
Looking like a cyclone hit you. Tank top screaming.
Lotto, I don't fit you. I mean, I ain't gonna lie. The coin 180s for next week, I think could be a fun little lotto swing. I think the NVIS is 250s could be a fun little lotto swing. NVIS is at 415, coins are at 350.
Oh, this game is really good. It's like sloppy good.
He says sloppy good. Ryan's here. BRB.
I did move my stop up in profit because we're getting too close to the end of the day. All right, halftime, right before MOC. Lord of Wall Street, I make the most money in the markets when we are range bound. Here comes the MOC in 40 seconds. $14, $13. $5, $4, $3. Come on, pump it. NVIDIA, huge buy side. 4 million. Yeah, NVIDIA 4 million. That's the only big one I see. Cisco, a little buy. Apple, buy.
It's that time of day to go over to the trash can on my trading view and hit remove all drawings. Such a beautiful time of day. Such a phenomenal time of day.
Oh, we got back to VWAP. I was long 16 in my personal account.
Oh my
$700. That's what I was down. Oh,
Let's
yeah.
go.
So, fucking, that was stupid gamble. But I figured they'd beat it buy side. Where's NVIDIA going up? Shit.
I don't know. I've got World Cup on too many screens.
Is it 0-0?
0-0 halftime. Come on, get up there to 700.
Trim NVIDIA. Previous day high hit.
Does this say 40? Is that a huge buy side?
Yeah. 2.4 billion.
2.4 billion? 2.1 on NASDAQ?
Mm-hmm.
Almost $1 billion on Mag 7?
Big boy buy side. I will not be looking to trade London session in the middle of the night because we don't have any Fed speakers right at open tomorrow. So, and we have 8:30 high impact news.
Tesla looks like nothing. Absolutely nothing. There's support here at 390, 393. There's resistance all across the. I mean, Tesla's going nowhere. Look at these. Look at this weekly. It's just going nowhere right now. It's held this 391, 392 like 1, 2, 3, 4, 5, 6 times. But it's got lower highs coming into it over and over and over.
Could always be market makers hedging. You don't really know.
Oh no, Solid, you bought a bunch of SPCX? You should have bought the 2x short with us, because I trimmed at 125% today.
That was banger. Dude, we tried to warn everybody. Tried our best. Not something you want to buy off rip. Unless you're just like, you could care less and about getting any better prices and it's really for the long haul, then I mean, buying IPO is not horrible given the past and what we think this company is going to be in the future, but it's more of an active trader that can, you know, use our brains on the charts a little more than the average person. Wasn't super enticing to buy right away.
He said, I know everyone warned.
It's okay, right? I mean, that's a long-term hold. I'm bullish on it long-term. It's just like, you know, those first years of IPOs are usually rough. I'm seeing if we can get some prices under $100 and see if we can get it for a steal, you know, but it's not like you own a shit company at IPO. You own a good company at IPO. It's just, you know, you're at the very start of it. So as long as you're in it for the long haul, I don't see an issue with it.
There we go. Run it up. Run it up. Run it up.
Oh.
Run it up. Hit me the trim at 700. Boom. There it is. There's a 100-point gain.
Yeah, there you go.
Stops moved up. I'm making $500 here at the end of the day, no matter what. Come on, give me VWAP. You're going to sit on SPY puts for tomorrow? What about this chart told you that you want puts for tomorrow? I'm just curious. Not saying it's wrong. I'm just curious. Like what you... Manipulators. Give me VWAP. I've got 2 left. 1 for VWAP and 1 if we just keep squeezing. Didn't everyone want 30,000 based on overnight? What? 30,000?
I did this morning. I did. I came into the day very bullish. I did. You can check the timestamps on my bias. I posted it this morning. I was very bullish, but this is one of those days where I come in with a bias. Market tells me I'm wrong. I flip my bias and I catch 130 points to the downside. Is what it is. Can't be married to a bias.
Yeah, I mean,
was looking for that full gap fill into 30,000, that area. Absolutely. Like I was looking for higher, but guess what? Market said, fuck you, Jordan. We're going down. I said, okay, I had my spots set where I'm wrong. Market runs through the areas telling me I'm wrong. Got to flip bias. Simple as that.
So, I mean, yeah, you moved up from overnight 2 nights ago into yesterday into overnight. Came back, you broke structure in a way, the trend structure broke, and then this morning at the open, it quickly told you that it was taking out all of London and Asia, and then it popped back up, rejected immediately at previous day's high, and closed this candle. That was a clear signal you were coming down here.
Oh no, you're good, JP. Honestly, it's good because I've had a lot of people over like past 2 days so butthurt about my bias when yesterday it was fucking right.
Hold on, let me see what Solid's seeing here. I'm using a daily chart drawing a line from 602 top to this week. So if you draw this trend line here, you've broken and gotten above it, based above it. If you draw it here, you broke it and based on it today. If you draw it here, this isn't a trend line. You said this week's highs. There's no, there's no trend line here.
You know what I'm still eyeing? Monthly chart. June lows. It really just looks like daily. I mean, it doesn't look like it is. It's fact. I mean, we're in daily consolidation, daily accumulation. We have previous month lows sitting below us. Monthly order flow. Everyone and their mother, if we were to break down right now to the range lows, they'd think it's a break of structure to the downside, right into monthly lows, accumulation, manipulate the lows, sweep it, distribute to all-time highs. That's what I see.
Oh, you couldn't give me VWAP, piece of shit.
The good old AMD. Accumulation, manipulation, distribution.
All right, I'm going to take one trim here, and then I'm going to put my full take profit down to VWAP. The WAP, 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 WAP.
But I wouldn't be bearish into June lows. I'd be pretty bullish into that area. We might trade into those monthly gaps a little further than you think, though. I might initially think like, oh, we just sweep that monthly low. We might have to trade into it for a few days, though, and then end up reclaiming out
There's
of it.
the VWAP. I'm out fully. 100 plus points. Sorry, Jordan.
Very good.
Just gonna look at this monthly chart.
It's a little cleaner on Qs, but it's the same thing. I mean, it's the same thing.
QQQ still got a gap to
Double
go
gapped
fill.
up.
We have a monthly gap to go up and fill.
I was actually
Jordan,
watching
are
the
you
monthly order flow below us.
Are you not like super excited for this?
Yeah, I mean, I'm happy for that. The problem is it's kind of mixed. Like you have that, but then right below us, we have monthly order flow to trade to that we've never traded to at June lows as well. And when you look at the daily and like, okay, we've been in consolidation. I think of it as a lot of people right now probably are either getting short or getting long in the middle of this range, right? And for the people that are getting long, their stops are likely at all these previous day lows or at that June low area, which is where I think we run to just to stop them out.
Oh God, now it's
bring it right back
now
up.
it runs. Damn it. Just went 15 points higher. It's gonna go to 750. Piece of shit. Well, I left a little bit on the table. Made $650 on that last trade.
Ooh, don't ignore the daily and weekly. Dangerous game to do.
I mean, this weekly. Look, if this was on a 5-minute chart, somebody'd be screaming bull flag at me. If this is, somebody would be screaming, just screaming, oh, you're not long on this bull flag? You put it on a weekly chart, now everybody wants to be bearish.
Agreed, but I will say I think it's more of a Tesla scenario where, not Tesla right now, but Tesla back in October 2025, where it's the same thing, Emp. It's the same thing. It's consolidation. This is a bull flag, but then they fake break structure to the downside to the bottom of the range and rip it to all-time highs. Maybe they don't need to do that. Maybe we just bull flag and rip up. I'm always open to that if it needs to happen, but I'd like to see that scare and rug of the lows first just to find buyers to go higher. But it's a coin flip at this point when you're looking at the daily. I mean, the shit can go either way, and I'm ready for either. care less which one it decides.
Last week, SPY closed the highest weekly close in its history. And people are like bearish. I just don't know. I just don't get it. Like where's the
Does look like a bull flag to me. Agreed.
an SPX, it's either you break the higher lows or you break the high.
That's where, yeah, I think
in a bull market
that gets broken.
Once again, people in a bull market, you should default to looking for bullish setups. Don't look for bear flags. Don't look for head and shoulders. Bull market, look for consolidation to level up. Every possible moving average is below you. And look at the 9. Just look at the 9. 1, 2. Actually, really count this day. So look at the 9 EMA right here. Let me just hide the drawings. This is the daily 9. So somebody tell me what's bearish about this. The trend is up. No matter how you look at this.
Agreed. And like, even if we wanted to fake out like range lows on NASDAQ, like that's still overall bullish for me. We might be able to trade down intraday and stuff on certain days, but
and look, anything can happen.
Looking
right?
to buy that.
It could go up, it could go low, it could go down. Either one could happen with the right catalyst. The chart's set up to go up. If it breaks the structure, then it's set up to go down. Right now, the structure's set up to go up until the structure's broken.
Mm-hmm.
It's a sell-off in a structured manner. Is it a sell-off or is it a consolidation?
It's not a sell-off.
Which part of this is
we
a
are
sell-off?
in accumulation. Study Wyckoff method.
Could be. I mean, this could be a Wyckoff distribution, but you'd have to break the structure first.
Well, no, it'd be accumulation, which we're in, manipulation of lows, which would be the drop to June lows to distribution to all-time highs. That's AMD. That's
well, this would be manipulation.
Yes, distribution up. Before that, where we chopped all through the wharf shit, before that was the accumulation. Before that moved down that you marked.
Accumulation usually happens at the bottom, though, not at the top in Wyckoff. This is Wyckoff. This is distribution.
It's a little different.
No, it's the indices are obviously set up a little bit different than like stocks are, but like Microsoft, this was the distribution. I don't know. The other thing is the most important stocks, the heaviest weighted stocks. Look at Mag 7 ETF. What is Mag 7's doing? While Lord of Wall Street's looking at it saying we have lower highs, this is scheduled sell-off. Is it? Because what I'm sitting here looking at is I'm looking at the Mag 7s that haven't gone any, the other day you were complaining, you're saying Mag 7s haven't done anything year to date. Mag 7s are up, 15% in the last week and a half? What is this? 13% in 12 days? Well, where's all the flows? All the flows that were chasing other things, where are they going right now? Mag 7. Where else are they going? Banks. Just, 25% of the S&P? And then SMH. This is just profit taking. Yeah. All right, I'm going to watch this World Cup game.
Heard that. Bit. All right, crew. I think we're gonna wrap it up.
And look, really none of this matters until earnings, which just started. It's literally going to tell you if the market's going to reprice things higher or lower. But either way, great day. At least I had a great day.
Yes, sir. I made back my loss from this morning, which was good, plus profit. And I already had profits made from last night trading. So I'm not trading tonight, though. Not trading London session in the middle of the night. No reason to. We have no Fed speakers at open. We have high impact news tomorrow. I think trading's going to be phenomenal. So I'm going to sleep.
TSM will be out at like 1 a.m.
England scores first. Do we long Argentina? Buy dips on
I don't
good
know.
companies,
It's tough.
Where's the...
Are we still live? Just sitting here like catching up
We're
on all
on
the
here.
messages and stuff.
Don't look at that long-term
This is
portfolio.
so Lord of Wall Street. This is like a mental thing. Like, am I like putting a ton of money to work in the market right now? No. Am I taking swing trades long right now? No. I'm not. I have no reason to. But just because something is a long, whether it's a 5-minute chart or a daily chart, doesn't matter. Just because something is not a new long does not mean it's a short. Like, you can find opportunities obviously in between stuff. There can be like a certain setup from one day to the next and stuff, but in the big scope of things, just because something is not a new long, does not mean that it's a short. And same vice versa. Just because something is no longer a short does not mean that it's a good time to go long. Obviously, it's a little bit different because in a bull market, you have to lean, and general, the market going up 70% of the time, you have to lean. But when the market makes the move that it made for 2 months straight up, it doesn't mean like you just have to short. And especially at this point when we've been consolidating for 6 to 8 weeks, like we're really close to a point where this makes a a nice price compression move out of this area. But until it does, you don't until it does, you just keep playing the range. Now, if it gets to the top of the range, you want to short it back to the middle. Like, I understand that thesis. If it gets down to the lows, the bottom trend line, and you want to long it back to the middle, that makes sense. But like, it is tough. Like, and I've like struggled with this for a while too. Like, because I was like, wow, I don't want to trade any longs, and I was mostly trading shorts. But at the same time, I was like, there's not like a short trade here though, just because it's no longer a long. It's like sometimes you can get ran over, like in futures on a short term, open up and rip up 200 points. It doesn't mean like it's a short, but you're not going to long it up 200 points. If it runs up at the open 15, 30 minutes and it runs up 200 points, you're not going to long that. You need it to consolidate. And then after it consolidates, you need it to either break structure to the downside or start breaking out of the consolidation to the upside. But the market moves and then it rests and resets. That spring has to recoil. So I think we're going to end on that. I think that's a good spot. Appreciate Frank, Jordy, KC, Brady, everyone else that came through. Shout out to David coming through, dropping some knowledge on us. Code Wolf at your favorite prop firm, of course. Vest was supposed to come on today. Fullport Matt had something come up, so he didn't get to come hang out with us today. Shout out to Vest. Code Wolf over there, perpetual futures exchange with a prop firm if you want it. Pretty cool stuff. So shout out to that. Shout out to Bookmap. What a helpful tool that's been. Shout out to the Gex Flow. We looked at this all day long once we got back into goal.
England.
Oh shit, he holds that long. Wow, that was good.
Ooh, he was barely onside too. Nice goal, Gordon. All right, Argentina playing from behind the sticks again. We'll see. All right, stream. I'm shutting this down because I gotta watch this. This is gonna be a good second half.
We'll see you guys tomorrow.